Ray Dalio is fresh out of Harvard, the illustrious college that draws ambitious finance graduates from all over the world. And Dalio is nothing if not ambitious. Unlike most at Harvard, he comes from nothing. All he has is fire in his eyes and a dream. It's not long before he's working on Wall Street and rubbing shoulders with the most competitive Type A money-hungry bloodsuckers out there. And he's never felt more at home. Not only does he survive, young Dalio thrives. His raw talent to predict stock and commodity movements proves useful and incredibly lucrative. With each successful trade, his portfolio of clients grows, so does his confidence. But the more confident he becomes, the wilder he gets. While he gives a lecture at the California Food and Growers Convention, he pays a stripper to drop her cloak in front of the crowd. And when one night he goes out drinking with his company on Christmas Eve, 1974, tensions simmer between him and his boss, and they get into a heated, drunken argument. Who makes the better trades? Who has the faster car? Who has the hotter wow? Whatever they argued about, it ended with Dalio slugging his boss square in the face. Flash forward to today, Dalio has built the largest hedge fund in the world and is known as one of the greatest investors of all time. So how does Dalio go from bar brawler to manager of the largest hedge fund in existence? Why does Dalio go on to lead his hedge fund in the most radically transparent way imaginable? What is Dalio trying to teach us in his books and through his extensive online content creation? This is the legendary story of Ray Dalio. Raymond Thomas Dalio grows up in Long Island, New York.
Well, my dad was a jazz musician. He worked late at night, and my mom, loved me to bits. I was very fortunate in that I had a mother who loved me and a dad who had strong character and creativity.
At first glance, Ray's a normal kid. He likes to play baseball with his friends and he loathes school. In his opinion, it's a lot of memorizing and not a lot of understanding. He finds the content abstract, theory with no clear purpose. So from age 8, he sets out to forge his own path to success. The ambitious Dalio does whatever he can, mowing lawns, shoveling snow, and notably working as a golf caddy. As it turns out, this job will end up changing the course of his life forever. The US economy at the time is booming.
Post-war planners know that the United States has today an immense industrial establishment which, if still in operation at war's end, is capable of providing a peacetime level of employment and prosperity beyond anything America has yet experienced.
While most of the world is beginning to recover from World War II, the US comes out of the war relatively unscathed. With its factories intact, the country has never been more dominant, and the surging stock market reflects it. It's all anyone can talk about. Golf greens are well-known hideouts for Wall Street men. Dalio ends up caddying for many, and as they talk about the stock market, he listens carefully. With the cash he saved up from odd jobs, he starts his investing career at age 12.
I took my caddying money and I decided I would invest. I didn't know what I was doing. First stock I bought was a company which was the only company I ever heard of that was selling for less than $5 a share. That was my criteria, because I figured I could buy more shares and that meant if it went up I would make more money. Obviously stupid. But I got lucky. The first company I bought was a company that was about to go broke, but somebody acquired it and it tripled. And I thought this game is easy, so I got hooked.
After his first taste with success, Dalio's hooked. He keeps trading as the years go on. By high school, he already has investments to the tune of thousands of dollars. Out of school, Dalio decides to go to Long Island University. There, he watches as the Beatles go to India. Are they going to play a concert? No, they are there to study meditation from a yogi. Dalio, naturally curious, learns meditation too, and he's surprised by how much he likes it.
Get it? See the giant dragon?
Meditation has given me that kind of equanimity. So I look at things I might not want to happen, but I can approach them calmly and better. It helps you sort of go above yourself and your situation. So it's a big deal. It's been a big deal for me.
This teenage curiosity turns into a habit, one that he'll rely on for the rest of his life, especially when he has to navigate troubled waters, like a warrior stilling his breath as he prepares for war, and a war of Delio's own steadily approaches. Delio graduates with a Bachelor of Science but majors in finance, definitively charting the course of his career. He decides to get some experience and spend his summer as a clerk on the New York Stock Exchange. Although he's just a clerk, Delio's eyes widen as he enters the heart of Wall Street for the first time. It's a hustling, bustling place full of activity. Little does Delio know, he'll be witness to one of the biggest events of the century.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
Richard Nixon does the unthinkable. He takes America off the gold standard. Up to this point, each and every dollar could be converted for a certain amount of gold. Now, the dollar is backed by the same thing as Dogecoin, nothing. When Delio goes to work the next morning, he sees the fallout for himself. Wall Street is plunged into chaos. Delio expects a market crash, but instead the stock market soars. Now that the dollar isn't backed by anything, its value slumps. Inflation takes off, and everything from gold to stocks suddenly rises. Although Delio has never seen anything like this in his life, he learns that this has happened before. In fact, he takes the whole summer to study similar phenomena all throughout history. Over and over again, he notices that a currency devaluation ends the same way: inflation. Now the stock market's knee-jerk reaction seems painfully obvious to him. For the first time, Delio spots a pattern and realizes that the economic machine is really just an amalgamation of patterns.
Though the economy might seem complex, it works in a simple mechanical way. It's made up of a few simple parts and a lot of simple transactions that are repeated over and over again a zillion times.
If he could learn such patterns, understand them, he could predict how the economy would react to certain events. That could mean predicting the stock market, and that, my friends, means a lot of money. After the summer, he goes to Harvard Business School and gets himself an MBA. Then, he lands himself a job as a futures trader at Shearson, a long-standing New York investment banking and general financial advisory firm.
As respected advisors to the serious investor, we at Shearson American Express recommend you invest your time before you invest your money. Shearson American Express and the serious investor.
During this time, he mostly advises farmers, cattle ranchers about hedging risk using futures. You see, the price of grain, wheat, anything, it's always fluctuating. For a farmer, this is a constant risk in their business. If grain suddenly becomes expensive, their profits take a massive hit. Delio teaches them about futures, essentially a financial tool to lock in a price for these materials. No more fluctuation and no more nasty surprises. In the background, he's also honing his own skills at trading futures. Although the work he does is important, it doesn't take long before he finds himself at odds with the firm. Delio feels like the management structure is chafing him. There's constant friction, tensions simmer at Shearson, rising and rising until eventually...
Shut the f*** up!
Not long after, Delio finds himself without a job, unemployed and kicked to the curb. One can't help but imagine Delio regretting his decision. He had a steady job, an important one. He was doing what he loved. Maybe he wonders if things could have been different. Maybe he wonders if he should have played by the rules. And indeed, many young ambitious people have this thought from time to time. I too sometimes think, how would my career have turned out if I had taken other decisions at certain points in my life? For example, I was always very focused on a career in finance, but recently tech careers have been looking more and more attractive. That's why I was so happy to come across Course Careers and give you guys a little freebie. If you want to start a high-paying career in the technology industry but don't have previous experience or a degree, then Course Career is here to help. They are replacing college as the modern way people are starting careers, and it's so simple. All you do is go through an affordable online course where you learn everything required to actually do the job. Then they help you land a position by partnering with a wide range of tech companies who are hiring from them. Check out some of their stories of people like Kyle, who went from being a 37-year-old assembly line worker pressing buttons with no degree to making over 150k in a medical technology sales career, or Dila, who served duty in the military and didn't know what to do afterwards, to making over 100k as a cybersecurity tech sales rep, working fully remote. So great as a side venture too. Go to coursecareers.com, link is in the bio, to sign up for their free introduction course where you will learn exactly how you can start a high-paying technology career without a degree or previous experience. Even with Delio's explosive end at the company, there is an upside. Despite his momentary lapse of control, most of the client and network he'd built at Shearson surprisingly stay loyal and decide to stick with him over the firm. If you can make money, who cares who you punch? Traumatized by the rigid structure of corporate life, Delio decides to open his own company, Bridgewater Associates. It starts from humble beginnings.
Bridgewater Associates was a consulting firm when Ray Dalio founded it in his two-bedroom New York City apartment.
The firm starts off focusing on corporate financial advisory and corporate fund management, and it soon finds its feet when McDonald's signs on as a client of the firm. Now Dalio has spent years researching the various patterns and logic behind the economy. His clients call him regularly on his thoughts on this and that happening in the economy. It eventually bugs him so much, Dalio pens his thoughts on the market every day, the trends he sees in the global markets, opportunities, and so forth. People want his insights so badly, he sells a subscription to his insights, naming them the Daily Observations. It is looking good for Dalio and his young ventures of not only his subscription-based Daily Observations, but also his fund managing Bridgewater.
You see, when you put them together, they destroy.
Bridgewater is flourishing after adding McDonald's as a client, going on to advise more industry titans like Lane Processing, a dominant producer of chicken in the US, as well as pension fund giants World Bank and Eastman Kodak. His Daily Observations are also incredibly popular and boost Dalio's growing reputation in the financial world. Dalio's biggest strength is his ability to hedge risk for these companies, and in 1981, Dalio predicts a financial meltdown. As the economy starts to slow down and markets see an increase in volatility, he concludes that a recession is imminent. Dalio's thesis is based on this economic slowdown coupled with market volatility, as well as American banks overlending to businesses outside the US. Eventually, as the signs become clearer, he grows confident in his prediction. He becomes highly public about his prediction for an upcoming economic crash. He writes confidently in his Daily Observations to buckle up because the depression is coming and it's going to be ugly. Riding high on his early success, Dalio bets the Bridgewater accounts all on a huge recession.
And I couldn't have been more wrong.
This bold prediction turns out to be crushing for young Dalio's Bridgewater and its clients. Instead of an economic downturn, 1982 marks the start of what would go on to be one of the greatest bull runs in US history, lasting almost 2 decades. Bridgewater is in shambles. He tanks the portfolios of his clients, which are set up to profit from a recession and bleed in the bull run. Unsurprisingly, the clients all sever ties with Bridgewater. As the company hemorrhages money, he is forced to do the unthinkable, lay off every single Bridgewater employee. Dalio, the Wall Street hotshot, even has to get a $4,000 loan from his father just to keep the business afloat. The young Dalio flies too close to the sun. Once highly confident in his market predictions to the point of arrogance, Dalio is humbled by his own failure. Bridgewater teeters on the brink of bankruptcy and looks like it may never recover.
The abyss What is your abyss? There will come a time that you are going to have a terrible situation, and how you reflect on that situation, and whether you have a metamorphosis, a change, personal change. Me, in my case, happened in 1982.
My experience over this period was like a series of blows to the head with a baseball bat. Being so wrong, and especially so publicly wrong, was incredibly humbling and cost me just about everything I had built at Bridgewater. However, this failure would be the turning point in Delio's career. He himself even goes as far as to say,
It was one of the most painful experiences of my life, but it turned out to be one of the greatest experiences of my life because it changed my attitude about decision making.
Which led me to realize that pain plus reflection equals progress.
failure may be a harsh teacher, but it's one of the most effective out there. From this failure, Delio shifts his overconfident perspective to one of absolute open-mindedness. He now knows he needs to have his ideas challenged by others in order to learn and make the most sound conclusions possible. To ensure this, the idea meritocracy is born.
Real idea meritocracy, in which the goals are meaningful work and meaningful relationships.
Delio carefully rebuilds Bridgewater with people that are not only intelligent and qualified, but with people that will aggressively challenge his own ideas to make sure he doesn't get too short-sighted or arrogant with his predictions. With idea meritocracy shaping the future of the recovering Bridgewater, the firm turns its strategy in offering a new fund management product, which would become known as Pure Alpha. Pure Alpha aims to invest in companies that the firm deems immune to market movements. The goal would be to have a beta or a market correlation factor of 0 and instead focus, as the name suggests, purely on alpha or on investment gains that are attributed to factors apart from just market gains.
Bridgewater was a pioneer by being the first firm to separate alpha and beta. Pure Alpha's main investment strategy is to build an optimal alpha portfolio by reducing investment risk through allocating investments among a wide range of uncorrelated assets.
This new product marks as the creation of the modern Bridgewater that we know today. After the launch of Pure Alpha, Delio also launches another massive product known as All Weather a few years later, a fund that puts managing risk over all else. The strategy is to hold a significant portion of the portfolio in bonds, while highly diversifying the stock portion of the portfolio to minimize risk while still making some gains. Bridgewater slowly regains clients as Delio's more balanced approach to investing and new products are implemented. The firm is generating steady profits, but is only more or less pacing the market for about a decade. Is Pure Alpha actually working, or is it just tracing the market's general success? The turning point for Bridgewater and for Delio's redemption comes in 2002, when the stock market dropped over 22%, a staggering amount. However, the Bridgewater Pure Alpha portfolio barely even drops by a few percentage points, proving the effectiveness of the fund in hedging market risk. From there, the firm rapidly picks up massive clients, from US state pensions to major international banks, on its way to becoming the largest hedge fund in the world by 2005. Delio is back on top of the world, but this time failure has tempered him, disciplined him. Now he understands the importance of making balanced and calculated decisions. A new, wiser Delio emerges, cautious of not making the same mistakes. Our new Delio would put his new approach to the biggest test yet, just a few years later. Now the year is 2007, and Delio's about to make a big play. Despite his missed prediction last time back in 1981, he boldly calls for a recession once again. He and his analysts estimate that almost $1 trillion in debt held by the largest financial institutions and banks in the world were rotten debts, meaning that would likely not be paid back. If he was right, the fallout would be severe. He pivots Bridgewater's portfolios in preparation for a financial meltdown.
We're down by between 3 and 4.5%, 16%, 18%, 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
In the blink of an eye, the stock market craters. Bear Stearns, Lehman Brothers, names thought untouchable, suddenly collapse like dominoes. Unprepared, hedge funds feel the brunt.
Delio's concerns surrounding the bank's investments in mortgage-backed securities led him to pull the firm out of several large banks, including Lehman Brothers and Bear Stearns, shortly before they both failed.
Yet Delio has been proven right. Bridgewater clients not only weather the storm, they profit off it, earning a cool 9.5% return while others are steeped in losses. Pure alpha and all-weather work exactly as well as Delio could have hoped. From there on, the rest is history. Bridgewater continues to generate consistent risk-adjusted returns for investors and holds the title of the largest hedge fund in the world, today valued at an eye-watering $140 billion. However, just managing the biggest hedge fund in history is not enough for a Delio-level megalomaniac. Delio strives to gain a massive influence to complement his massive hedge fund, following the footsteps of his daily observations from earlier in his career. Delio writes several books on macroeconomics and investing over the years, such as Principles in 2011.
And over these years, I accumulated a bunch of principles that helped me be successful, and I just wanted to pass them along.
Central themes include the cyclical nature of the economy and Delio's corporate management style, two things that we have already seen as being important to Delio. His team goes as far as to tweet quotes from the books daily. These books exude the wisdom Delio has today, as the concepts outlined in them are seen as the basis for so much of modern global macroeconomic investing, an investment strategy that has become one of the most prevalent and successful in the hedge fund industry. So if he's so wise, what future trends does the sage Delio see on the horizon? For one, China.
The United States is improving at a slower rate than is China for various advantages that they have there. They put out about 8 times as many computer engineers, they have free data, and so on.
Despite the recent political turbulence in the country, Delio has remained a long-time bull on the future of China as a major world economic player. Bridgewater has even taken some serious losses of late on their bets on Chinese firms. But Delio remains a proponent of a strong China in the future, and the reason for that might be a bit more than meets the eye. Delio makes considerable efforts to raise funding from ultra-high net worth individuals in China. These efforts are highly successful and contribute to growing Bridgewater's total assets under management value. Is his China bullishness genuine, or is it a ploy to attract Chinese investors? Hard to say, but what we do know is that he is putting his money where his mouth is, as he invests over billions in Chinese companies. However, Chinese stocks are doing worse than ever, given the recent geopolitical struggles. As he watches China struggle, and as Delio ages into his 70s, he makes what is likely one of his hardest decisions yet. After 47 years guiding Bridgewater through the ups and downs, Delio finally steps down from the helm of the firm in October 2022. In the world of investing, he revolutionized some investing vehicles and macroeconomic investing. He founded the largest hedge fund in existence, and he did it as the middle-class son of a musician. Undoubtedly an investing genius in the same leagues as other investing legends. And yet, when I look at the story of Delio, these things aren't the most important takeaways. To me, the most important takeaway is how he thinks, how he sees the world through a different lens, which leads him to radically unique approaches. It's his idea meritocracy, his radical transparency, it's his abundance of insights, or principles for success as he calls them. Principles he's collected over a career of contemplation. That everything is a machine, everything complex can be reduced to something simple and understandable, that truth is the essential foundation to success, that only through seeking out audacious goals and failing time and time again can we succeed and grow. Although Delio became notorious in the investing arena, his teachings are universal. Remember to go to courscareers.com, link is in the description if you want to start a new high-paying career in tech without a degree or experience required. Many legendary figures emerge from the Wild West of Wall Street. Some are known for their spectacularly good trades, some for their spectacularly bad trades, some for price gouging, some for beating the market for years. But Carl Icahn? Well, he's known for something else.
You don't have the balls to do what I'll tell you to do. Get rid of all of them tomorrow.
I get a call from this Ackman guy, and I'm telling you, he's like the crybaby in the schoolyard. You know, I went to a tough school in Queens that they used to beat up the little Jewish boys, and he was like one of these little Jewish boys crying that the world was taking advantage of him.
Street smart kid from Brooklyn, Carl Icahn grew up with one goal: make as much money as possible, no matter what.
Part of my values is to make money, and I can't change my values. I mean, some people love art, so, love to paint. If a great painter loves to paint, well, you can't, what do you do, criticize him because he likes to paint?
He hustles here and there, but in 1978 he finds his calling: hostile corporate takeovers, or in other words, taking companies by force. For most, hostile takeovers aren't worth it. They're high-risk plays, very public and bloody affairs. Icahn doesn't mind though. He believes there's money to be made doing it. At first, he doesn't mind getting his hands bloody, and it's not long before he develops a taste for it.
I like to see the light go out.
Icahn makes corporate takeovers look easy, turning it into an art.
Of the people in his business, people who are in the business of taking over companies, there's no one who is more persistent and more determined in what they do than he is.
And takeover Icahn did, company after company, with ruthless efficiency.
How do I find a friend on Wall Street? Mr. Icahn suggested you'd be better off buying a dog.
As he rakes in fortunes, the media dubs him a corporate raider, stunned by his systematic conquering of company after company.
TWA's in-house magazine ran a story called Who's Afraid of Carl Icahn?
Behind closed doors, firms whisper about Carl. Every management division has heard of his bloodlust, and they shiver at the thought of being acquired by Icahn. They wait and watch, but just like a shark, by the time you notice him, it is already too late. Carl Icahn is born in a poor neighborhood in Queens, New York, a single child of 2 teachers. His upbringing can only be described as harsh. He grows up tough as nails on the mean streets of New York. As a young Jew, he's often picked on and frequently gets into fights. Carl learns quick to jab, dive, and ultimately what it takes to survive. His father is distant and detached, a cantor by trade. His inability to fulfill his dream of being a professional singer left him a bitter man. My father was never able to accomplish anything. He was a strange guy. I never respected him. Icahn's mother, Bella, is 2 sides of a coin. She loves her son and cares for him, but can also be demanding and domineering.
In other ways, she wanted him to go to medical school, but they were both very intense people.
He had a tough childhood.
The only family member Carl admires is his uncle Elliot, an entrepreneur. You see, Elliot lives in Scarsdale, another city in New York, but when Icahn visits, it's like he's entering a whole new world. His eyes sparkle as he enters. Big houses, fast cars, maids that wait on people hand and foot. While the opulent life is something Carl's father hates with a passion, Carl himself instantly recognizes that this is the way to live. From the beginning, Elliot is like a big brother to Carl and nurtures his wild dream of becoming rich. But how to actually achieve it? How can the boy who has nothing become one of the richest men alive?
And so I really wanted to get out of there. I was real smart in school, and I had good marks. I took the college boards, and I think I did the best in Queens or something on them.
With his ambition lit, Carl starts defying the odds from a young age. A bookworm by nature, he does extremely well in school. While he goes to the local grade school, he's offered a once-in-a-lifetime opportunity, a scholarship to Woodmere Academy, an illustrious private school. A rare offer, and to Carl, it's his first chance to really go somewhere. All he needs is his parents to sign off. But when he hands the offer to his parents, they forbid it, concerned over the values he'd be exposed to. A blow to the gut, but concerned over parents to sign off. First, an illustrious really offer to his parents. They forbid it, concerned over the values he'd be exposed to. A blow to the gut, but Carl doesn't give up. Later, he applies to Ivy League universities. No one in the history of his high school has ever been accepted into an Ivy League university. It just doesn't happen. But it does for Icahn, and he gets accepted into all of them. and he decides to go to Princeton.
#1 among schools listed in the National Universities category.
I wanted Princeton. But then when it came to thinking about paying the tuition, which was only $750 in those days, and the room and board was $750. My father said, son, we're not going to go back on the word. We're going to pay your tuition. I said, thanks, Dad, that's great. I appreciate it greatly. And then it hit me. I said, what about room and board, Dad? And then he said, you're a smart kid. You got to worry about the room and board yourself.
Even with tuition covered, Carl's still gotta pay his way, so he gets creative. He works as a cabana boy on Lido Beach, watching rich people sunbathe and sip martinis, the life he craves. One day while working, he spots some people playing a card game and watches. It's poker, and they invite him to play. Although he loses, he picks up 4 books on the game, and the more he learns, the more he wins. Eventually he makes double his salary in a weekend playing poker.
And that's how I paid my room and board throughout Princeton.
He graduates from Princeton with a degree in philosophy, even writing an award-winning thesis on the empiricist criterion of meaning, whatever that means. But Icon's no closer to his goal, and faced with the decision to commit to a profession for the rest of his life, he now feels lost. The man who will become a ruthless shark finds himself without a sense of direction. Adrift on the ocean, Icon will go wherever the current takes him.
I got accepted to medical school, and I really didn't want to go. I didn't want to be a doctor. But my mother was so adamant. She said, it's an anti-Semitic world, therefore be a doctor.
Deep down, he knows he doesn't want it. He never has, but his mother insists and pressures him. Eventually he caves and enrolls in the New York University of Medicine. Even though he's good at medicine, he hates it. Torn between appeasing his mother and doing something he wants to do, Icon spends 2 long years studying before he reaches a breaking point.
What did your mother say when you dropped out of medical school? Was she disappointed?
That's just a euphemism. Well, you know, you needn't come home anymore. You made the great mistake of your life.
Icon's just as lost as when he started. So he goes to one place his mom won't find him, the army. He doesn't do a lot of book learning there, but he learns discipline. He hones his killer instinct, and he plays poker. A lot of poker. And he manages to net $20,000 hustling his comrades. That's equivalent to $200,000 today. And yet even more importantly, while in the army, he finally figures out what he wants to do. He wants to make money the way Uncle Elliot does, in business. And just like that, the boy floating with the current finally has a lighthouse to swim to. The mission is clear: make some serious money. With his hair combed and his suit ironed, Icon wheel and deals on Wall Street. His uncle Elliot helps him get his first gig as a broker at Dreyfus Corporation, an investment management firm. At first, he kills it.
Life was good, and I figured this is the easiest damn thing I ever did.
But just like the saying goes, good things don't last forever. In 1962, the market crashes and Icon loses almost all he's made as a broker.
I learned a great lesson. You always pay for hubris.
So he gets into options instead. Something you have to understand is, at the time, the options world was a dangerous place, filled with scammers, the kind that sell their own mothers for a quick buck. These bandits play all sorts of tricks on the naive, selling options for way more than they are worth, or dressing up crappy options to look like the next big investment opportunity. And because options are a more complicated investing tool, especially in those days, they get away with it. Carl sees an opportunity and starts the Midweek Options Report, a newsletter advising people on options.
This is what you should have been getting for your option, and this is what you got. And you got screwed.
Over the next few years, people flock to his newsletter, a light in the dark dealings of the option underworld. This allows him to build a huge network and make a name for himself as a reputable and respectable professional, both of which come in handy later. Still, to be considered a true player in those days, you needed to have a seat on the stock exchange. When the asking price for a seat is too high, Carl pays a visit to none other than his uncle.
Elliot Schnall, known as Uncle Elliot, helped Carl Icahn get started. In 1968, he loaned Icahn $400,000 so he could buy a seat on the New York Stock Exchange.
With the cash needed, Carl is able to finally buy a seat on the New York Stock Exchange. With that, he founds Icahn & Co., his very own company.
Icahn says he's helping the real owners of the company, the shareholders.
Similar to poker, he's worked his way up to the high rollers. He's bought a seat at the table and brought his chips. Not only does he intend to play, he intends on winning. In fact, he quickly racks up an estimated fortune of $100 million by betting on the successful completion of mergers and acquisitions. Let me say it again, $100 million. Doesn't it just roll right off the tongue? Do you have any idea what you do with $100 million? Maybe you quit working on the spot, retire in the Bahamas, and Icahn's done it. The boy who came from nothing now has it all. Money, prestige, power, the life he's craved, the life he's dreamed of. And yet for Icahn, 100 million isn't a golden retirement fund, it's a war chest. And Icahn's about to set the world ablaze. A finance career is one way to get to 100 million US dollars, but another option that has been becoming more and more attractive is a tech career. Salaries in tech are going through the roof, and it's even possible to break into some roles without having a university degree. That's why I was so happy to come across Course Careers and give you guys a little freebie. If you want to start a high-paying career in the technology industry but don't have previous experience or a degree, then Course Career is here to help. They are replacing college as the modern way people are starting careers, and it's so simple. All you do is go through an affordable online course where you learn everything required to actually do the job. Then they help you land a position by partnering with a wide range of tech companies who are hiring from them. Check out some of their stories of people like Kyle, who went from being a 37-year-old assembly line worker pressing buttons with no degree to making over 150k in a medical technology sales career, or Dila, who served duty in the military and didn't know what to do afterwards, to making over 100k as a cybersecurity tech sales rep working fully remote. So great as a side venture too. Go to CourseCareers.com. Link is in the bio to sign up for their free introduction course where you will learn exactly how you can start a high-paying technology career without a degree or previous experience. Although clearly talented at it, Carl's tired of betting on the fate of acquisitions from the sidelines. He wants to play. And one day in the 1970s he gets an idea. Carl has seen acquisitions drive up stock prices and make shareholders like himself money time and time again. His big idea is, instead of betting on the odds of a company acquiring another, he wants to take a more hands-on approach. He wants to get in early, scoop up cheap shares of underperforming companies, and then orchestrate a takeover. The best part? Carl already has a target in mind.
Well, we believed the company was very undervalued, and Tappan fit the program for me where I was embarking on activism. Could be a takeover candidate, being blocked by, the CEO and the board. The CEO was a very strong personality, but I don't think he knew much about the business.
On January the 5th, 1978, Icahn makes his first move. He picks up the phone and he calls Tappan CEO Donald Blasius. The two exchange pleasantries. Icahn says he's just calling to introduce himself and that he's bought some shares of Tappan on behalf of his clients and himself. In fact, Icahn tells Donald he might even be making a sizable investment in Tappan down the road, and he thought it best to give him a heads up now. Of course, Icahn wouldn't want to startle Donald with a sudden purchase of shares. Finally, Icahn asks some innocent questions about the firm before hanging up the phone. Donald thinks nothing of the call. Another large stockbroker buying on behalf of clients. One can only imagine Icahn grinning devilishly. It had been easier than he thought. Like any good tactician, he presents himself to Donald as polite, friendly, and maybe even a bit slow. In truth, however, Icahn is only patting his back to find a good spot for the knife. Almost 2 months pass before Carl calls Donald a second time. Since then, he's done exactly what he said he would. He's bought drastically more shares and says he's betting on Tappan being taken over or bought out. But when asked if Icahn personally intended on executing a takeover, Icahn assured Donald that they were not in the takeover business. Straight after the call, he buys even more shares, increasing his stake to $3 million. Now that Donald trusts Carl, Carl keeps testing him. On May the 9th, Carl hosts a meeting with Tappan management and tries to arrange a marriage between Tappan and another huge appliance company, but Blasius won't have it and the deal falls through. So Icahn goes on the offensive. He buys even more shares. At this point, he owns 5% of Tappan. Again, Carl soothes Blasius' suspicions by assuring him again that this isn't the start of a takeover. Meanwhile, Carl eagerly keeps trying to find companies who'll buy the company. So long as Tappan gets bought out, Carl is bound to make a tidy profit. Issue is, Donald and the rest of Tappan management won't have it. On the 20th of February 1979, almost a year since he bought his first shares in Tappan, Icahn unveils his killer move. He calls Donald Blasius and he asks for the unthinkable. Icahn asks to be added to the board of directors. A cold, calculated play. Icahn being a director would mean he has a say in how the company is run. Donald sees Icahn as a barbarian at the gate and sternly refuses. Icahn simply shrugs. You either give him what he wants or he takes it, and the time for asking is over. For the first time in the more than year-long saga, Tappan strikes back. Likely threatened by the more brazen attacks by Icahn, Donald Blasius, CEO and head of the board, rallies his directors and launches a missile. They are going to issue preferred shares. Normal shares usually get 1 vote each, but preferred shares are like shares on steroids, where one preferred share can give you 2, 5, 10 votes each. If Tappan succeeds in creating these shares, then they'll have more control over the vote, and it's game over for Icahn. But to create these shares on steroids, it needs to pass a vote first, one amongst all shareholders. The vote is scheduled to take place in 1 month. It's little time. Icahn's on the back foot, and the stage is set for one final confrontation. The pressure's on. Millions of dollars are on the line, but it's more than that. Everything's at stake for Icahn. His reputation, his clients, and most of all, the priceless satisfaction of winning. And so, with everything on the line, Icahn drops the facade once and for all. He uses the ace tucked away in his sleeve. He declares war. Proxy war. A soon-to-be trademark Icahn move. He writes an open letter to all the shareholders of Tappan asking for their vote to elect him as a director. And he does it by raking Tappan management over hot coals. He also dangles the mouth-watering profits shareholders could receive if Tappan was acquired. According to Icahn, if Tappan is acquired, shareholders would more than double their investment. How can they say no? And when the day of the vote rolls around, Icahn has been successful in riling up the shareholders and turning them against management. The steroid shares idea never sees the light of day, and feeling the pressure, management cave and reluctantly make Icahn a director. There's still skirmishes now that Icahn's rubbing shoulders with his rivals, but Tappan's fate was sealed the moment they let the fox in the henhouse. Now Carl's unstoppable, and before long, Tappan sold to Electrolux, a Swedish multinational. Icahn makes out like a bandit, raking in a $2.7 million profit, doubling his initial investment in 2 years. Even better, he did exactly what he said he would, and his clients and the Tappan shareholders, now suddenly richer, revere him like a god. And if all that wasn't enough, that same year he gets married to Liba Trebal, a 20-year-old ballerina who gets pregnant 8 months later. Amidst all the celebrating, the shaking of hands and clinking of glasses, Icahn slips away somewhere quiet. His confidence in his takeover idea has been bolstered by his recent success, and he's already got the next victim in sight. What happened to Donald, you ask? Well, he doesn't last long at the new Tappan. Lastly, as the saying goes, if you can't beat 'em, join him. A good sport, Tappan president Dick Tappan thanks Icahn. He too was enriched by the takeover and saw how if done right could reap huge rewards. So he invests in Icahn's future conquests. You know his only regret? That he didn't invest more. After Tappan, Carl Icahn goes on the war path.
Carl Icahn is back in the news. Icahn is the man who's been changing the face of American business with his threatened or actual takeovers of dozens of companies.
He bought his first small company, Bayswater Realty. Next came a series of lawsuits and raids on some big names, like Marshall Field, Hammermill Paper, Dan River, and American Can, Phillips Petroleum, Uniroyal, and TWA.
TWA.
Carl Icahn had 17 or 18 practice runs before he started in on us.
Recently, he arranged a blockbuster deal to take over Trans World Airlines. The price is now close to $1 billion, which he's still raising.
Icahn managed to get something TWA's management could not get, labor concessions.
Carl Icahn, unfair to flight attendants.
He was seen as ruthless because he fired people, slashed salaries, cut routes.
The management of TWA, it's true, should have done this a long time ago.
And as the company went into bankruptcy, siphoned off money for himself.
I own it. It's my money. I worry about the bottom line, because if I lose, I'm answerable to my bank account.
Texaco and rest.
ACF Industries, chairman of the board of Trans World Airlines. He is the largest shareholder in Texaco, holding 17.3% of Texaco's outstanding stock, and also the largest shareholder in U.S. Steel.
Motorola.
Motorola is a perfect example of how Carl Icahn operates. First, he chooses a company he thinks is poorly run and trading below value. 2 years ago, he started buying up millions of shares of Motorola. Now he controls over $1 billion worth of stock. As he usually does, he's been making demands in order to jolt up the sagging stock price. First one, dump the CEO. Why does everybody say that you're the man everybody loves to hate?
Love to hate? Well, you're hurting my feelings.
Carl hones his takeover playbook into a finely tuned weapon. What Carl does is named activism investing. Carl is one of the first activist investors, and he's arguably the best.
The stocks that we became activists in, their values went up $55 billion.
In essence, Carl goes after companies that he thinks are deeply undervalued.
I mean, that's the real secret. You buy things, it sounds very simple, but it's very hard to do. When everybody hates it, you buy them. And then when everybody wants them, you sell it to them.
When he thinks that the company's cheapness is because of something fixable, like poor management or poor decision making.
You have people that run companies that aren't bad people, but shouldn't be running the companies. There are very many companies where, and it's nobody's fault really, the CEO doesn't care, he's making a lot of money.
All Carl has to do to make money is pressure management to make changes, or if necessary, force them.
Why is there the great divergence between real value of a company and what it's selling for? Ask yourself, why will somebody be willing to pay $60 for a Phillips Petroleum without management, but only $35 with management? What does that say about management? It's sort of simple. A corporation plus management is worth half of what a corporation is worth without management.
And he has an arsenal of tools to turn the heat up on management, like proxy fighting or personally gaining majority control of the company. Carl starts building a reputation as a corporate raider, and companies even begin to pay him off like a mob boss just to stay safe.
Paying Icahn to go away, buying back his stock at a premium price. That's called greenmail.
So I come outside with him and said, look, he said, they don't like you at all. If you start buying more stock, we're going to dilute the hell out of you. He said, now on the other side of the coin, we'll give you don't have the stock too long, we'll give you a $10 million profit to walk away. He looks at me and says, do you want some time to think about it? I said, no, I'll take the $10 million.
As time goes by, Carl tackles bigger and bigger opponents with ease. But he's about to go head to head with another notorious business giant, Bill Ackman. Wall Street is a pool filled with hungry sharks trying to make it big in business. Among the wannabe Excel monkeys at investment banks, there are a few that actually made it. One of them is Bill Ackman. What happens when two titans collide? The world starts shaking. In this case, at least the world of finance. But let's start at the beginning. Back in 2003, a feud develops between Ackman and Carl Icahn. The two participate in a deal involving the real estate company Hollywood Realty. Ackman is intimidated and wants to get out of the deal as fast as possible. Long story short, Ackman sells his stake to Carl for $80 a share. They agree that if Icahn sells the shares at a 10% profit or more within 3 years, they will split the returns. Hollywood Realty gets acquired by another real estate firm for $136 a share, an increase of 70% within a single year. That's when Icahn decides to apply some Wolf of Wall Street tactics. Carl says F you and refuses to pay Bill the bill, who of course hates him for it. Instantly, Ackman takes Carl to court, and after an 8-year-long legal battle, Icahn is forced to pay $4.5 million plus 9% interest per year by the court. Money-wise, it's peanuts to him. But he absolutely hates getting shown up and vows to get even. When Bill is seemingly on the trade of his life, Icahn decides to throw a spanner in the works. In 2012, Ackman enters into a short position worth $1 billion, betting against the supplement company Herbalife. Yeah, that Herbalife. The price has already sunk significantly, and Bill claims he's doing God's work. He couldn't be more wrong. Betting against a company is always risky, especially one that makes money off idiots. Icahn is looking to take revenge and buys into the seemingly dying company, raising the share price to new highs. It's almost like a tug of war. Icahn's positioned to make money if the stock price goes up. Bill if the stock price goes down. One thing's for sure, someone's going to get burned. This back and forth leads to the pair appearing in the most legendary TV interview ever.
And I'm telling you, he's like the crybaby in the schoolyard. You know, I went to a tough school in Queens that they used to beat up the little Jewish boys, and he was like one of these little Jewish boys crying that the world was taking advantage of him.
Now, I was concerned about dealing with Carl Icahn because Carl Icahn, unfortunately, does not have a good reputation. This is not an honest guy, and this is not a guy who keeps his word, and this is a guy who takes advantage of little people.
Ackman is a liar.
Their fight goes on until Ackman eventually has to get out of the trade with massive losses, while Carl laughs all the way to the bank. If you want to hear the other side of the story, let me tell you that we also produced a full biography on Bill Ackman. Make sure to check it out as well. And while you're at it, why the hell haven't you subscribed and turned on the bell notifications yet? Shame on you. Carl Icahn is one of the most feared investors on Wall Street. He brought activist investing into the mainstream. He also has one of the most impressive takeover track records in history. And while people label him a corporate raider or a Robin Hood unto himself, Carl will say that more people should do what he does. Challenge leadership, voice your complaints, because that's how things get better. No matter which side you fall on, one thing's for sure. Shareholders love him. Remember to go to courscareers.com, link is in the description if you want to start a new high-paying career in tech without a degree or experience required.
Some people don't like to take responsibility for their shit. They blame everything in their life on somebody else. Email for town card. Good luck.
Travis Kalanick was once one of the most powerful men in Silicon Valley. Until he was exiled from the very empire he helped create. Even though he will tell you he built it all by himself. Once he managed to save his failing company by securing $1.8 million in funding from Mark Cuban, whom he met on an internet forum. He's responsible for putting Silicon Valley on the map and creating several billionaires from what would become one of the most groundbreaking tech companies of the 21st century. Travis has revolutionized the transportation industry.
Without him, you and your buddies would be still stuck in town at 3 a.m. trying to fight off the other drunks for a cab. Without him, fans would not be able to call a cab and visit Andrew Tate in Romanian prison. But on the other hand, many people hate him. He is brash, arrogant, and will absolutely break the law to beat the competition. And when he was caught breaking the law, he betrayed his good friend and threw him under the bus in an attempt to escape the feds. And to top it all off, people say that this alpha bro is the man behind the hyper-masculine and misogynistic work culture that is prevalent throughout Silicon Valley. You could say that Andrew Tate's character is based entirely on Travis Kalanick. Many seem to hate Kalanick for that, but he has literally changed the way the world works with the push of a button.
I like to think of myself as the wolf in Pulp Fiction.
It is 1976, and just down the road in a quaint LA suburb, Travis Kalanick gives birth to two very proud parents. Life in this scenic estate could not get any better for Donnie and Bonnie Kalanick. But therein lies the problem. The young parents shower young Travis with constant love and affection, and life is as easy as can be for him and his three siblings. Travis is spoiled rotten, and as we shall see, it is his privileged attitude that will propel him to the highest ranks of tech superstardom.
Sorry about that.
But Travis and his teenage acne are tired of the suburbs and long for some more action and adventure. And the adventure is just about to begin. Travis, being a privileged suburbanite, attends the illustrious Granada Hills Charter High School.
Good morning, pupils.
There, he builds a reputation for being fiercely competitive and determined to win. He graduates successfully and goes on to study computer engineering and business economics. It bores him completely though, so, much to the disappointment of his suburban parents, he drops out a year later.
Just so you guys know, I was a dropout, just so you know. Okay.
He also drops out of the Theta Gang Brotherhood, the fraternity all LA brats attend. But do not worry, he will soon turn his company into a frat house instead.
Right? Yeah, right? Yeah, man.
But more on that later. Being highly driven and ambitious, Travis always has a side venture on the go. Whether it is selling knives door to door or starting an academy to help students pass exams. It is here that Travis develops his talent for sales, which he will come to rely on in the future. Travis is made for the business world, and it is his lust for power.
But what I really want to do is I want to reach in, rip out their heart, and eat it before they die.
And a highly inflated ego that will help him go on to found one of the most influential companies to ever exist. But for now, Travis is about to get his first taste of controversy, something he never shies away from. It is 1998, and Travis, along with his former frat bros Michael Todd and Vince Bussum, are hanging out in San Fran. The trio left college to work for Scour, a peer-to-peer lending service like Pirate Bay. Remember that thing?
We were at UCLA, and we got connected to a guy named Richard Wolpert.
Although Travis will tell you he is a co-founder, the truth is Scour was actually founded by Dan Rodriguez. Either way, Scour has a little problem. The company is completely broke.
You're broke!
Famed venture capitalist Michael Ovitz swoops in to make an acquisition and ends up suing the company to teach Travis and the boys a lesson.
We raised money from a guy named Michael Ovitz.
Right, sure. Former head of...
He founded CAA, president of Disney.
Scour is so desperate for cash, they are forced to give Ovitz one heck of a deal.
We were college kids.
Right, so you didn't know any better.
We didn't know shit.
The fact that the company had to take a bad deal leaves Travis with a Scour taste in his mouth. Hey, who wrote this storyline? Anyway, if you thought that was bad, it gets much worse. What happens next will completely anger Travis and desperately make him seek revenge. Scour is sued by the record labels for copyright infringement to the tune of $250 billion. Yes, billion with a B. The company has no choice but to file for bankruptcy just to avoid the lawsuit. Scour is finished. Travis Giant's ego has been beaten and bruised, and he vows to take his revenge out on the labels. It is September the 11th, 2001, and one of the worst things in living memory has just happened. The dot-com bubble has just burst. Out of spite for the record labels, Travis and former Scour colleague Michael Todd formed the company Red Swoosh, another peer-to-peer lending service. Just like, yep, you guessed it, the Pirate Bay.
The idea was the same peer-to-peer technology, but I take those 33 litigants that sued me and turn them into customers. So now those dudes who sued me are now paying me. Sounded good.
Due to the chaos happening on Wall Street, companies are fighting for survival, and the boys' new startup is no different. Funding is proving very difficult to secure. To solve this problem, Travis and the rest of upper management decide to use $110,000 of the company's tax withholdings to keep the business alive. This quick thinking works. There's just one slight issue. Tax fraud is frowned upon in most cultures. Also, it is totally illegal, and the IRS is knocking at the front door. Business Insider is about to blow the whistle on the nefarious tax stunt that Red Swoosh has recently employed, and a massive fallout is about to ensue. After the news breaks, Travis is faced with the cold reality of jail time. He does the only rational thing. Travis immediately heaps the entire blame on his friend Michael and claims he knew nothing about the alleged crimes. Michael Todd, on the other hand, admits both of them knew exactly what they were doing. Fortunately, a round of funding comes to the rescue. With the new money, Red Swoosh can afford to pay off the IRS, and the boys very luckily avoid jail time. They also avoid having to spend the rest of their lives hanging out in the yard with Sam Bankman-Fried and the Tate brothers. Red Swoosh is saved, but the bond between Travis and Todd is damaged beyond repair. Todd leaves the company in search of greener pastures, something Travis soon regrets. And indeed, many young ambitious people have this thought from time to time. I too sometimes think, how would my career have turned out if I had taken other decisions at certain points in my life? For example, I was always very focused on a career in finance, but recently tech careers have been looking more and more attractive. That's why I was so happy to come across Course Careers and give you guys a little freebie. If you want to start a high-paying career in the technology industry but don't have previous experience or a degree, then Course Career is here to help. They are replacing college as the modern way people are starting careers, and it's so simple. All you do is go through an affordable online course where you learn everything required to actually do the job. Then they help you land a position by partnering with a wide range of tech companies who are hiring from them. Check out some of their stories of people like Kyle, who went from being a 37-year-old assembly line worker pressing buttons with no degree to making over $150K in a medical technology sales career, or Dila, who served duty in the military and didn't know what to do afterwards, to making over $100K as a cybersecurity tech sales rep, working fully remote. So great as a side venture too. Go to CourseCareers.com. Link is in the bio to sign up for their free introduction course, where you will learn exactly how you can start a high-paying technology career without a degree or previous experience. It is 2002. Travis is making absolutely no money, and things are looking terrible over at Red Swoosh headquarters. Due to a lack of income, Travis is back living with his parents.
I was without pay. I was done. I was living at mom and dad's. I was not getting ladies. It sucked. Right?
Back where you f***ing started, Wagey.
Revenge is a dish best served cold, and Travis is about to get a taste of his own medicine. Travis publicly accuses former Theta Gang brother Michael Todd of attempting to steal employees from behind his back, and that's exactly what happens next. Todd can't help but smile as he dismantles Red Swoosh one employee at a time. With the promise of more money, he takes his vengeance and steals the last remaining engineer from Red Swoosh.
Basically saying, it's been a great 4 years, I'm going over to Google. Now, that's interesting. The person who recruited him at Google was my former co-founder.
In what is a humiliating blow to Travis, the company is on the brink of death. Travis kneels to the ground, a broken man. A single tear rolls down his cheek, and he does the only thing he can at this point. He looks up to the heavens and prays to God, and there he is. Mark Cuban descends from the heavens and offers Travis $1.8 million in funding after the pair meet for the first time on an internet forum.
Travis, the guy who started Uber.
Travis Kalanick?
Kalanick, yeah. So he had a company, Red Swoosh, that I invested in.
Just like our Discord channel, where you too can meet with potential angel investors. The Cuban's money saves the business and allows Travis to hire a brand new team of engineers.
We ultimately worked there for 2 months. From the beach, one of the most beautiful beaches in the world. It was great. Great way to have fun while you're failing.
Soon, Red Swoosh is sold to Akamai Technologies for a cool $19 million. Just like Andrew Tate, Travis becomes rich virtually overnight. He pockets $2 million after 3 years of not receiving a penny. The LA strip clubs start pouring rain and the drinks are on Travis. There's just one slight issue. Besides strippers, booze, and he has no idea what to do with all this money. The dust has settled, and over in San Fran, Travis Kalanick is taking inspiration from his investor Mark Cuban. He's using his newly acquired wealth to help fund budding startups in Silicon Valley, investing in the likes of Expensify, Livefire, Crowdflower, and Formspring. Travis being Travis, he tires of sitting on the sidelines and is dying to be part of the action once again. To fix this, he turns his Castro District apartment into a hub for young techies to go drinking and play Wii Sports. Fan favorite Gary Vee is one of many energetic entrepreneurs to frequent the place.
But do I have the obnoxious audacity?
Travis calls it the Jam Pad, and it even has its own Twitter account that you can follow. Just like you can follow Kevin John on Twitter @KevinJohn. Soon Travis grows bored of the parties and listening to Gary Vee talk all the time. So he plans a move that will change the course of his and all of our lives forever. It's another night out drinking with the boys in 2009. Travis and fellow entrepreneur Garrett Camp struggle to find a ride back to the Jam Pad.
I wanted to push a button and get a ride.
They both agree that the taxi services in San Francisco are absolutely piss poor, and even ordering an upscale luxury vehicle is a major inconvenience. Camp comes up with a super app idea that allows users to hail vehicles from their smartphone. He calls the idea Uber Cab. Travis joins him as a self-proclaimed mega advisor, and Ryan Graves is brought in as the new CEO. But this stint as CEO is short-lived as Travis executes a plan to boot Ryan out of the company just 10 months later. People believe that given his brazen persona, Travis is the perfect fit for the leadership role. But as we shall soon see, it will also lead to his downfall.
You're at war with all these people. Don't be a dick. You don't need the 10%. Do you take 10%?
We take 20%.
You're at war prematurely with your customers.
Sorry about that.
It is 2013, and Kalanick's unrelenting focus on rapid expansion at Uber is paying off. and the company is now valued at a monstrous $3.7 billion. Kalanick's aggression can be given the credit for his massive growth, as other CEOs would not be reckless enough to openly break the law to fuel Uber's notoriety. San Francisco lawmakers warned the company that if they continued doing business without a license, they would be penalized. Travis decides these laws are stupid and continues to do business anyway. Uber's marketing ploy is also savvy, as it promises easy money and flexible work hours to the drivers, although many believe this is total BS. Behind Kalanick and his team was a pile of money investors like Jeffrey Bezos, David Sachs, and Lady Gaga's manager. Another early investor, Jason Calacanis, whom we have also portrayed on the channel by the way, also made an absolute fortune. As the success of Uber grows, so does Kalanick's arrogance, and it is starting to rub people up the wrong way, investors and employees alike.
I think the meeting lasted like 10 minutes, and the first minute was them telling me that, the other 9 minutes was me yelling at them. And it hurt.
His reputation takes a minor hit when he begins an email address to employees with the line, "You better read this or I'll kick your ass." Even more damage is done when a distasteful joke appears in a GQ article. Travis states Uber should instead be called Uber due to the amount of attention he now receives from the ladies. Not to mention that nights out at the strip club are regularly expensed on the corporate accounts as tits on Travis. This is not a joke. Travis gets away with it for now, as many still admire his unrivaled drive and determination. But the mask is starting to slip, and soon it will lead to one of the greatest downfalls Silicon Valley has ever seen. Travis, notorious for his party animal days and wild booze sessions, is having a sobering year. Uber is fined $20 million by the US government for misleading employees, and his mother has just died in a tragic boating accident. If you think things couldn't get worse for the Uber chief, think again. A blog post is about to kick off a federal investigation into the corporate culture at Uber. Susan Fowler, a former Uber employee, writes a damning report on the toxic culture that prevails at the company. She even writes that sexual harassment is not only frequent, but it is actually tolerated by the upper management.
Examples of misogyny in this company are astounding. I mean, there's the whole glory rides thing where they were tracking, by looking at the data patterns, who was having one-night stands and, fist bumping and high-fiving people virtually over this.
In steps former US Attorney General Eric Holder to lead the investigation. The result does not bode well for Travis. Travis dramatically pivots and starts reassuring people that he will do everything in his power to fight injustice within the company. But the final death blow to his reputation is waiting just around the corner. In the backseat of an Uber, Travis is pissed drunk and on his way back to the jam pad with two lovely ladies. Tensions start to arise between him and his driver.
All I remember is coming down to
No, have you heard it? We're trying to break down your show and make you listen up a little bit.
Yeah, but you're pushing that off to September.
He's upset because he's struggling to put food on the table for his family. Travis, being a man of the people, starts to berate him, and the pair nearly come to blows.
Some people don't like to take responsibility for their shit. They blame everything in their life on somebody else. But why you sending an email for town card? Good luck. Good luck to you too, but I know you don't gonna go far.
The driver records everything.
I lost $97,000 because of you. I bankrupt because of you. Yes. You keep changing every day. You keep changing. Hold on a second. What have I changed about black? Huh? What have I changed the whole business. What? You dropped the prices on black. Yes, you did. Bullshit. We started with $20. Bullshit. We started with $20. How much is the mile now? $2.75?
To the delight of the press, the video is released and all hell breaks loose. Travis tries to apologize but ends up arguing with the driver once more.
Sorry about that.
Eventually, he just ends up paying the driver $200K to make the whole thing disappear. But it is too little, too late. It's all over. Travis' reputation is a sinking ship, and he's dragging Uber down with him. Investors demand Kalanick's resignation, and eventually he caves, stepping down from his position as CEO after 7 years. Travis tries to place his own people on the board of directors, including pushing Dara Khosrowshahi to replace him as a chief.
And so I told him very early on, Travis, to some extent I'm actually going to be pushing you away early on.
Of course, it would not be an epic Silicon Valley story without a cameo appearance from the legend that is Masayoshi Son, who, as per usual, throws money around and places 6 of his own members on the board. Kalanick's last-ditch efforts to seize control of the board are quashed. Disrespected and dethroned, Kalanick drops to his knees once more. On the night before Christmas 2019, Travis Kalanick sells all of his Uber stock and walks away $2.5 billion richer, using the crisp dollar bills to wipe away the bitter tears, closing this chapter with Uber forever. But it won't take long for Travis to get his hands dirty once again. Back at the jam pad, Travis is sitting on a ton of money, and just like in the past, he needs somewhere to put it. So he launches the 10100 hedge fund.
Congratulations, Mr. Krabs.
Hello, I like money.
Noticing the number of derelict buildings scattered around town, he invests heavily into Cloud City storage systems in an effort to revamp the lost properties. Travis appoints himself as the new CEO of their Ghost Kitchen subsidy, Cloud Kitchens. A ghost kitchen is a company that rents out kitchen units to restaurants and delivery services, just in case any of you are scared. The big boys from the Saudi Arabia sovereign wealth show up and chip in a cool $400 million. In a turn of events fitting for this Uber boss, Travis now sits on the advisory board of what is likely the most controversial building project ever: Saudi Arabia's futuristic megacity, Neom. While Travis Kalanick retires to the jam pad every night to watch Batman's best friend Joseph Gordon-Levitt play him in the hit TV show Super Pumped.
You should use your full name. I like that name. Robin. Thanks.
You must be wondering what it is like to achieve this level of power and influence. Do I need to become a misogynist that turns a blind eye to sexual assault in the workplace? Probably not. What you do need to do is to develop a god complex combined with ruthless aggression and absolute determination to beat your competition by any means necessary. But be warned, you need to keep your insatiable appetite for power hidden as much as possible, as it could lead you to ruin. Or like TK, you could just join a company as an employee and start telling everyone you are the founder. One thing is for certain though, whether you love him or you hate him, there is a reason that Travis Kalanick has risen above all the rest and become an Uber Chad of Silicon Valley. Remember to go to courscareers.com, link is in the description if you want to start a new high-paying career in tech without a degree or experience required.
Larry Ellison is one of the richest men in the world and has vowed to give away all his money when he dies. But that is a lie, because he has no intention of dying. He has turned $1,200 into an empire worth over $100 billion and is responsible for managing nearly all of the data in the world, including the highly confidential databases of organizations such as the CIA and YMCA.
I think you'll like it.
But on the other hand, many people hate him. His rivals say he is hyper-aggressive and will do whatever it takes to beat the competition. This is a man who will literally go through his opponent's trash to try and dig up dirt on them. A man who hates to lose so much that he would rather lie, cheat or steal in order to win.
I'm addicted to winning. The more you win, the more you want to win.
And yet, we need him. Every single piece of technology we use relies on his company Oracle. You may not know much about them, but they know everything about you. Like what you really asked ChatGPT and how much you paid for tickets to visit Andrew Tate in prison. Without Oracle, society would completely collapse, and the man behind it loves to live up to his reputation as a playboy billionaire. This has led many people to ponder the question, what is the difference between God and Larry Ellison? Well, God doesn't think he is Larry Ellison.
Right. Mea culpa, guilty as charged. That one I'm afraid is true.
It is 1944 and Lawrence Joseph Ellison is born to a single mother in the Bronx, New York. Larry contracts pneumonia at 9 months old and his mother struggles to take care of him. So she puts him up for adoption. He will not see her again for 5 decades. Rejected by his parents at less than a year old, Larry's adopted mother is very caring of him. His father, however, is cold and distant. At the age of 12, Larry's father delivers shocking news that will change the course of history forever.
I was adopted within my own family when I was 9 months old. I was born in New York City. My mother was 19. She wasn't married, and really was unable to care for me. Tried until I was 9 months old, and then I was adopted by my maternal aunt and uncle in Chicago, and moved to Chicago, the south side of Chicago.
Larry carries this feeling of rejection with him, but does not cry about it. Like all real Giga Chads, he bottles it all up and instead develops a giant chip on his shoulder.
So shocking, I just put it away and thought about it for years.
From that point on, that pain will drive Larry to be one of the most successful people of all time. And still, he will never ever be satisfied. Larry is a clever boy, but has no interest in school. He enrolls at the University of Illinois as a pre-med student and is crowned Science Student of the Year in what will be his first taste of superiority. But that victory is cut short as his adoptive mother, whom he is very fond of, dies. A grief-stricken Larry drops out of college and spends the summer of '66 with the hippies out in California.
I experimented with marijuana a time or two, and I didn't like it.
He gives university one more shot and studies physics and maths in Chicago, but tires of this quickly, and so does his wife.
She accused me of being irresponsible, and she told me I lacked ambition. She kicked me out, and then she divorced me. This was a pivotal moment in my life.
At the age of 21, Larry has a midlife crisis. He buys a flashy blue Ford Thunderbird and drives all the way to Berkeley, California. A road trip that will ignite one of the most insane billionaire stories of all time. And it looks like Larry's luck is about to change for the better.
There's no system in the world that can do this other than...
I decided to go into the computer business in college. I started working part-time programming. I found it in a very short period of time I could make more money writing programs than a tenured professor at the University of Chicago was making. And I was a teenager.
On the drive down, Larry Ellison discovers he's quite a talented programmer, just not quite as good as he says he is. He meets his first client while working at the small Silicon Valley tech company Ampex, none other than everyone's favorite law enforcement group, the Central Intelligence Agency. The CIA are worried about the security of their international database and are looking for a solution. Luckily, Larry sees that IBM has the solution and they don't even know it.
I said, oh my God, we can beat IBM to market because IBM doesn't believe in their own idea.
Copying IBM software, he starts his own company with his colleague Bob Miner, and together they form Software Development Systems, or SDL as it is known in Silicon Valley. Their first client, the CIA. Their first product, Oracle version 2. Wait, what? Yes, Larry, being a marketing wizard, did not think that anyone would trust the first version of a new software. So they sneakily named it version 2, and nobody notices. Larry's initial investment in the company is a measly $1,200, but as we shall see, it won't be long until he is swimming with the sharks of the tech industry. SDL's business model is so boring that Larry decides to change the name to Oracle in order to spice things up a little. It becomes an essential infrastructure for any company working with the internet, and it begins to dominate the data storage space. Oracle provides products that organize large amounts of data in a way that allows for efficient storage and quick retrieval. Basically, it is a giant warehouse for data. This is vital for big companies because at the time nobody knows how to protect sensitive information online. Nobody except for Larry, that is. Oracle IPOs and Larry Ellison's share is worth a cool $93 million.
I love the internet.
Making him the #1 tech giga chat for a day. Microsoft IPOs the following day, and Bill Gates is now worth $350 million, making him one of the richest men in the world and catapulting him far ahead of Ellison. Due to his obsession with being #1, a furious Ellison vows to take down Microsoft and officially makes Bill Gates his arch nemesis.
Bill, forgive me, there are a lot of people in the world smarter than Bill Gates.
Gates, on the other hand, does not even realize he's in a war for tech supremacy at all. He believes Larry and him are actually good friends. In Larry's samurai warrior mind, though, the tech industry is not big enough for the two of them.
I think the most difficult experience I had was in 1990.
The Oracle sales team are taking after their fearless leader's aggressive tactics. It turns out they are selling software that does not even exist yet, as one would expect. Issues start to arise when the promised software does not materialize. The sales team are beyond happy with their Christmas bonuses, but clients are not, as they've received 0 of the products that they have already paid for. Oracle's 5th update is also released at this time, Oracle version 6, and it just so happens to be the worst one ever. Sales absolutely plummet and the big boss is down $790 million. A crushed Ellison is now a laughing stock, and the company is about to go bankrupt, but for some quick thinking by the commander-in-chief.
And that means I had to ask people who I'd worked with for a decade to leave. I had to fire people.
Larry Ellison fires 10% of the staff, including his girlfriend, now an ex, for obvious reasons.
We weren't kids anymore, and the business wasn't a little business anymore, it was big business, and we had to replace virtually all of senior management. And it was a very painful process.
The company is safe for now, and Larry admits they made a terrible business mistake. But he is about to have another issue from within the company, and it is a problem with the person he least expects. And no, it is not his ex-wife. Mark Benioff joins the Oracle Corporation. Benioff is a young hotshot programmer who has just completed his internship at Apple. He joins the Oracle team in a customer service role and receives the coveted Rookie of the Year award at the age of 23. 3 years later, he is named as the company's youngest ever vice president. As we shall soon see, Benioff will go on to build his own powerhouse company, one you should all be familiar with. Larry sees a lot of himself in Benioff, and for 13 years he mentors the young talent. The two become close friends, but soon it will all end in tears.
Loyalty is dead.
Oracle's favorite son Benioff leaves the company to start his own database business called Salesforce. You may have heard of it.
Well, you can really see we are crushing Oracle. You can see it on the chart right there, SAP, Microsoft.
Larry is on the Salesforce board of directors, but not for long. The former friends come to blows when Larry starts his own side hustle to directly compete with Salesforce. In what becomes a media frenzy, the pair trade blows and throw digs at each other's companies.
The message of this show is proprietary hardware and software is the future. And our message as we go around the world is beware of that false cloud. Beware of the false cloud because it is not efficient, it is not democratic, it is not economical, it is not environmental, it is not open.
Benioff wants Ellison to quit. Ellison responds, "It would be much cooler if you fired me." Benioff grants him his wish and lays his claim to be the only person to ever fire Larry Ellison. Not one to be outdone, Larry gets the last laugh and he boots Benioff out of an Oracle Open World event that he was to give a keynote speech at. But this beef is playground stuff compared to the battle Larry is about to commence.
This Windows 95 is an enormously complicated piece of software. And the idea of people are going to install this in their households and manage these things in their household, to me, is hilarious. And it's time for something that's easier to use. Well, this is clearly part of our strategy to dethrone Microsoft.
Over at Oracle headquarters, Larry comes up with a plan to dethrone his arch-rival Bill Gates, who is still blissfully unaware of their rivalry.
But the way you dethrone Microsoft is not somebody that, you throw darts at Bill Gates and hate and envy Bill Gates. You have to think about products and create products that are better than the products that Microsoft is selling.
Larry hates the PC.
I hate the PC with a passion.
Oracle releases their own version of the laptop, the NC, or Network Computer for short.
We've introduced this new class of computer for normal human beings at very low cost.
pretty.
Very low cost, very lightweight. Now every person can use a computer because they're low cost and very easy to use.
There's just one problem with NC. It runs entirely on the internet, and everyone's internet is slow as hell. The NC is about 15 years ahead of its time and completely flops. Bill Gates wins again, in a competition he still doesn't realize he's partaking in.
I don't talk to Bill anymore.
A beaten and bruised Larry comes up with another plan. Get married again. And in the case of Bill Gates and Microsoft, when you can't beat them, dig through their garbage instead. It is 2000. Microsoft is under investigation for antitrust violations. Larry is about to do the Lord's work, or so he says. Concerned citizen Larry Ellison believes that Microsoft is hiding secrets about stolen software, so he hires a team of private investigators to go through their garbage. Literally. They find rubbish linked to the company and even offer $1,400 to the janitors for their trash. The janitors refuse, but Larry could not be more pleased with himself. The investigation is a success and proves that Microsoft is paying advocacy groups to support them publicly. During their antitrust lawsuit, Larry hands over the intel to the feds and Bill Gates gets in trouble.
I feel good about telling what we did. All we did was try to uncover Microsoft's covert operations. That's not arrogance of power. That's a public service.
Larry is about to make his most brazen moves yet. He is about to sue the city of San Jose. It is 2001 and one of the worst things imaginable has just happened.
How do you read, Captain? Loud and clear.
Larry Ellison is served a summons and has been forced to ground his plane at night due to a 70-year-old curfew in San Jose Airport. Larry wants to fly his plane at whatever hour he wishes. So, being the reasonable billionaire that he is, he decides his best option is to sue the city of San Jose. This would sound bizarre if not for the fact that Larry actually won the case, becoming one of the people in history to sue the government and win. The judge grants Larry a waiver to fly anytime, day or night, while all the peasants must obey the curfew. Larry leaves the courtroom smiling from ear to ear. One man, on the other hand, is not so pleased: his accountant. It is 2002 and Larry receives the coveted Centurion card from American Express. The limit on the card is $1 billion.
We both had really good credit.
I know what you're all thinking. How do I subscribe to the Kevin John YouTube channel? Hit the big red button below. Once again, Larry Ellison wants to prove the doubters wrong and do the impossible. A Centurion card calls for a celebration and an egregious shopping spree is in order. Yachts, McLarens, and one of the most expensive real estate deals in USA history. Larry is thrilled.
I know. I've tried hard. but it's impossible.
His accountant is not so thrilled. Emails are leaked during an insider trading lawsuit between Larry and his accountant, Philip Simon. Simon says he is worried. How will he get paid if Larry has no money left to be counted?
I'm worried, Larry. I think it's imperative that we start to budget and plan.
He warns Larry to stop blowing all the money. Larry obliges, and everyone believes this situation is rescued. But they could not be more wrong. Larry is about to make his most impulsive purchase to date.
I had the fastest racing sailboat in the world, maybe the fastest racing sailboat in history.
In what is a decade-long obsession, Larry invests $400 million in a race, a boat race. Besides spending a ton of money, there's just one more glaring issue. Oracle's team is extremely slow, and Larry absolutely hates to lose.
There is absolutely no doubt that he hates to lose. There's no doubt of that at all.
So being the fair and competitive man that he is, he does the only logical thing. He cheats.
It is my job to, go out in the marketplace and win.
By placing weights in the boat, it allows them to sail much faster. But Larry's genius is thwarted by the commission and national scandal breaks loose. Larry sails over this issue quickly and moves on as if nothing ever happened, which is good, because he is about to go to war. No, not with his now third ex-wife, with the neighbors. Up in the hills of San Francisco and his multi-million-dollar mansion, Larry Ellison is furious. His neighbors, the Von Bothmers, have allowed their giant redwoods to roam free and grow too tall for Larry's liking. Ellison is a reasonable man, so he hires a tree attorney and sues them. Yes, a tree attorney is a real thing. As you should all be aware by now, Larry does not lose, and the neighbors are court-ordered to cut down the redwoods, much to the annoyance of the Green Coalition of Betas. Apparently, Ellison tried to buy the house on 2 occasions, but Von Bothmers rejected his $15 million offer. But in the next lawsuit, Larry is about to meet the man that will finally beat him. And he too goes by the name Larry.
Larry specifically. I think...
Larry per se.
Fast forward to 2010, Larry Ellison is firing shots at a new target, Google.
When you write a program for the Android phone, you write it, you use the Oracle tool or Oracle Java tools for everything.
Ellison is adamant that Google has stolen Oracle's software to build the Android ecosystem, and he does the only thing a logical man would do in this situation.
What they did was absolutely...
And you blame Larry Page?
100% Larry Page.
So if what they did is evil, that makes Larry Page evil?
No, it makes what he did evil, which is quite different.
He sues Google for stealing the Java software and in the process costs Oracle billions of dollars. For the first time in his life, Ellison does not win, and the court sides with Larry Page and Google. The judge deems Oracle's control of the Java code monopolistic and against everyone's best interests.
This really bothers me. I don't see how he thinks you can just copy someone else's stuff. It really bothers me.
Frustrated that he must follow local laws, he decides to leave America and move to somewhere he has total control and the freedom to do whatever he pleases. But as we shall see, not everyone will be as pleased as Larry, especially his new wife. Larry buys 98% of the island of Lanai in Hawaii for $300 million. In a final cameo, Bill and Melinda Gates are married at the 17th tee box of the island's golf course. It is not known if they also got divorced there. Owning your own island would grant you certain freedoms, or so Larry thought, but he can't escape trouble, not even on his own island.
All new tonight, we've obtained the police body cam video showing the world's 6th richest man during a traffic stop on Lanai.
While driving his Corvette, he's pulled over by police for speeding and given a ticket.
The reason I stopped you is you ran through the stop sign and you were kind of speeding there. Any reason why in particular?
I was trying to get comfortable with my kids, but there's no excuse.
Okay, cool.
Larry handles the situation graciously, but deep down he is seething. What is the point of buying an island if you cannot drive your supercar quickly around it? The cop, on the other hand, is given a hero's welcome by the locals, many of whom hate Larry because he treats the island like his personal laboratory. He's using the island as an experiment for sustainable living, much to the annoyance of the local residents, who have now realized they are the test subjects. But Larry owns the land. They are allowed to leave if they are not happy with him, just like his fourth wife.
You have collections of cars, jets, private homes owning the island of Lanai. Tell me how you did it.
Well, I think my favorite line is, I had all the disadvantages necessary for success.
Whether you love him or you hate him, you cannot deny that Larry Ellison is a pivotal figure within the 21st century.
We want to make sure we beat Amazon in cloud database.
Next time you log into Pornhub, you might consider the man that made it all possible. Probably not. Maybe you will see him cameo in Iron Man 6 with Robert Downey Jr.'s grandson playing Tony Stark.
Hey, the Oracle of Oracle. What a pleasure. Nice to see you.
Or at his 160th birthday party on the island of Lanai. Who knows how long he can cheat death for, but if there is one man brazen enough to try it, it's Larry Ellison, whose name will go down in legend as an eccentric, charismatic playboy billionaire that started with a small sum of $1,200 and nothing but ruthless aggression and turned it into one of the most powerful companies of all time. That is Larry Ellison, the real-life Iron Man.
At first, they call you arrogant, and then they say you're crazy. So remember this, graduates. When people start telling you that you're crazy, you just might be onto the most important innovation in your life. Of course, the other possibility is you're crazy.
It's 2009 and Steve Cohen is watching the financial crisis destroy investors around the world with a big smile.
We're down by between 3 and 4.5%, fallen about 18%. The stock market is now down 21%.
Why with a smile? Well, while the financial world is burning like ancient Rome, Steve Cohen is living out the dream of every mildly successful Instagram trader. He option traded his way to a multi-billion-dollar portfolio for his firm SAC Capital Advisors, and he is only just getting started. Cohen is famous for his fast-paced, volatile trades and was successful at it for years. But just a few years later, it will all come crumbling down for Cohen as the SEC drops the hammer on him for insider trading. What will ensue will be a Roman Empire-like collapse for Cohen, followed by a revival of epic proportions. But how did Cohen, a once average guy, manage to make money while everyone was losing money?
Stephen A. Cohen went from a small-time options trader to one of the most successful hedge fund managers of all time.
How did he start from zero and become so successful, including buying the New York Mets baseball team?
He founded SAC Capital and started generating some of the best returns out there.
And is it all undeserved because he's really just a criminal that got lucky?
But how did the king of hedge funds do it?
How does anybody make 60% a year?
This is the legendary story of Steve Cohen.
I don't just want to get into the playoffs. I want to win a championship.
There are many dubious actors in the finance industry claiming that it's possible to make millions by trading, so buying and selling different stocks in a short time frame.
What is going on, guys? 23-year-old rich forex trader. We're in a $1 million penthouse. Literally, the truth is you could make millions trading forex, and I'm helping thousands of my students.
What a majestic hookah, truly millionaire style. As funny as this seems, Cohen did find a way to make it work, but the path to get there was hard and full of challenges. Stephen A. Cohen is born in 1956 in Long Island, New York. While his hometown is a wealthy area known for being the inspiration for the Great Gatsby, Cohen is not as wealthy as his peers' families. The Cohen family is considered middle class. They live in Great Neck, a once agrarian area northeast of Manhattan.
As more people discovered the area, people began to settle. The farms began to give way to some big estates. We are a very, very diverse community.
It was a small house, and it was a little crazy, you know. It was a typical suburban family, lots of sports. My mom was a piano teacher, my dad was a dress manufacturer. It was a nice place to live.
Young Cohen takes up some classic pastimes of future high performers.
You know, I like sports, so I played soccer, played basketball, I played golf, and that's what you did, you know, basically. And the only season I really didn't play was baseball.
There's also first signs that he might become a good trader someday, much to the detriment of his grades.
I think I was better when I was younger. As I got older into high school, then maybe I didn't study as hard, and we were playing a lot of poker, and basically played poker almost every night, which doesn't lend itself to studying. So.
To Cohen, poker is much more than a bit of gambling. It is a way to earn some side income, while the people he's playing with keep losing. And that, my friends, reminds me a lot of this channel actually, because I am losing thousands of dollars on this every month, believe it or not. One thing that has definitely helped me compensate some of these losses is the Patreon Discord community. Here every day I engage, answer questions, send resources, connect you to people from my network or from the community. But, and that's the big announcement, this week is the last chance for you to join it. Starting from next week, you'll not be able to join it anymore, because we will turn it into a private, closed community. Just me and everyone who's in it with me. I'll still be answering questions. We'll talk about career consulting, venture capital, building side business, getting billions, and so on. But I'm also working on something new, and that will be revealed next week. So if you want to ask me and other OGs from the community questions and want to have an open communication channel with me, this is your last chance to join, either as a Gorilla Patreon, so you'll be able to engage with me and the others in our Discord channel, or as a Bateman Patreon if you want to have one-on-one video calls with me. That's it, and now enjoy the rest of the video, brethren. Stay ambitious. Cohen makes thousands on the felt, truly an impressive sum for a teenager given the value of the dollar in the late 70s and early 80s. Poker is Cohen's introduction to taking calculated risks, a skill that would translate directly into his life as a trader. And Cohen is not the only finance silverback with a love for poker. Chamath Palihapitiya and Jason Calacanis, two VC moguls we have produced biographies on also on this channel, even went as far as to name their podcast the All In Podcast as an homage to poker.
Yeah, I think at the end of the day, why I love playing poker so much is it really is a microcosm of my own life. You have some skill in that, you know, we have a bunch of starting cards. You have a bunch of other things, though, that are not in your control. And then there's a bunch of luck, and then ultimately there's an outcome. In some cases, it all plays out great and everything happens the way it should and you win. In other cases, you lose. And in other cases, you think you're going to win and you get a bad beat. That basically is life.
This parallel between investing and poker and having to make risk-adjusted decisions is a clear reason why you see so many successful people from the world of investing with an appreciation for poker. Cohen continues down the route paved by other young ambitious finance chimps and heads off to the University of Pennsylvania's Wharton after high school to study economics. He joins the fraternity Zeta Beta Tau and manages the frat's funds, making sure they always have enough beer money. For those less familiar with the American university experience, fraternities are essentially selective clubs for guys to join that usually spend their days at university throwing extravagant parties. These frat buddies were certainly helpful in Cohen's life as a young investor too, helping him open his first brokerage with a spare $1,000 US. Cohen's focus did not lie in his classes, as one frat brother says. While everyone else was worried that they would not have time to finish a particularly tough statistics exam, Steve took a break from the exam at 4 p.m. to check on his stocks. In short, Cohen's Wharton education combined with his early interest in stocks are the early signs of his potential to make money in the market. And this potential starts to come to fruition quickly for young Cohen, replacing the keg parties of college for a career in trading after graduation. His first stop, Grunthal & Co.'s options trading desk. Known for its dysfunctional management and an image described as not presentable enough, the firm's dubious reputation opens the door for Cohen to quickly rise through the ranks. Results are put above any bureaucratic promotion letter in this firm, and Cohen's rise would be nothing short of meteoric, proving himself to the firm time after time. During his stint with the company, he eventually makes $100,000 a day. Yes, $100,000 a day for the firm, a feat almost unthinkable, unless you're a YouTube day trader.
I dropped out of school, no diplomas, no education. The truth is, you could potentially make millions trading forex.
No education. That's the only thing that's trustworthy about this guy. Cohen, working at Grunthal, does not want to be a so-called Excel monkey only. He wants to get into the driver's seat. It's time for the next step. But other than the people we typically portray on this channel, he does not start a business or invent a new asset class. He continues doing what he does best, but now with his own fund.
I really felt like Steve Cohen was kind of a symbol of the time that we're living in. He didn't build things, he didn't invent a new technology, he didn't invent a new medicine, he was a trader. And for some reason, we live in a world now where being good at that brings more wealth and riches than almost, at any time in history doing anything else. And to me, that was remarkable.
Sometimes I do career coachings with people through my Patreon community, and almost all of them assume that the best way to get rich and powerful is to work at a bulge bracket investment bank for around 2 years and then go to private equity or a hedge fund. But this is not the only way. While the era of trading roles was much different back in the 70s and 80s when Cohen was with Grunthal, there still are interesting routes to jumpstart your career like proprietary trading shops. Proprietary trading or prop trading is when a firm gives individual traders access to greedy amounts of leverage in exchange for upfront fees of a few $1,000s, a percentage of trading profits and or transaction fees.
They're the guys getting to Aston Martin's driving to the £2 million flat. It's real. All for Wall Street, it's all nonsense. But the money, parties, that kind of stuff, that's all real. Absolutely 100% real.
Needless to say, some shops are more reputable than others. All in all, there are legitimate ways to earn cash with solid trading strategies. With these prop trading firms, if one has the discipline, hard work and talent to be successful. And it is an excellent stepping stone for those that want to gain the skills needed to one day run their own fund, like Cohen does after Grunthal. Cohen's big move is starting SAC Capital Advisors, his own hedge fund. His success was massive enough at Grunthal that he's able to put up $25 million of his own money to launch the fund.
Started by investing legend Stephen A. Cohen, SAC Capital was the most successful hedge fund in the world during the 1990s and 2000s. It achieved an annualized return of 30% during its operation.
If it isn't clear already, Cohen is now fully embodying what it means to be a finance legend, as he humbly uses his initials SAC to name his fund that would be bound for greatness. Now that he has the skills, reputation and upfront capital to do so, Cohen starts trading in what will be his signature trading style. Fast trades in high volumes with high volatility, chasing price movements after earnings calls and dividend announcements. But as we now know, volatility and risk is not something that scares Cohen. He throws millions upon millions of dollars into Equinix in 2007, a real estate investment company, betting on a huge earnings report, and the report comes out deep in the green, generating 32% returns for Cohen from the positive earnings call, a massive gain on a single trade. He also puts billions into RDL Biosciences, a small biotech firm. And biotech is known as one of the most riskiest industry to trade in. Just 3 weeks later, the biotech firm announces that it will be acquired by AstraZeneca, shooting up the stock price. Cohen makes sensational trade after sensational trade.
In his first 7 years of managing money, Cohen had only 3 losing months. The worst, a 2% decline. He consistently trumped the market by trading in and out of stocks quickly.
Cohen's strategy was really based around what people like to call an information-driven hedge fund. So he was all about trading around, say, the quarter.
Intel exceeded Wall Street's earnings consensus by 3
Intel
cents a
computes
share.
a loss in the second quarter with revenue.
When a company announces its quarterly results, stocks will either go up or down based on that company's earnings.
Up 52% from a year
Trading
ago.
up in pre-market.
A new phone coming, a new iPad coming. That June quarter number was scary.
And Cohen's strategy was to get as much information as possible, be able to, make money either on the upside or the downside, depending on how a company's earnings come out.
The question is he a phenomenal trader, or does he have information that the public doesn't have? So, insider trading, which is illegal. It is summer of 2013, and while SAC is going strong, Cohen has a target on his back from the SEC. Several SAC employees have been convicted for insider trading in the past few years, and it seems like it is only a matter of time until they come to Cohen too. As he's getting ready for an August of booze-filled fiestas in the Hamptons with his fellow billionaire brethren, he gets slammed by the insider trading charges. So Cohen gets visited by the feds.
The feds decide they're going to go after Cohen. They charged one sort of current and then one former portfolio managers who had worked directly for Steve. I think they had a lot of hope that one of those people would flip and cooperate and testify against Steve. That did not happen. Steve Cohen's lawyers went down to meet with Preet Bharara, who's leading the case, and they made a big presentation for the government. Basically, their goal was to convince the government that they could not win at trial. And they essentially said, listen, you just don't have any witnesses who will testify against him. You don't have any wiretaps that show that he knew he was trading in inside information. You kind of have nothing. So they decided instead that they were going to charge SAC Capital, which is Cohen's fund, instead of him.
By the end of the year, he pleads guilty and SAC pays out a monstrous $1.8 billion fine to the SEC, the largest in history. Failure to supervise is what the feds nail him on. So Cohen dodges criminal charges, but it looks like his hedge fund career is going bust. The trust with institutions, partners, and investors is damaged. Is his unprecedented trading run coming to an end? Of course not. Cohen moves on from his failures and makes a psycho comeback of epic proportions.
One of the biggest names, if not the biggest, at least when it comes to hedge funds, Stevie Cohen, now unshackled by the SEC after being suspended for 2 years from the hedge fund industry. He's starting off the new year with a bang as he prepares to open up a new Wall Street firm.
From the death of SAC, Cohen's new Point 72 emerges from the rubble. This ambitious new fund specializes in discretionary long-short, but also eventually adds a venture capital arm, along with an internship academy too. Discretionary long-short is a highly popular investment strategy too in the hedge fund world, where portfolio managers simultaneously take long and short positions in stocks in usually similar industries to capitalize on relative over or undervaluation of stocks. It is very simple in theory.
They are going to buy a stock they believe is underperforming and is going to move higher, and they're going to short a stock they believe is outperforming and is going to move lower. So the idea is you make money on the short side, you make money on the long side. It's a mean reversion, a double-sided mean reversion trade, if you like. You're shorting the overvalued, you're buying the undervalued, assuming they're both going to come back to a mean. You make money on the short, you make money on the long. That's kind of, in theory, what they are looking for.
This strategy, combined with Point 72's global macro strategy, which is when a firm makes investments based on macroeconomic indicators, sets Point 72 up for its growth to the gargantuan $24 billion portfolio it boasts today. It seems like Cohen is back with even more success than before, and all in a legitimate way too. But he is about to clash with one of the most powerful players in all of the market, a deep state entity with almost unlimited power and influence.
Wall Street bets. By turning stock options from a hedging strategy into a glorified Betfred, people on the subreddit have managed to convert the entire stock market into their very own personal casino.
Retail investing degenerates. Silly Cohen bets against the indomitable spirit and unbreakable strategy of the Wall Street bets militia. Cohen is one of the several hedge fund managers that were heavily shorting GameStop stock, GME, when retail investors initiated the infamous short squeeze. Investing genius Kramer explains how it works.
This GameStop is really something we must talk about. Wall Street bets. It's on Reddit. Now, a lot of younger people read Reddit. I read Reddit because younger people read. Now, they've got a community of very rabid investors who will choose individual stocks and then run them up as a group with commentary about how much they love them. Now, they don't target just any stocks. They go after the ones that are heavily shorted in order to come up with a short squeeze and run them until the shorts have to cover their positions. The only thing a short seller can really do when targeted is to throw in the towel. You just have to cover your short, meaning buy back the stock to close out your position before you run out of money.
Cohen loses around 15% in .72's portfolio value, a meme stock play of epic proportions, as .72 has significant short positions in GameStop via their investment with Melvin Capital. This fund was a leader, or should we say a big loser, in holding the most GameStop shorts. Does this destroy Cohen's already damaged reputation as a hedge fund manager? Of course not. Retail investing goats always rebound. When the squeeze happens in 2021, Cohen had recently bought the New York Mets for $2.5 billion. His work with his new team during 2021 means the rebuild of a struggling franchise, bringing them to a point of playoff relevance today.
Coming on and being able to do this for you personally, and what is that feeling like for you?
This is a lot of fun, right? I mean, it's a lot better than losing, right? This is just the first step. If we can win the division, that'll be great, and then we'll see what happens in the playoffs. I think this is a team that can go really far.
But maybe even Cohen can't save the poverty franchise that is the Mets, unless maybe he finds some inside information about the Babe Ruth coming out of the Little League World Series, as the team did not go really far and ends up losing in the first round of the playoffs. However, Cohen still pulls off a massive accomplishment in building a playoff caliber team in the Mets, a franchise with significant woes in recent history. While the man has seen setbacks, it is impossible to not acknowledge his high-performing personality in always getting back up and making things happen on the biggest stages. Which brings us to the grand finale. So we know we can't let setbacks get us down now.
So my self-talk is me reminiscing back on the struggle to get to this moment. And that tells me we're not quitting today. Not today.
But you might be thinking, what is the specific roadmap that we can learn from Cohen to make it to ultra high net worth status? One route could be taking a course with a proprietary trading firm. A more reliable route could be going to a trading desk or an asset management shop after graduating university. All of that is better than relying on technical analysis from TikTok videos, the finance bro version of astrology signs. What nobody will teach you though, unfortunately, is how to manage a baseball team successfully. I guess we will just have to wait and see if Cohen can show us with the Mets next season. In all, learn, have perseverance, and use insider info, invest in undervalued businesses to let your money work for you.
Life is competitive. I don't know exactly what people are taught these days, but it is. You should get used to winning.
Steven Schwartzman is the 37th richest person in the world, worth a whopping $26 billion.
The first rule is don't lose money.
He rubs shoulders with the world's most powerful leaders. And yet, he's not a household name. In fact, outside of finance, no one's even heard of him. So So how does one of the most influential, well-connected people stay in the shadows? How did he amass such a staggering fortune and the power to get a meeting with any president anytime he wants? One word: Blackstone. The largest alternative investment empire in the world. One of the most powerful private equity firms, its reach spans far and wide, and Schwartzman sits comfortably on the throne. But it wasn't always like this. He had to grit his teeth through hardship. Schwartzman's road to world domination is paved with embarrassing failures, and he's still clawing his way there.
We lost all of our money. And this was beyond traumatic. I don't like failure. I'm not used to it. We all have it.
Stephen Allen Schwartzman is born into a regular middle-class family. They personify the American dream. Through hard work and sheer force of will, they've built a home goods business from nothing. With time, it's become one of the most successful in the area. Entrepreneurship clearly runs in the blood. Stephen strikes out at the age of 14 and starts his own company, a lawn mowing service where his brothers mow and he drums up business. He also sells candy door to door, but he still spends most of his time in the family shop. For 10 cents an hour, he does odd jobs, everything from selling handkerchiefs to packing curtains. You see, Joseph, Stephen's father, inherited the store from his dad. When he was young, he helped his own dad run it, and now Joseph spends his life running it. But young Stephen hates the store. He spends years doing the same mind-numbing tasks. It feels beneath him. Still, Stephen recognizes the success of the family business and he senses an opportunity. If it works in Pennsylvania, why not Chicago, New York? But when he brings these expansion plans to his dad, he won't hear it. He tries explaining it, but young Stephen can't wrap his mind around it. And Schwartzman wants to build an empire, and he's ready to fight wars to get there. Stephen doesn't understand how his father can be content with a mediocre life. He has wild ambitions, dreams of grandeur, and he will soon prove that deep inside he has what it takes to become a successful finance entrepreneur. In high school, he runs for president of the student council, that is.
You did something that's quite audacious. You applied to Harvard, Yale, and I think Princeton, and Harvard did not accept you. So you then got out some coins and called the director of admissions at Harvard and said you made a mistake.
In 1966, he ends up going to Yale University, one of the most prestigious universities in the world. There, he starts a ballet society. The guys and girls of Yale rarely interact, and his club is a huge success at bringing them together. Later, he even fights against a 268-year-old rule that stops women from spending the time at a male dorm. And to everyone's surprise, he wins. But to no one's surprise, student pregnancies rose dramatically that year. Needless to say, he becomes very popular at Yale, even getting invited into one of Yale's most secretive and exclusive societies, the Skull and Bones Club. In 1969, he graduates from Yale, does a brief stint in the army before finally landing at his dream university, Harvard Business School. All roads lead to Wall Street, and armed with his master's in 1972, Stephen's finally ready for it, or at least he thinks. Little does he know he's about to be challenged with one of the hardest tests finance has to offer, an investment banker's trial by fire. Stephen's first job interview is with Donaldson, Lufkin & Jenrette, an investment bank. When they tell him the pay is $10,000 a year, he has the balls to ask for more. Why? Because he knows someone else from Yale that works there and earns $10,000. Stephen wants to be the highest paid from his class. And you know what? They give it to him. After Donaldson, he finally lands in the company he'll spend years at, Lehman Brothers. Yeah, that Lehman Brothers. As soon as he steps foot inside, he's put through a meat grinder. His training is brutal and his superiors demeaning. When he hands in a huge 68-page report on an airline company, he's immediately shouted at over the phone. Why? Because he made a typo on page 56. Then, when he sits at one of his first board meetings, filled with his fellow colleagues, a partner at Lehman by the name of Lou Glucksman turns to him and screams, "Who the f*** are you?" Instantly, everyone's eyes are on Steven, and Steven's eyes widen like a deer in the headlights. His heart pounds, and his breathing becomes wrecked. What the hell did I do? Schwartzman wonders.
And why aren't you sitting up?
Steven's first years in Lehman make the army look like child's play. Everything he does is put under a microscope and scrutinized. Any mistake, no matter how small, is cause for a severe, degrading verbal lashing by the higher-ups. Pressure like that is enough to break most men, but for a select few like Schwartzman, it makes them tough as nails. Still, Steven was relieved when a man called Pete Peterson, yes, I know how it sounds, becomes Lehman's new CEO. Pete asks him for help on a project, and when he asks for a meeting a week later, Steven's blood probably pumps as he can only imagine what mistakes he's made, what verbal assault he's in for now. But Pete is strangely happy, even saying, "Any friend in a place like Lehman is gold." Now imagine being friends with the CEO. Still, not even the CEO will be able to stop the coming storm. For now though, Steven enjoys clear skies. With Pete as a friend, Steven's rapid rise in Lehman is unprecedented. A rise many finance chimps can only dream about. It's been 6 years since he started at Lehman and he now commands respect in the firm. Hell, he's even up for partner. But first he must prove himself. Out of nowhere, a multi-million-dollar deal falls on his lap. It begins with a phone call. Who's calling? The CEO of Tropicana, an orange juice company.
Tropicana Pure Premium Orange Juice.
Steven had done some small-time work for them, but now buyers were circling, and they needed advice on which offer to take. A huge responsibility, the biggest deal he'd ever worked on, just fell on his lap and Steven's drastically underprepared for it. So what does he do? He books the next flight to their headquarters. By the time he's arrived, he has an hour to prepare before the whole board arrives. And he's freaking out. He has to advise on a multi-million-dollar transaction with only the stuff he's found out on the plane. The weight of the moment is enough to crush him, and with a deep breath, he speaks. Not long after, Steven's back at home, sitting in his chair, fire crackling, whiskey in his hand, jazz music playing, and him with a blank expression on his face, shocked, not quite able to believe it. He had done it, executed a $500 million merger, all on his own. Not bad for a guy who used to sell handkerchiefs for 10 cents an hour. Almost everyone calls to congratulate the merger hotshot. Almost everyone.
Hello? Who the f*** do you think you are? You sold Tropicana? I was working on a deal to buy them. We're firing you. On Monday, you're history.
The vice chairman of Lehman is enraged. He'd been working on a deal to buy Tropicana for another client, and now that it was sold, he could kiss his deal goodbye. Monday comes like a death sentence. The vice chairman of Lehman storms into the office and he's out for blood. He calls for a meeting with all the other senior members of the firm. Declaring foul play, he demands the company fire Schwartzman. Luckily, Pete's also in the meeting and makes it very clear Steven Schwartzman isn't going anywhere. The Tropicana deal seals it. Steven makes partner at the young age of 31. It's everything he's ever wanted, but his celebrations are cut short. A coup is about to take place. Over the years, Steven has grown closer and closer to Pete, the CEO, and under Pete's guidance, the firm has had record-breaking year after record-breaking year. Still, Lou Glucksman, remember him? Well, he hasn't lost any of his temper. In one infamous incident, he ripped a company phone from the wall and used it to break a mirror. Ah, Wall Street. Lou slowly starts to pressure Pete. First, he wants a promotion, and Pete makes him president. Then, he wants to be co-CEO, and again, Pete gives it to him. Then finally, Lou decides he wants the whole damn pie. He wants to be CEO, and he wants Pete gone. Lou had rallied the other partners behind Pete's back, and now the time had come. So Pete gives Lou the last thing he's got. After 10 years of service, Pete leaves Lehman and Lou is crowned the new CEO. And Pete tells Steven that he's tired. A civil war would destroy the firm and he'd grown tired of running it anyway. It wasn't long before things took a turn for the worse. The revolutionaries, led by Lou, make a series of bad choices, and within months, Lehman is in serious financial danger. None of the partners dare challenge him, and so the ship heads towards an iceberg at full speed, while everyone on board pretend it's all clear ahead. Well, long story short, just as Lehman's about to fall into ruin, American Express swoops in and buys them out. A buyout facilitated by Steven. Luckily, Lehman would never come that close to disastrous ruin ever again. Steven has come to hate Lehman, now more than ever. He's 38 and finally free. Now he's a family man with 2 kids. Maybe it's time to settle down, but he's far too restless. Perhaps he should work for another company. Also no, he could start his own company. Now that just might work. Then, on the night of the announcement of the sale of Lehman Brothers, Steven goes to see Lou. The building is practically empty, but he spots Lou sitting in the dark of his office. His band of revolutionaries has deserted him, along with the partners and everyone else. He's alone, and when he notices Steven's presence, he calls him in. He talks about how he's ashamed of himself, how he's brought Lehman to its knees, and how he wants to end it all. The fact that he'd screamed at Steven in that first meeting, the fact that he'd ousted Pete and kamikazed Lehman, it must have all washed away in that moment as Steven takes a seat beside him in the dark.
I had done a lot of work while I was at Lehman with the chairman of the firm, who was a fellow named Pete Peterson. And Pete and I enjoyed working together. And so he had left in a power struggle a year before we sold the firm in '84. And so I decided that after we sold the firm that I wanted to join Pete, and Pete decided he wanted to join me, and what we wanted to do is to work together again. It was sort of a logical thing to want to do with one's life, and it had a good feeling, which is sort of when you do things in life that have a good feeling, it tends to work out well.
Lehman has shown Schwartzman the highest of highs and the lowest of lows. But Steven is ready to start his own business, the one that will shake the financial industry to its core. Now free from Lehman, Steven buddies up with Pete once again, and they decide to strike out and build a firm from the ground up. They sit at a restaurant every day and talk for hours on end about what kind of business they'll open.
Wonderful strategic plan, and we came up with a good strategic plan to do advisory work to pay the rent, to go into the buyout business because it looked like a pretty easy way, frankly, to make money in the mid-'80s. And then the third piece of our strategic plan was to attract very gifted people.
Steven wanted to call their company Peterson and Schwartzman, but Pete didn't like it. If the company flopped, their names would be front and center. After mulling over what to call their company for a while, the pair eventually decide on Blackstone. They sign the lease on an office, get a receptionist, print some business cards. Priorities. Feeling good about their progress and confident about the business, the duo put up $200,000 each. Now, it was time for the grand opening of Blackstone Group. They buy a full-page ad in the New York Times, and to drum up business, they write letters to everyone they know. all the contacts they'd accumulated in their combined decades of working. They tell them that they just love to do some business. Steven sleeps well that night, confident that the next day would bring a flood of work. But nothing happens. Not tomorrow, nor the day after. Days turn into weeks, and the silence is deafening. A gut-wrenching fear takes hold. And just when things look their darkest, the sun rises on Blackstone. The phone finally rings, and some work begins to trickle in. Small, insignificant work they might feel is beneath them, but it pays all the same. While advisory work keeps the lights on, Schwartzman senses an opportunity for something bigger, something completely different to what they are doing. It's so crazy, it just might work.
So you went into the business of raising a fund. You tried to raise a first fund. How hard was it to raise your first private equity fund?
I think if you like pain and suffering, it was really terrific. Now imagine this, couldn't happen today. There are two individuals, neither of whom had ever made an investment, announced that they wanted to raise the third biggest private equity firm in history and massively larger than any other first-time fund. So only two demented people would actually think they'd get a good reception.
The ambitious Steven and Pete now want to launch a colossal private equity fund. But wait, what even is private equity? In a nutshell, private equity is to companies what fixer-uppers are to houses. You take a huge stake, often a majority stake, in companies that are not performing that well, and you fix them up. You give them some fresh coat of paint and hopefully sell them for a profit a couple of years later. Along with MTV and Denim Shorts, private equity is all the rage in the 1980s. The fund is a way for others to get a piece of the action and for Blackstone to build a war chest big enough for the big boy moves. Before they can even start being fixer-uppers, there is one teeny tiny problem. How the hell are they going to convince people to invest?
We just started out. We made an announcement that that's what we were doing, and then we went out into the world of endless rejection. And I encourage you to do that sometimes, because if you ever had an ego, it's like, you know, the sandpaper. You have nothing left by the end. And you make every elementary mistake you can make, which is you start with your closest relationships first, where you barely even know what you're marketing. And you go to them and say, oh, please rescue me. And they say, well, what's the answer to these 15 questions? You don't even know the answers.
Eventually, though, they manage to sign some investors. MetLife puts down $50 million and New York Life puts down $25 million. On one condition: the total fund size has to be $500 million. If not, they pull out. Sales is one of the most brutal fields out there. Cold rejection after cold rejection. But the duo do what they have to. They fly from town to town and meet with countless people and organizations. 6 months of sales hell, and they hadn't secured a penny for the fund. No matter who you are, that has to rattle you. Shake your self-belief.
I realized that the asset that we basically had is, as a result of the time at Lehman, we knew so many different companies, so many different people, but they were all larger ones. So if we had a small pool of capital, my partner wanted to do 50 million and learn. I said, let's not waste our time learning.
In the end, it comes down to just how badly you want it. Close to their breaking point, they arrange a meeting with Prudential Life, the #1 financier in those days.
We were over at Newark on a Friday, having lunch with the Chief Investment Officer, and he was having a tuna on white bread cut across. And I'm busy pitching this private equity fund, and you can share part of our advisory profits. And he keeps chewing it. His Adam's apples going up and down, and I keep doing my thing. Finishes the first half of the sandwich, gets through the other half, halfway, and he looks over at me and he says, I think that's a good idea. Put me down for 100. And I can still remember that moment. Did he actually say he's going to give us $100 million, the #1 investor in the world. So if he gives us money, other people will follow him. I just didn't want him to choke on the rest of that sandwich.
And Schwartzman predicted right. He knew that all they needed was one big, credible investor. Then others would pile in to invest. And they did. Eventually, they got the money they wanted. Now, it's time to use it. So how did Schwartzman and Pete facilitate the rise of their sprawling shadow empire?
I only like to go forwards.
Every finance geek knows if you want to make money, first you need some. Nowhere is this truer than in private equity. With their billion-dollar PE fund, they had a war chest, and Blackstone intended to make a splash. Using detailed analysis, the fixer-upper scanned the landscape for opportunities. Now in the big boy leagues, Blackstone had a whole new variety of moves they could pull to turn a profit. Instead of just fixing up companies, they could take big industry players and consolidate their power. Like how in 1996, Blackstone partnered with Löwen Group, the second biggest funeral and cemetery company in America at the time, and started buying out the competition. First Rose Hills for $240 million, and then Löwen's biggest competitor, Prime Succession, for a whopping $295 million. They did it again with Allied Waste in 1997. First came the partnership between Allied and Blackstone, then the buyout of Browning Ferris, one of its main competitors. Through this strategy, Blackstone were able to shape industries and always make sure their horses came out on top. Meanwhile, those that invested in their PE fund happily watched from the sidelines, enjoying more than 20% average annualized returns. This sort of success didn't hurt when Blackstone raised other PE funds. Investors came in droves, and in 1997, Blackstone raised a mammoth-like $4 billion PE fund.
Shut up and take my money!
Arguably, however, Blackstone's greatest mark has been on real estate. Through their REITs, or Blackstone Real Estate Income Trusts, Blackstone has become the largest commercial owners of real estate in the world, with numerous high-profile acquisitions like Hilton Hotels, Bellagio Resort, Bern Leisure. They have also gobbled up vast swaths of American homes, almost 300,000. As American house prices shot up in recent years, the now behemoth of a company has profited massively, and their breed has ballooned to hold $69 billion worth of property, making it one of the largest REITs ever.
So imagine buying $40 billion of real estate one day and selling 20 of it the same day. The most amount of real estate that was ever sold in history in a year was 10 billion. So we were doing 6 times what anybody did on one day.
Blackstone eclipsed all other private equity firms, becoming the $100 billion titan it is today, that every young, ambitious chimp wants to work at eventually. With its meteoric rise, it also catapulted its founders to stardom. While Pete would eventually retire, Schwartzman still mans the helm of Blackstone, a multinational empire. His influence spans wide, and political leaders such as Obama, Trump, and even Angela Merkel have sought his counsel. If anything, the Schwartzman story shows one thing: that success only comes from blood, sweat, and tears. And if you want it, you'll need the tenacity of a fighter, or of a boy sweeping his dad's home goods shop, dreaming of a life with more, much, much more. When he least expects it, a knife pierces Jamie Dimon. Betrayed by his closest friend and ally, he's left for dead, all in the name of power. For a time, he was Wall Street's golden boy, the one who could do no wrong. Together with Sandy Weil, they had built a monster, Citigroup, the largest bank in the world at the time, worth a staggering $800 billion. Even more impressive, they'd built it effectively from scratch. Sandy Sandy was the seasoned veteran and Jamie the talented protege. Over more than a decade, the pair turned a small Freilander into a multinational conglomerate. Jamie's learned everything from Sandy, the tricks of the trade and the ruthlessness one needed to thrive in a dog-eat-dog world. Little did he know that following their greatest victory, that ruthlessness would fall on him.
You got a call to go up to a retreat they were having, and they got you in there and they said you're fired. Were you shocked?
Fast forward 10 years and America is in turmoil.
We're down by between 3 and 4.5%, 16%, 18%, 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Greed has gotten the better of American finance, and now their reckoning is upon them. Titans, once thought untouchable, now teeter on the brink of collapse. For years, financial institutions have played fast and loose. Caught up in a wave of mortgage madness, Wall Street had become so blinded by profit that they'd forgotten to bring a life raft. As the grim reality sets in, so does widespread panic. While everyone scrambles to batten down the hatches, one man welcomes the coming crisis with open arms. Jamie Dimon, CEO of JP Morgan Chase, can't help but smile because he knows that this is the moment he's waited for his entire life. No one knows it yet, but he's about to be crowned undisputed king of American banking.
You had better be a little tough in this world of ours because you will be criticized when you take jobs of leadership. I bleed JP Morgan blood. I wear the jersey of this company. If I caught you doing that, I'd fire you. You have to kill bureaucracy, cut across hierarchy. And that, by the way, is the hardest job you are going to face. Right there. The road to hell is paved with good intentions.
Jamie Dimon grows up with a silver spoon. Everything comes easy for the young boy and Jamie never wants for anything. He goes to a private all-boys high school called Browning. He even vacations on the west coast of France. In the lottery of life, he's hit the jackpot. Charming, confident, good-looking and affluent. Women want him. And men want to be him. Life is perfect. What more could one want? Usually, extravagant upbringings tend to breed spoiled, indulgent, trust fund brats. But Dimon has no intention of taking it easy. In fact, he rolls up his sleeves and gets to work. He graduates from Browning 4th best of his class. Then he goes to Tufts University, studying psychology and economics and graduating summa cum laude. And after Tufts, he gets into the highly acclaimed Harvard Business School. And when he graduates in 1982, he's named a Baker Scholar, an award for the top 5% of graduates. You see, Jamie Dimon is a rare breed. The kind that, even with more money than Escobar, they still work 80-hour weeks. He has a burning desire to succeed, an inexplicable urge to make a mark on the world, to leave a lasting legacy.
If you want to be a leader, it can't be about money, and it can't be about you. It's about eventually what you do what you leave behind and what you did when you walked the planet. Teachers, politicians, scientists, generals left this planet better than us, and someone said, and I'll tell you what I think about it, said, what would you want on your tombstone? Think about that when you become a leader. What do you want on your tombstone?
Those kinds of people, ones like Jamie Dimon, those are the people that shape the future. But first, we must visit the past. Jamie's grandfather came to America as a penniless immigrant. He had spent his entire life in Greece, but fled when the country became embroiled in war with Turkey. He left for greener pastures and in 1921 arrived in New York. Although a banker by trade, Jamie's grandfather simply took whatever work he could get, and so he became a restaurant busboy. But deep inside, he still wanted to be a banker. The problem was, back then, nobody wanted to hire Greeks. So he changed his last name from Papademetrio to something that sounded a little bit more fancy, Dimon. Luckily, he managed to maneuver back into banking. He started working as a broker for Shears & Hamill and made it big. His son and Jamie's father followed in his footsteps, working as a banker for Shears & Hamill too, and the fabricated Dimon name began to mean something. It would be Jamie that would make it famous though. Jamie Dimon was always fearless. He challenged Harvard lecturers. In one famous incident, he stood up in front of an entire class and told the lecturer, "If you don't understand this, you should probably not be teaching." While working his first job as a consultant, he was asked to work on a project throughout the weekend. He did it, no questions asked. But the following Monday, no one even bothered to look at it. So he faced his boss, telling him, "You ruined my weekend. Because of that, I will never work for you again." Although fiery and rebellious, Jamie diligently works towards his goal, and no one he vowed would get in his way. Although, as we shall soon see, many people will certainly try. Dimon is on the fast track to financial stardom. With a banking pedigree and history of academic success, he's flooded with job offers once he graduates. Goldman Sachs, Lehman Brothers, and Morgan Stanley. Accepting any of these offers would be a golden ticket to the big leagues. A golden ticket so many students dream of, spending countless hours on Wall Street Oasis forums, debating all things relevant regarding finance careers. Some of you know that I think Wall Street Oasis courses are the best way to get into a finance career, and this is why I teamed up with them. Their elite modeling package is the best thing that could happen to any numbers noob. Not only will you learn how to excel like a young Jamie Dimon, but also how to build an LBO like Henry Krevis, how to do M&A modeling, how to do valuations, and most of my mentees in the Giga Uni that want to go for IB prepare with the investment banking interview prep course by Wall Street Oasis. They show you exactly how to nail the technical interview questions, how to not come off like a psychopath in behavioral fit interviews, and how to answer the question, why Credit Suisse or any other bank. Needless to say, some of them are now working at Blackstone, Goldman, JP, or Citi. And the best thing, now you get 77% off. Huge W. Click the link in the description and treat this as an investment into your future. Because from there, it's easy. You join a big bank, work your way up, and eventually make partner. Safe, predictable, and boring. Just as Jamie's about to choose Goldman, he gets one last offer from an old family friend, Sandy Weil.
Sandy I got to know him a little bit. My dad was a broker at Shearson Hamill. I'd had a summer job there. He liked the fact I went to Harvard Business School, and his pitch was this: I'm not going to pay you the same. He'd try to hire me as an investment banker at Shearson.
You see, no one understands banking better than Sandy. Descended from immigrants himself, Sandy has developed a reputation as a ferocious banker, one to be feared as much as respected. Over the course of years, he has built the second largest brokerage firm from the ground up. Remember Shearson Hamill? The firm that Dimon's father and grandfather work at? Sandy built the business that owns them. With a flurry of strategic acquisitions, Shearson was put on the map as a serious player, and Sandy was the mastermind. Then, in 1981, Sandy did the unthinkable. He orchestrated a billion-dollar merger with Shearson and American Express, forming the juggernaut, Shearson American Express.
Minds over money.
Sandy was a force of nature, practically unstoppable, and now the chairman of this new enterprise. After the merger, Sandy makes Dimon's dad vice president in the new company. Then he turns to Jamie.
But he said, come join me here. I don't know what it's going to be, but at least you'll see what a big company works like. What I loved about, first of all, he was very down to earth. I mean, there are flaws in the man, but he's very down to earth. And I really wanted to help build something. I mean, that was my initial thing. Like, I want to build something. He had built Shearson Hamill from the, Shearson Hayden Stone. A lot of acquisitions, kind of from the ground up. I love that kind of story.
Every single Harvard graduate would have gone with Goldman.
I basically politely told him no, because you just learn so much more, and you get paid more at some place like Goldman Sachs.
But there's something about Sandy, a glint in his eyes, a confidence in his walk. So Jamie takes a gamble. He takes a step off the well-trodden path to success, and for better or worse, teams up with Sandy. Little does he know, this small action will change the fate of American banking forever. The Wonder Duo's ride at American Express is short and not so sweet. Jamie is having the time of his life, while his banking chimp peers fetch coffee and newspapers for their bosses. Sandy shows Jamie the works. At the age of 23, Jamie is given a rare look into the heart of banking, and he gets to work on deals. Real life, actual deals. Tectonic company mergers and acquisitions so large they're dizzying. The bread and butter of empire building. Sandy, in return, has finally found a protege that can keep up. Jamie's a natural. Hell, Sandy even sees a little bit of himself in the young boy. Diamond has a fancy new title, responsibilities, and he's soaking up Sandy's teachings like a sponge. That is, until 1985, when Sandy, who seemed like he could do no wrong, was finally beaten. The merger with American Express had proven to be poisonous. Sandy is ousted by the company and forced to resign, but American Express allows Jamie to stay. In fact, they sweeten the deal with a promotion, Vice President. It's a big offer, unheard of for someone Jamie's age. Taking it would mean one step closer to his goal, and his mentor's recent defeat brings up questions. Is Sandy's decade-long career of winning finally over? Now 52 years old, is the old pit bull nothing but a washed-up hack? While staying at American Express seems obvious to everyone else, Jamie's faith is unwavering. He thinks Sandy still got it.
When he left, I left with him. I was offered a bunch of jobs to stay and stuff like that, but he said, we're going to find something, build something great.
So he walks away from American Express and follows his mentor out the door, not knowing what's waiting for him around the corner. Jamie walks away from American Express and he doesn't look back. They were going to build an empire. First item of business is, well, getting one. To conquer the world, they first need to get their hands on something, a business they could start with and build up. They need a bargain. Jamie thinks that hidden somewhere is something no one has seen before, a powerhouse of a company everyone has overlooked. So he pours over prospective companies to buy. Sandy, meanwhile, follows a couple leads, crumbs of potential deals here and there. But every time he goes to investigate them, he comes home empty. No matter how slim the odds, they are going to make this work. They have to. This goes on for more than a year, however, with nothing to show for it. That's when worry turns to panic. Everyone had told Jamie that he should have stayed at American Express. How could he have been so stupid? He thought Sandy was going to lead him to the promised land, and now it looks like he's followed him to the end of the earth, or at least the ends of his career. And that, my friends, is when the phone rings. In the 1980s, computer giant Control Data starts suffering huge losses year after year like blows to the head. Nestled within Control Data is another company called Commercial Credit. Originally, it was created to support computer sales. By allowing customers access to credit, more people would buy computers. It has evolved since its creation. Now it's made a name for itself as the lender that will lend to almost anyone. Unlike its parent Control Data, Commercial Credit is profitable. But as the firm's treasurer explains on the phone to Sandy and Jamie, if Control Data sinks to a watery grave, it will drag Commercial Credit with it. But the treasurer also explains correctly there's an opportunity here. Because Commercial Credit is a good business, it can stand on its own 2 feet if given the chance. At first, Sandy's hesitant, but Diamond pours over the numbers and he finds that the firm is actually a diamond in the rough. Get it? Diamond in the rough? Anyways, Commercial Credit's poorly run, full of inefficiencies and inflated operating costs. The cash-distressed Control Data is happy to make a deal, and the Wonder Duo buys their company. The deal barely makes a ripple in the financial markets. A couple newspapers print a few lousy sentences on it. Compared to the blockbuster deals happening in the 1980s, Commercial Credit is a footnote, but a new chapter is about to begin.
When you set out at Commercial Credit, Jamie Dimon was your then assistant and
correct.
Did you believe that you could put together deals that would lead to the largest financial services company in the world?
Obviously not. If I believed that, I would have been taking something.
Sandy is appointed CEO of Commercial Credit, and Jamie's loyalty is rewarded as he is made Senior Vice President. Heck, it's no American Express, but it's theirs, and it's theirs alone. And while congratulations are in order, celebrations are put on hold. Commercial Credit is bleeding money by the minute. Together with his protege, Sandy Whale readies to give a masterclass in turning a company around.
Well, I think first when we started with Commercial Credit, it was an undermanaged company, so it wasn't very hard for us to look at the expenses, get out of some businesses that made no sense, and emphasize the consumer lending business, which was a very good business.
First, they slash costs, firing more than 10% of the employees and cutting executive benefits like company cars and newspaper subscriptions to the bone. In a trademark Sandy move, he changes employee incentives. Previously, bonuses were distributed pretty much equally. Now, the best performing branch would get double their salaries as a bonus, and the worst performer would get nothing. Sandy also leads the charge in assembling the A-team for the company, advertising Commercial Credit as a retreat from the bureaucracy and office politics that plague other firms. Does it work? It does. Their first year, Commercial Credit rakes in $100 million and they more than double return on equity. Commercial Credit is running like a Swiss watch. That is, step one complete. They have a launch pad to build the empire the two always dreamed of, and Sandy has the experience. Now it's time for step two, expand.
Basically what we did was look to grow the company a step at a time. And you never know, what's going to be down the road. But if you run a very good business in good times, then you're going to be in a position to take advantage of things when they change.
And so, Commercial Credit begins hoarding cash and prepares. The men pray for rain, and then comes thunder. On Monday, the 19th October 1987, a streak of lightning strikes the heart of Wall Street. Black Monday.
There was guys with their heads down, a few people crying because they'd lost everything.
Well, you're thinking, how much lower can it go?
It was the only time I've seen fear take over greed.
I've often said that it was the most frightening moment in my life.
While the markets are in turmoil, Sandy and Jamie can't believe their luck. With nothing in their way, Commercial Credit goes on a rampage.
We were opportunistic deal guys who ran businesses. But that little company bought Primerica, Smith Barney, Shearson, Solomon, Travelers Property Casualty, and it went from being worth $800 million to $75 billion.
It's 1998. After a more than decade-long spree of gobbling up company after company, Commercial Credit has transformed into something unrecognizable. In fact, it's not even Commercial Credit anymore. It's Travelers Group, named after one of the companies they bought out. In the largest corporate deal ever, Travelers Group and Citicorp, another huge company, merged to become a Goliath named Citigroup. Citigroup is staggering in its sheer size. It will have $700 billion worth of assets, 100 million customers in over 100 countries. By total assets, it's the biggest bank in the world, dubbed the first true global financial supermarket. Furthermore, it's the 17th largest company in the world. Total dominance. Citigroup has a chokehold on American banking and rules with an iron fist. Soon after the merger, Sandy calls Dimon into his office. For 12 years, Dimon has sharpened his abilities and built his own reputation as an enforcer. As Commercial Credit rose, Dimon ascended with it. He was promoted again and again, from CFO to CAO to director. After their greatest success yet, Jamie expects one more promotion.
I guess Sandy went to John Reed, who was then the CEO of Citicorp, and said, let's have a merger, co-CEOs, and John Reed said, okay, and you were going to be the president under the two of them.
Instead, Jamie hears words that will haunt him.
And they said to me, well, we've made some decisions, we want to share them with you. I said, yes. And they said, well, we're going to have this person run the Global Corporate Investment Bank. I said, well, that's kind of my job, but I was shocked who it was. They said, we're going to have this person do this, and we want you to resign.
A 15-year-long mentorship, 15 years of Dimon and Sandy against the world, put to an end in an afternoon.
He had no warning.
Not much.
Rumors spread. Why had Sandy fired Jamie? Some speculated that it was because Jamie hadn't promoted Sandy's daughter, or, as some cynics hint, Sandy began to feel threatened by Jamie's tremendous rise within the company.
Some said you were jealous of the fact that he was getting a lot of the credit, that you were the guy who would think up the deal and he was the guy that would make it happen.
Or Jamie's outspoken complaints about the merger.
I said to him, you guys are crazy. This will destroy the company. The second you do this, people are going to be building trenches and stockpiling ammunition. And by the time you two guys figure it out, a lot of good people have left the company, not realizing I'd be the first casualty, by the way. But they were so, and they kept on saying, well, it works for me, it works for me. And I kept on saying, it doesn't matter if it works for you. It matters if it works for the clients and the employees.
Either way, Jamie storms home, his face burning in fury. It's the turn of a new millennia. While some people party and others light fireworks, Jamie Dimon broods. Jamie's been unemployed for more than a year since Citigroup, not due to lack of interest. He's received plenty of offers, Amazon, Home Depot, but he wants back in the banking game. When one door closes, another opens. Bank One, a Midwest giant and the 5th largest bank in America, is in dire straits. Following a slew of acquisitions and years of rapid growth, Bank One has hit a brick wall. They grew too quick, and now the countless companies in their ranks are beginning to sour. Their share price tumbles on the back of consecutive losses. CEO John McCoy, unable to rectify the situation, is booted. Leaderless, Bank One drifts. The board spots that Jamie is exactly what it needs. The man that will do the hard, necessary thing. Bank One has grown fat and comfortable at the top. It needs someone that will hold its feet to the fire and whip it into shape. Jamie the Enforcer doesn't let the opportunity slip by and becomes Bank One's CEO. When he announces it, he says, quote, "We will give Citigroup a run for its money."
I wear the damn jersey. I'm not a hired gun. Okay, I'm going to bleed for the company and give it everything I got and hand it off to someone else.
True to his word, Jamie's first action is to buy 2 million shares of the bank. It's all or nothing now. Taking a page out of the Sandy playbook, Jamie comes swinging straight out of the gate. In an effort to cut costs to the bone, Jamie channels his inner Carl Icahn, whom we have also a video of, by the way, and sacks 12,000 employees. He brings talent from Citigroup, people he trusts, and changes bonus structure just like before. The best get everything and the worst get nothing. Finally, he turns his attention to management.
The board didn't want to make the changes. The management didn't want to make the changes. As a matter of fact, the management said, it wasn't my fault. I don't know who else's fault it was. At one point, I cut the size of the board. I went to the management team. We cut the 100% of their bonuses the first year. We took away their pension plans, their cars, their clubs. I made a lot of them go with me to every site where we're laying off people and say, we're sorry that we put you in a position that we have to lay off people at this company.
By 2003, Jamie Dimon's no-nonsense approach appears to have worked. $3 billion in costs have been cut, and the share price has gone up 60%. Still, Jamie has a long way to go if he wants to unseat Citigroup as the biggest bank in America. After decades of mergers and buyouts, American banking is consolidating into the hands of a few companies. Jamie Dimon has successfully turned Bank One around, thus making the once radioactive bank an attractive acquisition target. An even more valuable target? Jamie Dimon himself. His powerful ability to lead and take decisive action has drawn the attention of William Harrison, JP Morgan Chase's CEO. William has been a fantastic leader for JP Morgan, but at 61, his age is starting to take a toll. In the hunt for a successor, Jamie Dimon stands out. Therefore, making a calculated move, JP Morgan buys Bank One and Jamie Dimon. It's not long before William steps down and Jamie takes the reins of JP Morgan, now America's second biggest bank, right behind Citigroup. But that's all about to change as Wall Street sleepwalks into the jaws of 2008. The year that changes everything.
We're down by between 3 and 4.5%, 16%, 18%, 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
The next morning, you wake up
and you do a conference call.
No, it was that night.
It was that night.
I think I was driving home. I called up my whole operating committee. I told them we're about to have a catastrophe take place. All hands on deck the next day. So I think on Saturday, everyone was at work. We had workforces and teams going through every single part of our exposures, every single part of which we've been through before. And I think I called my board that Saturday and said, we have a national emergency.
Home loans, what had once been a gold rush, had now become a ticking time bomb. The first on the chopping block? Bear Stearns. Although the CEO James Kane reassured the public not once, not twice, but numerous times that the bank was as solid as a rock, everyone could see the smoke. And where there's smoke, there's fire. Bear Stearns traded at $170 a share the previous year. It now trades below $100. At first, everyone shrugged their shoulders. So what if Stearns goes up in flames? Serves them right. You play with fire, you're going to get burnt. But after some analysis, if Bear Stearns goes under, it would have a massive blowback to American finance, infamously too big to fail. The Fed throws Stearns a 48-hour lifeline, $25 billion. If they don't make it through the weekend though, it's over. At this point, people start worrying about the other financial institutions.
I said, and it's very possible throughout the rest of this week, you're talking about Goldman, Morgan, Bank of America. I'm pretty sure AIG is not going to make it because we had already been working on that.
Upon closer inspection, most banks were bleeding. With so much blood in the water, one could hardly see the shark coming. JP Morgan Chase. In the midst of a panic, JP Morgan was cool and collected.
We had a lot more capital than everybody. I'm a very conservative person. Okay, we had a lot of liquidity. To give you an example, I've got how much? I'm gonna say 100 billion. I mean, sitting in a bit, literally sitting around.
Jamie had harped on for years about the need for a fortress balance sheet, while his competitors, including Citigroup, had taken on far more exposure to the housing market than they ought to, and now raced to batten down the hatches. JP Morgan was ready for anything, and just like Jamie had pounced on Black Monday, he intended to capitalize on this crisis as well. As people began to truly understand the gravity of the situation, Bear Stearns' share price collapsed even more. The writing was on the wall. In a merger described as a shotgun marriage, Jamie managed to buy Bear out for $2 a share, a tiny fraction of what it was once worth.
Then how did you come at $2 a share? Just because of that?
No, the $2, remember, it's hard to give an example, but I tell people buying a house and buying a house on fire are two different things.
Hell, it was so easy, the government even helped him buy out Bear Stearns. After that, when Washington Mutual faced financial trouble, well, JP Morgan scooped them up for a bargain as well. Meanwhile, JP Morgan's competitors imploded, one after the other.
Just to the point, though, on the collateral, because there are Lehman people who say JP Morgan, they took our, they were asking for too much money at a time when we were...
They're ignorant. People were asking for more collateral everywhere.
Lehman Brothers, Morgan Stanley, Goldman, but most satisfying of all, Citigroup. They would spend years picking up the pieces.
The money was flowing into JP Morgan.
He had done it. Jamie Dimon finally had the satisfaction of seeing JP Morgan Chase becoming the largest bank in America. In an ironic twist of fate, conservative Dimon would later make a $2 billion blunder on a way too risky trade. With time, however, it blew over, just like his feud with Sandy Weill. And still to this day, Jamie Dimon is at the helm of JP Morgan Chase, now the largest bank in the world. One of the few bank CEOs that survived 2008. He's made a fortune over his career and is actually a billionaire. But it was never about the money for Jamie. It was about the legacy. So how does Jamie Dimon want to be remembered?
I hope people say, we're going to miss the SOB, and the world is a better place from having been here.
Germany's largest lender, Deutsche Bank.
Deutsche Bank. Deutsche Bank.
It's one of the most prestigious banks in the world, but it's also the most evil. On the surface, it's the oldest surviving bank in the world. to many eager students, an esteemed upper echelon institution, bulge bracket, managing billions of dollars for the rich and famous, including their notorious relationship with Donald Trump. But it only endured by trading principles for profit, funding global sex trafficking rings, money laundering for Russian oligarchs, LIBOR scandals, our favorite banker Bill Wong, and upper management suicides. With all of that, is Deutsche Bank still a bulge bracket? How is it that the bank involved in some of the worst atrocities in history still stands today? And can subscribers of this channel learn anything from the Machiavellian tactics the bank employs? 150 years ago, on a dark, stormy night in Prussia, Deutsche Bank is born. After conquering Europe, the bank has one thing in mind: expansion. They open offices in London, Shanghai, and South America. Now, the bank looks beyond the Atlantic, America. Georg von Siemens, chief at the time, set sail for the new land in the hopes of firmly planting the Deutsche flag. When he arrives, he shakes hands with eccentric railroad tycoon Henry Willard. Henry pitches his dream to Siemens, building a transcontinental railroad, one that would finally span across the whole of America. Eager to make a splash in the States, Siemens gladly bankrolls the railroad. While the railroad was built successfully, costs ran high, and Willard decided to divert some cash to build a mansion in Manhattan instead. Naturally, Siemens is furious. Deutsche Bank loses every penny, and Willard refuses to pay any back. The first but not the last time the bank would fall for sweet words from sly charlatans. Siemens heads back home, his American prospects soured by the recent failure. He decides to build Deutsche's position in Europe. Deutsche grows tremendously over the next decades as the bank becomes the 6th biggest in the world. Still, as the 20th century rolls around, Deutsche faces an existential threat. Leading up to the 1940s, Europe is undergoing a radical transformation. Adolf Hitler, discouraged painter turned politician, revives the ghost of nationalism in Germany. With impassioned speeches, he feeds off of commonplace feelings of disillusionment and defeat, which fuel his staggering rise to power. Manipulating an entire nation, he wields grief and morphs it into red-hot hatred. As the Nazi regime casts a growing shadow, a pressing question hangs over many German institutions: succumb to the darkness or risk everything in retaliation. Deutsche Bank, a once respected and admired institution, side with the Nazi party, effectively becoming the devil's bank. In trading principles for profit, Deutsche does handsomely. They absorb banks from conquered nations and are busier than ever. But this newfound success comes at a price. Deutsche fires all their Jewish board members. They fund the construction of the infamous death camp, Auschwitz.
It is clearly a party to genocide.
As if that wasn't enough, Hitler needs the bank to sell all the stolen gold the Nazis have acquired from the victims.
U.S. soldiers come into this room and they discover 8,198 of these gold bars,
including fillings extracted from people's teeth.
It is estimated that the Nazis stole $598 million. This is 1945 dollars.
The bank continues to fund the regime and the death of millions throughout the following decades. Since the atrocities, Deutsche Bank has paid $5.2 billion to Holocaust victims. But can any amount of money wash the blood away? Heading into the late 80s, Deutsche Bank is being seduced. By nature, Deutsche is a ultra-conservative and pragmatic German bank. Its slash in a square logo is intended to represent growth within a risk-controlled framework. Still, their slow and steady returns shrink in comparison to the eye-watering profits from their American counterparts. Deutsche folds hook, line and sinker and abandon the risk control part, in the hopes that they can make some serious dough in the hot new derivatives market. Like a 16-year-old placing his first options trade on Robinhood, Deutsche becomes addicted. Traders get brazen and start to gamble. Deutsche flies in hotshot American options traders from Merrill Lynch to beef up returns. These cowboys completely change the corporate culture. In one hilarious example, when they can't pronounce the company name, they say they work for Douche Bank. Following every good party, though, is one hell of a hangover, and Deutsche's in for more than a headache. Leading Deutsche Bank executives started joining an online education program called Giga University. They found numerous courses there on how to build income, for example through micro PE, faceless automated YouTube channels, or ChatGPT copywriting. As a consequence, most Deutsche Bank executives quit and pursued the side hustles they built at Giga Uni full-time. Of course, this is a joke, but since we launched Giga University 2 weeks ago, we have already gained around 100 members, and so far the feedback is amazing. We have over 20 courses on how to build income through different methods and multiple professors who coach our students. I spend most of my time coaching people on how to build an empire of faceless and partly automated YouTube channels that generate passive income. This is something you can start with zero investment. Also, I coach people on how to build a micro PE and how to make money investing in startups. If you want to find out more and join, click the link in the description. We're going to increase the price in 2 weeks to keep member numbers in check. It is 2007 and we are in the midst of the greatest housing bubble of all time. Champagne is popping in Frankfurt as Deutsche Bank's share price has hit an all-time high of $126, giving it a market cap of $75 billion. However, most people don't know it at the time, but the whole thing is about to come crashing down in a blaze of glory. Who is to blame? Douche Bank, of course. Having recklessly pumped the market by creating over $32 billion worth of credit debt obligations, or CDOs. Realizing that CDOs, once they're golden geese, now began to look a lot like foie gras. The upstanding bank that they are, Deutsche does the responsible thing. Escape the market as fast as possible, hedge their risk while continuing to market CDOs as the next best thing to customers. They quickly exit before everyone else has a chance to react, and they then cook the books to hide billions of dollars in derivatives losses. They sweep it under the rug, but ticking time bombs only stay hidden for so long. Misery loves company like Deutsche loves bad debtors. It does not take long for the cracks to deepen at Deutsche, as media personality turned real estate mogul Donald Trump needs money for a new casino. No bank in their right mind will touch him with a 10-foot pole. Fortunately for him, Deutsche Bank is not in their right mind at all. Blinded by greed, the bank ignores several red flags and lends Trump billions of dollars. When it comes time to pay Deutsche back, he refuses, claiming force majeure to nullify the contract. In an absurd move, Trump argues that the 2008 economic crisis is an act of God and therefore he isn't liable to pay back a nickel. If that wasn't enough, Trump doubles down. He sues Deutsche Bank for $3 billion in damages for predatory lending practices. You would think this would spell the end of Deutsche and Donald, but like any toxic relationship, the breakup is just the beginning.
Why did Deutsche Bank loan Mr. Trump $2 billion?
Anshu Jain, co-CEO of Deutsche, coaxes Bill Brucksmith, a former trader, out of retirement. Bill could not believe the criminal activity that had been going on at Deutsche since he left, and neither could regulators. They put pressure on Deutsche and began slapping much heavier fines in the region of billions for the bank's fraudulent behavior. 58-year-old Brucksmith is so anxious he starts seeing a psychologist. Brucksmith tries to stop the illegal activities but just becomes a laughing stock. But it is Bill who ends up being thrown into the fire when tapes are discovered of him admitting that Deutsche Bank is actively avoiding billions of dollars worth of taxes. As authorities dig deeper and get closer to the truth, Bill Brucksmith takes his life. Over the next 4 years, the bank slowly bleeds out. Its stock price falls a staggering 90% in what is a total disaster for employees and shareholders alike. Deutsche Bank's stock price falls to a pathetic $13. To top it all off, they are about to lose billions of dollars, and they have no idea where it's gone.
If Deutsche's image wasn't already in tatters, it certainly is now.
And why was a reputable bank lending huge sums of money to somebody widely viewed everywhere as a significant credit risk?
Investigators are wondering how Trump got $500 million to build a skyscraper in Chicago, or how about the extra $50 million needed to upgrade Trump's seaside golf course in Scotland?
Golf courses which now in many cases are hemorrhaging losses. It looks like money laundering. Where did that money come from, and what role did Deutsche Bank play in facilitating all of that?
Surprise, surprise, Deutsche extended the line of credit. And surprise, surprise, like a magician on a date, when the bill arrives, Trump disappears. An inquiry concludes that the loans were only granted in the first place because of Deutsche employee Rosemary Vrablich's cozy relationship with Trump's son-in-law, semi-legitimate businessman Jared Kushner.
But it also is just this nearly perfect case study in how not to run a major global financial institution or a major global company of any nature.
Any hopes of retrieving the loaned money are quashed when in 2019 Donald Trump does the impossible. He becomes the 45th president of the United States. How in the name of God does the new president of the US owe a foreign bank over $360 million?
We know from these tax returns that Donald Trump was in dire financial shape.
Deutsche is helpless. You can't just ask the US president for your money back. Still not fully aware of how they got into this mess, Deutsche is in even more trouble when the House Democrats subpoena the bank for the financial records of their esteemed client. In a cunning move, Trump sues the bank in an attempt to stop the record from being released. The judge rejects Trump's suit, ruling that Deutsche must comply with Congress and proceed to hand over the records, to which the bank simply replies,
"We have lost the records."
Trump informs Deutsche hell will freeze over before they get their money back, but the bank's final death blow lurks around the corner. Having become obsessed with the death of his father several years ago, Val Brucksmith downloaded all his father's file to a hard drive. He reaches out to several journalists to dig through the files to see if they can uncover some missing puzzle pieces.
Val has in his possession key bank documents that investigators sought to help make their case.
Desperately seeking the truth about his dad's death, Val Brucksmith becomes an informant for the FBI with top secret information on deals involving Deutsche, Trump and Russia. But before he can tell them anything, he too is found conveniently dead in his home in 2019. The official cause of death is from a drug overdose, but this kicks off a wave of conspiracy theories surrounding Deutsche Bank, and speculation heats up whether the father and son's death were not a coincidence at all. In what is one of the toughest periods in the bank's history, the Deutsche executives bring in the only man that can save the crippled bank. Christian Sewing is brought in to save the failing bank after the disastrous reign of John Cryan brings it to its knees. In 2021, Deutsche makes its first profit in 8 years, and it looks like a turnaround could be on the cards. Well, appearances can be deceiving. Despite everything, Deutsche crosses paths with the Wall Street's angel of death, Bill Wang. It appears the bank's appetite for destruction cannot be sated as it signs off on massive margin loans for Archegos, Bill Wang's hedge fund, quickly implodes, but somehow Deutsche manages to escape relatively unscathed. But many experts believe they are walking on thin ice.
The plan that they produced several months ago, while reasonable, is about 5 years too late.
Having maintained so much power and single-handedly changed the course of history, their shady past is finally catching up with them. The stock price has collapsed over the past years and has finally put an end to the bulge bracket debate. If they were bulge bracket, they are not anymore.
It's been a slow deterioration in profitability for years, and it's probably going to continue.
One of the slowest train wrecks on Wall Street, Deutsche continues to bleed out from 1,000 cuts. It's almost poetic. In the pursuit of everything, Deutsche lost not only money, but themselves. It is the early 1980s and Wall Street is filled with Patrick Bateman-type characters. America is all about getting people into mindless consumerism through ads like this.
What a great way to open a party.
Also, yuppie culture is at its all-time high. All of this will later inspire the character and movie American Psycho. But as we all know, the movie does not end well. A new breed of Wall Street managers is emerging. They are ruthless and amoral, only driven by one single factor: greed. And above all of them is our hero, Michael Milken, the king of junk bonds. His rise is a play of capitalism at its finest, proving that a single idea can not only change your life, but the course of the world. Born ambitious, Michael establishes one of Wall Street's most important instruments. That instrument will catapult his net worth to over $6 billion today. This is the story of one of Wall Street's most spectacular rises, a terrifying downfall with a $600 million fine and 10 years of prison that could only be pardoned by a US president.
Mike Milken, who's gone around and done an incredible job for the world.
Michael Milken is born on July 4th, 1946 in a sleepy middle-class town in California, Encino. Surrounded by fireworks and post-war euphoria, his story begins as one of America's greatest eras is about to start. In all of this, Michael is going to leave a mark soon too, but unlike his peers, he doesn't want to change the world by saving humanity and developing new technology. He wants a high-paying job on Wall Street to get rich, and getting there is no easy task. The top players in the game, Goldman Sachs, Morgan Stanley and JP Morgan, all get to choose from the best of the best. Michael knows this and decides to dedicate everything to his dream of becoming a yuppie millionaire. From early on, he has the characteristics of a future overachiever. He is intelligent, a critical thinker, a slight psychopath maybe also, and is willing to work harder than anybody else. Not only is he elected as a member of Phi Beta Kappa, the most prestigious academic society in the US, home to highly successful people such as President Roosevelt and Jeff Bezos. In 1968, Michael's effort pays off. He graduates with a Bachelor of Science in Business Administration from UC Berkeley with the highest honors achievable. Like a true insecure overachiever yuppie, he travels across the country to join the prestigious Wharton business school, a talent factory for future masters of the universe. It's all going according to plan, and Milken secures a summer job at the investment bank Drexel Harriman Ripley with the help of his professors, a major player in the world of finance back then. After graduating with his MBA in 1970, he joins the firm full-time. His colleagues are all replaceable Wall Street chads that only pride themselves in their business cards and their restaurant reservations. Restaurant reservations they obviously don't make themselves. You see, if you want to play in the big leagues, if you want to increase your net worth, you need to outsource any work that is not worth your pay grade. This is how finance legends work. Break up with your girlfriend? Let your assistant do the talking. Make a restaurant reservation at Dorsia? Assistant. Want to flood the market with junk bonds? Let your assistant do the research first. Milken, his colleagues, and myself all relied on personal assistants, and the best quality assistants you'll find at Wing. I trust my Wing assistant with handling my money, so doing payments and my accounting, planning my evenings when I go on dates for example, and even handling some of the marketing for Giga University, for example SEO. The money I invest is minimal compared to the money I generate with a good virtual assistant by Wing. Because a really good virtual assistant can tailor applications for you and reach out to hundreds of people on LinkedIn to schedule networking coffees, or even help you build side income, for example by researching profitable niches for automated YouTube channels, or researching websites you can buy and benefit from their cash flows long term. There's many more use cases, and I'm happy to share them with you if you're interested. For now, check out the link in the description below and get yourself a virtual assistant. Probably the highest ROI investment you'll ever make. But Milken soon makes a discovery that will change the face of finance forever and put Mike up into the ranks of Wall Street's most legendary investors and bankers ever, who are all portrayed on this channel, which is why it's a disgrace you're not subscribed yet. The world of investing is basically dictated by a graph like this. The more risk you take, the higher the reward. But what if the correlation is not perfect? What if we can get into this area above the line so we earn higher profits but we keep the risk low? That would be revolutionary. While still studying at Berkeley, Michael Milken makes a discovery that will later change the world of finance forever. Michael is a focused guy. He's determined to succeed. Countless hours are spent in the university library to come up with new revolutionary ideas and investments to make it big in business. And as chance would have it, he stumbles across a paper published by Walter Hickman, former president of the Federal Reserve Bank of Cleveland. A small book titled Corporate Bond Quality and Investor Experience holds the future secret to the world as we know it today. Hickman discovered that below investment grade debt earned a higher risk-adjusted rate of return than investment grade bonds. But what does this mean? First of all, bonds are a type of investment where an investor loans money to a company or government and earns interest over a set period. Below investment grade debt, more commonly called junk bonds, are riskier because their issuer has a low credit rating, typically BBB or lower. Those companies may not be able to pay back the money they borrowed and thus are more likely to default on their loan. Higher default risk means higher rate of return, if the default doesn't happen. Walter Hickman, though, discovered that even if you factor in the additional risk of these bonds, you will be better off investing in these bonds than investing in safer alternatives, a so-called higher risk-adjusted rate of return. If this really works, could it be the holy grail of investing? In 1973, Drexel merged with Burnham and Company to form Drexel Burnham, and most of the staff was laid off. Michael Milken is one of the few lucky survivors. A good banker on Wall Street is a man that earns money for his clients, but a great banker earns a fortune for himself. And Milken strives to be the best. When he remembers his earlier bond discovery, he drops everything and immediately rushes to his boss, Tubby Burnham, to convince him to start a high-yield bond trading department. Burnham is skeptical about it. The market for such bonds is fairly limited and has not proven to be sustainable in the past. Allowing him to start his department is a speculative risk for the company, especially after the merger. But if there is a single truth on Wall Street that holds up to this day, it's you need to do what nobody else does. After tough negotiations, Burnham gives his okay and Milken gets to work. As head of his department and equipped with some capital, he puts his theory to the test and starts trading the debt of so-called fallen angels, companies whose bonds have been downgraded to the point that they are no longer considered investment grade. And it works out. Soon after, he pulls in incredible 100% returns and becomes the shooting star within Drexel. For his efforts, he's rewarded with a bonus equivalent to more than $25 million today, achieving his dream of becoming mega rich and practically turning into a multi-millionaire overnight. If it was any regular person, they would probably just quit their job and this story would be over right now. But we are talking about one of the most legendary financiers Wall Street has ever seen. A couple of $1 million are not enough for Michael Milken. He wants to go above and beyond. Milken has to find a way to grow his division. There's only one problem. The market for junk bonds is limited. But how do you sell something no one wants? As a rising star among Wall Street professionals, there's only one correct answer. Let's create a whole new market. To understand how Milken does it, we first need to understand what type of company issued bonds and who bought them. Every company needs funding to grow its operations. If they don't have enough money to fund their investments, they need to turn to creditors to provide them with cash. They could borrow from commercial banks, but that often means committing to unpredictable, expensive, short-term interest rates. They could also borrow from insurance companies, but those often restrict how the money can be used. Or they could turn to the capital markets and issue their corporate bonds. Most of the potential buyers, especially the ones with a lot of capital, are often only permitted to invest in investment-grade bonds. Only the 600 to 700 largest corporations in all of America qualify for such a rating. All others are closed out of this $500 billion capital market, and Milken wants to find a way in. Michael Milken has to find a way to establish his high-yield products among these sluggish capital managers. He begins pitching his idea to a handful of risk-averse money managers. During the meetings, Milken is not just another narrow-minded Wall Street trader, but the very best salesman they have ever seen. In his ambitious yet charming manner, he explains how rating agencies are actually a huge scam. They are measuring the past, not the future risk, and thus massively misjudge the company's ratings and ignore their growth potential. When pegged to their future cash flows, these risky companies are great investments and you can buy them for pennies on the dollar. Low risk, high return, that's all the managers have to hear. Soon, the money just comes rushing in as more and more funds open up to the idea of investing in junk bonds. Every day, his network of money managers keeps on growing. Hundreds, thousands of them. This is how you become a billionaire. He soon not only trades bonds, with psychopathic precision, he engineers junk bonds individually to the needs of entrepreneurs looking for funding and then passes them on to his network of buyers. Entire industries like cable TV, healthcare, and regional airlines are built from the ground up and only made possible with capital supplied by Milken's network. The attention and confidence he creates around high-yield bonds are the foundation for corporate raiders like Carl Icahn taking over and disrupting companies, generating billions in profits. This also enabled rising entrepreneurs such as Henry Kravis to build Kohlberg Kravis Roberts, the behemoth private equity firm KKR, during the leveraged buyout boom in the 1980s, and he's conducting deals worth tens of billions with Milken, and finally leading to his downfall. If you haven't, watch our Icahn and Kravis documentaries. The two were similarly influential and also had a bit of a public image problem at certain times. In the late 1980s, billions of dollars flow into junk bonds, and the total market has grown to a total volume of 150 billion US dollars, turning Drexel Burnham into the most profitable investment bank at the time. Drexel's bond trading department, led by Michael, accounts for at least half of the firm's profits. Needless to say, Milken commands power and respect around the world. Each month, they conduct more than 250,000 transactions. Whatever bond he is looking to sell, his team of highly skilled traders always find a buyer available and looking to invest, earning the equivalent of more than 1.4 billion US dollar in 1987 alone. And having that much power over the junk bond market, Milken is commonly called the king of junk bonds. If you would find yourself in Michael's position, everything seems perfect, but as we all know, nothing lasts forever. And just like in American Psycho, in the case of Michael Milken, it all goes up in flames like a burning inferno. Often it's accomplices or lower-ranking members of the organization that lead to the mob boss's fall. Also on Wall Street, you can't expect others to keep your secrets forever. In a world filled with egoistic and greedy dealmakers, where everybody walks, talks, and acts the same, most would trade information about their colleagues when put under pressure by the FBI or SEC. And so, a series of events is unleashed that will ultimately ensure the fall of the legendary Michael Milken, the king of junk bonds. It's a cold, gloomy November day in 1986 when stock trader and arbitrager Ivan Boesky gets a surprise visit from the SEC. Boesky, who amassed a fortune of well over 200 million US dollars by betting on corporate takeovers and the sale of the Beverly Hills Hotel, is accused of conspiracy to commit violations of federal securities laws. His sources, the two investment bankers Robert Wilkes and Ira Sokolov, got busted for providing him with inside information about tender offers and mergers for companies such as Nabisco Brands, RJ Reynolds, and Houston Natural Gas Corp. The SEC has him in a tight grip. The story of Ivan Boesky is the first time insider trading laws were ever fully enforced. After hours of interrogation, the consequences are presented to him. Faced with the implications of his actions, Ivan breaks up in sweat and furiously searches for a way to defuse the situation. The SEC officials enjoy their work with a devious smile. They got him right where they want him. Boesky is a relatively small fish, and the SEC wants to go after the great white shark, Michael Milken. Agreeing to a deal, Boesky pleads guilty and implicates Milken in several illegal transactions such as insider trading, stock manipulation, fraud, and stock parking, the act of buying stocks for the benefit of another. That's exactly what the SEC needed. They have been suspecting Milken since 1979, but couldn't find any evidence up till now. They finally have enough information to probe Drexel and get them to launch an internal investigation. For nearly 2 years, all remained quiet and still, but then, out of nowhere, everything comes tumbling down, leaving everyone in shock. In a matter of days, the glorious story of junk bond king Michael Milken comes grinding to an instant halt. The internal investigation team of Drexel lawyers has been going through reports and documents, trying non-stop to find something unusual. What they discover marks the end of an era. Back in 1985, private equity firm KKR decided to take Storer Broadcasting, a media company that operated several radio and television stations, private in a leveraged buyout. As with many deals during the LBO boom of the 1980s, KKR used high-yield bonds to finance this investment. They decided to issue new bonds with the help of Drexel Burnham in the role of an underwriter. So Drexel assisted KKR in the process of issuing the bonds and buying and reselling them to investors. As a form of compensation, Milken negotiated warrants. These warrants give the holder the right to buy a specified amount of stock at a certain price within a certain period of time. The warrants were initially sold for about 9 cents each to fund managers and others with close ties to the junk bond department. They later received $4.88 per warrant, a profit of more than 5,000% in a matter of months. This is where things started to go the wrong way. Michael, multiple executives, and even clients formed partnerships to invest their own capital and earn extraordinary returns. Milken kept 80% of the warrants in partnerships such as MacPherson Partners and tried to conceal it by transferring them back and forth between multiple legal entities, all of which he controlled. Later, he used them to bribe mutual fund managers and executives to get them to buy the risky bonds issued by KKR. As the investigators figured this out, they immediately reported to the government and the public, putting Drexel under maximal pressure. The next day, December 21st, Drexel Burnham enters a guilty plea to 6 counts of stock parking and stock manipulation. Adding to this, they pay $650 million in fines for their manager's illegal behavior and lack of supervision, the at the time largest fine ever. Soon after, Michael Milken gets indicted and is forced to leave the firm he spent his whole career at. He pleads guilty to 6 counts of securities and tax violations, albeit not insider trading, and gets sentenced to 10 years in prison and a total of $600 million in fines. Oh, and he's prohibited to work in the securities industry ever again. His network of bond issuers and buyers falls apart, the junk bond market collapses. Drexel Burnham Lambert, once called the greatest investment bank of all time, goes bankrupt. It seems like the story of one of Wall Street's greatest legends has come to a dramatic end. Locked up in prison for a decade, among violent thugs and killers, who wouldn't be afraid?
But I needn't have been. See, for a brief, fleeting moment, I'd forgotten I was rich. And I lived in a place where everything was for sale.
Prison is just something the average person is afraid of, but rich people, they fly above the law. When Michael is sentenced to 10 years in prison on November 21st, 1990, Judge Kimba M. Wood tells him her honest opinion.
When a man of your power in the financial world, at the head of the most important department of one of the most important investment banking houses in this country, repeatedly conspires to violate and violates securities and tax laws in order to achieve more power and wealth for himself and his wealthy clients, and commits financial crimes that are particularly hard to detect, a significant prison term is required in order to deter others.
Kimba Wood clearly had high hopes about sending Milken off to prison, just to be hit by the reality of incarcerating truly powerful men. Michael only serves 22 months, barely more than a fifth of his sentence. He walks out of prison in January 1993, and at first glance it seems like Michael has learned his lessons in prison. Michael begins his lifelong philanthropic journey of donating millions to support education, health, and community building initiatives, mainly focused on cancer research. Milken had prostate cancer himself 1 month after his prison release. He even founds his own institution, the Prostate Cancer Foundation, which funds research on the prevention and cure of prostate cancer. Aside from advocating for medical research, he also authors books and articles on finance, delivers speeches at conferences, and campaigns for criminal justice reform, such as reducing mandatory minimum sentences and increasing access to parole programs. Besides all the philanthropy, Michael has not lost his business sense. Even though he is banned from working in the securities industry ever again, he still works on growing his net worth even further. Milken has investments in private equity, hedge funds, and venture capital, netting him a fortune of $6 billion, much of it from the buyout of one of his biotech investments, Kite Pharma. Kite Pharma is a company that develops cancer immunotherapy products, focusing on cell-based therapy. When the pharma conglomerate Gilead Sciences took them over for $11.9 billion in 2017, his net worth increased to $3.6 billion, an astonishing growth rate of 44% in a single year. With his financial success back on track after getting out of jail, there's only one thing left to do: getting the sentence off his record. There's only a single person in the whole world who can grant him a pardon for the crimes he has committed: the President of the United States of America. Since his release, Michael Milken attempted to secure a pardon from every single president in office, and he eventually succeeds with a fellow businessman. Donald Trump grants the pardon. Regardless of what you think about his actions and the pardon, the life of Michael Milken truly is the story of a villain turned hero, a street-smart kid desperately trying to make it in this world, transforming the world of finance, ascending into its hall of fame, and coining an entire generation of bankers. Although turning too greedy throughout his career, Michael has undoubtedly altered the world as we know it forever. Meet Dan Loeb, a man who has made a fortune by doing what most people only dream of: talking shit on the internet. Dan runs Third Point Management, a hedge fund that has consistently outperformed the stock market for over 20 years. But it's not just his investing skills that set him apart, it's his unique strategy. Dan is known for his big mouth and aggressive personality. He's not afraid to call out companies that he believes are underperforming or mismanaged, and his scathing comments have the power to send stock prices plummeting. While many internet trolls go to sleep with their anime body pillows, Dan Loeb turns trolling into an art, and a very profitable one at that. He's made millions with his scathing comments. Like dominoes, institutions fall one after another at the words of Dan Loeb. Companies look over their shoulders, worried if they are next. As a result of this aggressive strategy, Dan's fund has been able to return over 20% a year on average for nearly 25 years, dwarfing the stock market average of 8% a year. So how was Dan able to generate such extraordinary returns? And why is an internet troll so feared on Wall Street? In 1995, a young, eager Daniel Loeb quits his job to pursue his lifelong dream of starting his own hedge fund. He's got a plan, a dream, and a name: Third Point Management, named after one of his favorite surf spots on Malibu Beach. But the reality of the situation sets in quickly, and Loeb finds himself struggling to raise the necessary funds to bring his vision to reality. In need of investor funds, Dan seeks out to raise $10 million, a number he falls woefully short of. With just $3 million from a few close friends and family members, Loeb pours his entire life savings of $340,000 into the fund. Talk about pressure. As the fateful day of trading approaches, Loeb begins to panic. Doubt creeps in, and he starts to question whether he's got what it takes to make it in the cutthroat world of finance. But there's no turning back now. With no other choice but to forge ahead, Loeb takes on the daunting task of running his own business alone. Day after day, Dan runs the entire operation himself, doing everything from picking up the phone to marketing his new fund. Still, managing all parts of his fledgling hedge fund was exhausting. All his time seemed to be spent on monotonous grunt work. He seemed to spend hours just making copies, responding to emails. That was until Dan Loeb made a discovery that would change everything. Instead of doing all those monotonous tasks himself, he could just get an assistant to do it. Track expenses and log reports? Done. Manage calendars and arrange meetings? Easy. Respond to emails and follow up with customers? Forget about it. As all finance legends know, an assistant is worth their weight in gold. And the best quality assistants are found at Wing. You can give Wing your specific needs for a virtual assistant, and they'll make sure to tailor one to your needs. Whether it be an assistant to help you with your side hustles, an assistant that can take your PowerPoints to the next level, or keep your CRM up to date. My only regret is I didn't get an assistant with them earlier. And if you use the link in the description, you'll even get $200 off your first full-time plan and $100 off your first part-time plan. Wing has the best in the business. Schedule a call today and free up your time for the important stuff. And wouldn't you know it? Against all odds, the fund is already up 8% in just its first month. Suddenly, Loeb's confidence is restored and he feels like he's on top of the world. Using his extensive Wall Street background in distressed debt,
was looking at parts of the market, distressed debt, special situations like spin-offs, demutualizations, post-reorg bankruptcies.
Dan scours the stock market looking for struggling companies that might be able to recover. With renewed vigor, he starts scouring the stock market for the next big opportunity. But he's not content to just play by the rules. Oh no, not Dan Loeb. He quickly adopts a daring new strategy of shorting small cap companies using the alias Mr. Pink, after a character from Reservoir Dogs, to trash talk them on investor sites like Silicon Investor. Think of it as smear investing. It's a brazen move, some might even call it market manipulation. But it works, and it works really, really well. Soon, Loeb is slinging mud left and right, collapsing companies' stock prices and generating gargantuan returns. And the best part? No one knows it's him. He's become the financial world's biggest mystery. As the returns pile up, investors flock to his fund, and Loeb finds himself managing over 100 million in just 4 short years. But there's a problem. In 1999, when Loeb targets a company called hitsgalore.com Inc., they sue him after he posts negative comments about them online, then posted onto a message board that the company is shit and these crooks belong in jail. The lawsuit is dropped just a month later. The damage, however, has been done. Loeb is forced to admit that he's Mr. Pink, blowing his cover. Dan needs a new strategy, and while reading one of fund manager Robert Chapman's activist letters, Loeb realizes that his next opportunity is right in front of him. Activist letter writing, something that fits his loud and bold personality perfectly. The strategy is simple. If you own more than 5% of a public company, you are required by the Securities and Exchange Commission, the SEC, to make public filings. Here, Dan can attach scathing letters, which he called letters of mass destruction, to these filings, making scathing comments about a company's executives. And since executives don't like to be embarrassed, Loeb can use this new authority to exert changes within the company. With this new trading strategy under his belt, Dan comes out swinging in 2000, and in his first letter of mass destruction, he goes after Bill Stiritz, the well-respected CEO of AgriBrands, an animal food company, scorching him for his exorbitant compensation package and accusing him of pushing the company into a destructive merger. And not surprisingly, this tactic works, and in short order, Dan earns a cool $20 million. Seeing the opportunity here, he begins going after company, knowing that if he can publicly embarrass a company's executives, he can shake up the company, thus boosting his returns. He writes to the CEO of Potlatch, a forest product company.
You and your smirking CFO are among the worst managers of a public company in America.
Selton, the maker of George Foreman grills, accusing his board of directors of squandering corporate assets, among dozens of other scorching letters. Companies are beginning to fear Dan, and they don't want to become the subject of Dan's poison pen. Using this new approach, Dan also returns to his roots as a distressed debt investor, and Third Point roars, returning a stunning 51.5% in 2003.
The next distressed debt cycle was 2002-2003, and we played the back ends of the bankrupt securities in that market, and we had our best year ever. We're up 50% in 2003, 30% 2004.
Followed by an impressive 30% return the following year. And by 2007, the fund has returned over 23% annual return since its inception. It is clear that the fund is thriving, and as the returns grow, so does the optimism. However, underneath the surface, a crisis is brewing, and 2008 is about to be the most challenging time Loeb will ever go through. It's 2008 and the financial world is in turmoil. Amidst the chaos, Daniel Loeb and his hedge fund Third Point are on the verge of collapse. Third Point's assets have plummeted from 5 billion to just 1.7 billion, and investors are fleeing like rats on a sinking ship. But Dan isn't one to give up easily. He sees opportunity where others see only disaster. And when the Treasury Department announces a stress test for banks, Dan sees a chance to turn things around. So he packs his bags and heads to Washington, D.C. to meet with consultants, lobbyists, and other players familiar with the new stress test. And that's when the light bulb comes on. Dan realizes that the banks are simply undergoing the process of restructuring, and for many of them, things can only get better from here. It's a contrarian view, but Dan is nothing if not bold. Over the next 4 weeks, Third Point deploys hundreds of millions of dollars, buying up preferred shares in insurance companies and banks, as well as the debt of many lower-tier banks. Dan also opens up large positions in struggling auto companies like Ford, Chrysler, CIT, and Delphi, and even takes long positions in some mortgage-backed securities. With this new revamped portfolio, Third Point takes off like a rocket. Within just 8 months, the fund is up 45%, followed by a 35% return the next year. And Third Point is named AR Magazine's Event-Driven Fund of the Year in both 2010 and 2011. It's a remarkable turnaround, and it's all thanks to Dan's persistence, his contrarian view of the market, and his willingness to take bold risks. And with Third Point back on top, Dan is once again in position to dominate the hedge fund world for another decade. Following Third Point's brush with death, Dan is looking to clean up his image as someone known for his vicious attacks on small companies. So, he decides to look for opportunities internationally that don't require trolling, focusing on emerging markets like India, China, and Brazil, a strategy that quickly pays dividends as Loeb makes a bet that Greek sovereign debt will rise following a bailout from the European Union, buying the debt for 17 cents on the dollar and selling it for 34 cents. Making him about $400 to $500 million in just a few months. Despite that, Loeb just can't help himself, and he quickly finds himself back to using his tried and true tactics, this time targeting one of the most known companies in the world, Yahoo. In 2011, Loeb writes a public letter to Yahoo's founder Jerry Wang, announcing that he has just acquired over 5% of the company and will be seeking new leadership at the company. After failing to get the desired response from Jerry, he writes another letter a few months later to Yahoo's board, accusing Yang and their board chairman Roy Bostock of strategic bungling. And when that didn't work, Loeb announces that their CEO Scott Thompson lied on his resume, revealing that he does not have a computer science degree, a move that works to perfection, getting Thompson fired and earning Loeb 3 seats on Yahoo's board. Very quickly, the value of Yahoo rose, and within 2 years, Loeb more than doubles his money, making this one of his most successful bets ever, profiting him over $1 billion. Dan continues to repeat a similar strategy, upping the stakes every time, targeting other behemoths like Sony, Nestle, and most recently Disney. But there is one incident that particularly stands out during this time. Notably, Loeb gets into a spat with legendary investor and friend Bill Ackman. It's 2013 and Ackman places a $1 billion short position on Herbalife, a supplement company, accusing them of being a pyramid scheme in what will be one of Bill's most popular and highest stakes bets ever. a high-stakes bet we cover in full detail in our video on him, by the way. Dan, not ever being the type to shy away from controversy, hears of this bet and decides to take the other side of it, publicly announcing a $300 million long position on the company, essentially betting on the future prospects of the company, while his friend Ackman is betting against them. Over the next few weeks, Ackman is making news, accusing the company of being a pyramid scheme worth $0, trying to tank the stock price, while Loeb is going around pumping the company, saying the $38 stock should be worth $55 to $68 per share, potentially putting Ackman in a short squeeze if the stock were to run up that much, which will incur him millions of dollars in losses. As this is happening, the price of Herbalife begins to rise, and the once $38 stock is suddenly in the mid-40s per share within a week. But as this is happening, Loeb closes his position and cashes out with a $50 million gain. Ackman is pissed off, and even though the two have been longtime friends, they don't speak for years. Dan has spent weeks undermining Bill's largest bet ever, showing the true ruthlessness of Loeb, straining his friendship with Ackman over an opportunity to make his fund more money. And as a result of successful bets like this, Third Point continues to generate above average returns following its near collapse in 2008. Since its inception in 1995, the fund has returned over 13.3% a year compared to S&P 500 returns of 8.4% during that time. And the once $3 million fund is now managing over $12 billion in assets, making them one of the largest hedge funds in the world. As for Loeb, this has all worked out very well for him personally too, and he's currently one of the highest paid hedge fund managers in the world, making a stunning $400 million in just 2022 alone, putting his worth at $3.5 billion. With all of this money, Dan has made a few very large purchases, and in 2003 he purchased a $15 million mansion in the Hamptons, followed by an entire floor of a Manhattan penthouse for $44 million in 2008. He also owns a 200-foot yacht that he paid $52 million for, and most recently he's bought 2 Miami Beach houses for $12 and $20 million. They say money doesn't buy happiness. Dan's not so sure. What particularly stands out with Dan is his determination to generate above average returns for his investors. Over the years, Dan has employed a variety of unpopular investment strategies. He's gone to court, completely risked his reputation, and even strained a close friendship, all to make more money for his investors, something that most hedge funds would never do. Others take note of this too, and famed investor Anthony Scaramucci has said that he is the guy that would chew through the wallboard to create a return for his investors, something that truly makes him one of the stock market greats. Mark Cuban is balancing on a knife's edge. He's not rich yet, but he has a shot at making it big, really big. He's pitching the sale of his company, Broadcast.com. Having started out with only a few buddies, this company has been everything for Mark in the past few years. Over the past year, his company has exploded in popularity and profits. But now, there's danger looming on the horizon. The dot-com bubble. The internet was growing like crazy for the past decade, and with it, tech company stocks have skyrocketed. But now, speculators believe the technology isn't advancing at the pace of their investments. Key investors begin to pull out. Getting the timing right is the difference between selling for billions or pennies. Cuban needs to cash out on the massive success of Broadcast.com or risk losing practically everything. He wants to join the BBC.
I will never forget talking to Mark about, where are you going with this broadcast thing? And he goes, I'm going to the BBC, Billionaire Boys Club.
Cuban has relentlessly drummed up hype and publicity for Broadcast in the past 4 months, but buyers are hesitant to meet his offer. The cards are stacked against him. Will Mark be able to lure investors into a doomed deal? Let's rewind a little. It's the 1950s and America is booming. It's a time of business, opportunity and growth. It's the age of the American dream. Against this backdrop, Mark Cuban is born into a second-generation Jewish immigrant family in the Mount Lebanon suburb of Pittsburgh. His grandparents changed their last name from Chebeniski to Cuban to sound more American. His father furnishes cars and his mother hops between jobs every week. So, pretty humble baby silverback beginnings. Similar to the booming business opportunities that characterized the 1950s, Mark Cuban is entrepreneurial from a young age. At this time, many young Americans are finding ways to make some side money, just as we do in the Giga University. But Cuban is different. He loves sports, and his favorite sport? Basketball. There's just one problem. He can't keep playing on the court with torn up shoes and get bullied by his friends. At first, Cuban asks his parents for a new pair of basketball shoes. But coming from a blue-collar family, these kind of expenses are difficult. The solution? Mark Cuban gets to work. He starts all sorts of ventures. First, from anything he can get his hands on. Baseball cards and garbage bags.
I always knew I was into business. I mean, I started my first businesses when I was 9, 10, 11, 12 years old.
Well, hold on. What were you doing at 9 and 10?
At 9, I was buying and selling baseball cards.
At the age of 12, he starts his first business, selling garbage bags around his neighborhood. At 14, he starts a stamp collecting company.
I started a stamp company. I started with a quarter and bought a stamp and left with $50, thinking, hey, if I could do this, I could do anything.
As soon as he can afford it, Cuban buys a pair of expensive basketball shoes. For Cuban, nothing matches the thrill of building a business from scratch. He succeeds because he does things his own way and never takes no for an answer. He enrolls in Kelley School of Business simply because they have the most affordable tuition. While at university, Cuban takes what he learns in class and puts it into practice. He teaches disco, runs a chain letter, and as one of his first major ventures, decides to open a bar near his university.
In my over 35 years of teaching, I've never had a student really start a business while they were an undergrad or an MBA here on campus. And he started Motley's, which became by far, I think, the best bar in town.
While his first business eventually closes, Cuban now has a wealth of experience and connections that he can leverage in the future. One of his most important connections, however, is with an assistant. Although seemingly unimportant, Mark finding a personal assistant changes everything. He's at the start of his career, so there is a lot of things a personal assistant can do. How about letting your assistant build your personal brand online? They can help you with creating a website, developing a social media presence, growing your followers by interacting with other social media profiles and industry leaders. Or even better, let your assistant help with job search and applications. They can help you by identifying job openings, customizing your resume and cover letter, and submitting applications on your behalf. Lastly, why not have your assistant help you with networking and mentorship tasks, such as identifying potential mentors and networking events, scheduling meetings, and following up with contacts? Of course, I am kidding about Mark Cuban, but these are some examples of how I have used a personal assistant by wing in the past. Yes, you do pay money for an assistant, but if you give them the right tasks, your return on investment will be massive. If you manage to build a social media presence that's worth tens of thousands of dollars, and if you find a better job or a great mentor through your assistant's outreach and activities, that's worth hundreds of thousands. Click the link in the description below, and the best part, you get $100 off on your first part-time assistant and $200 off on your first full-time assistant. So what are you waiting for? Sign up now and save time and money. He gets a job with Mellon Bank immediately after graduating in 1981. Cuban still has a long way to go before he can become a shark in his own right, but the next chapter in his life is the reason why he's a household name for success today. Wanting a change of scenery, in 1982, Cuban moves to Dallas, Texas. He works as a salesperson at Your Business Software, one of the earliest software sellers in Texas. Cuban is an electrifying salesman, always going above and beyond. One morning, he takes the time to meet with a client to secure more business instead of opening up the store. I mean, can you blame him? Apparently, Your Business Software can. The boss doesn't like Cuban doing things his own way, and he's fired less than a year into the job. Cuban decides to take the perfect revenge. Mark Cuban starts his own company, Micro Solutions, an open declaration of war against Your Business Software. The company is one of the earliest resellers of software to newly modernizing businesses across America. After growing Micro Solutions to more than $30 million in revenue, he sells it to CompuServe. The price, $6 million in 1992.
And I retired. And you retired. And what did you do with that money? Your biggest purchase? My biggest purchase, I bought a lifetime pass on American Airlines, and I had one mission in mind. I wanted to be able to go to as many countries around the world as I could and get drunk with as many people as I possibly could.
Cuban is ready to party, but a college buddy of his, Todd Wagner, approaches him with an offer he can't refuse. Wagner's proposal is simple. People want to watch their favorite sports teams, but they can oftentimes be busy or away during matches. Why not use the internet to broadcast footage from sports matches live? He calls it AudioNet, and Cuban is fully on board. Wagner and Cuban's mutual love for college football and other sports results in the creation of one of the first mass broadcasting platforms available on the internet.
He sat me down, he said, look, I've got this idea where I think we can listen to Indiana basketball, sporting events, anywhere in the world by using the internet.
Think of it like an early form of Twitch, where people can watch live streams of television from anywhere, no matter where they are in the world. Except, well, without all the pointless drama. Seems simple now, but at the time broadcast.com is revolutionary.
All of a sudden we're going to start setting new habits, where instead of just turning on the TV or waiting to get home to watch the TV, you're going to immediately go to a website like broadcast.com, knowing you're going to be able to get an unedited version of the video the minute that it's available.
In 1998, the dynamic duo of Cuban and Wagner renamed the company to Broadcast.com and prepared to go public with an IPO of $18 a share.
The stock closed at $62.75. At the time, it set a record for the highest percentage increase on an opening day.
With an over 344% increase from their IPO on the opening day, Cuban is a record-breaking success, and with it, Mark Cuban becomes a household name. He's humble enough to recognize the role of luck in business success.
I happen to have a company, Broadcast.com, that went public at the right time when the internet stock market was going nuts.
But he's not a billionaire yet. Mark Cuban is having fun making millions, but he knows when it's time to pull out. The golden age of the early internet is not going to last forever.
Everybody thought they could get rich quick. Everybody, across from retail investor to investment bank, we had this period where money was growing on trees.
Better to cash out while Broadcast.com is still at its peak, but Cuban wants to go out with a bang, so it's time for the streaming event of the century. For the 1999 Super Bowl, Broadcast.com handles a special deal to show an advertisement for Victoria's Secret. That's right, Broadcast.com received worldwide popularity because of hosting a Victoria's Secret ad. This stunt gains them an unprecedented 2 million viewers. Seems like nothing today, but in 1999, when most people are using dial-up internet, this breaks records. This is exactly the type of publicity Cuban needs to put his company on the map, and it works spectacularly well. It just so happens that at this time Yahoo is looking for a way to get their edge over fast-rising competitors like Google. Due to the recent ascent of Broadcast.com, Cuban strikes an exceptionally lucrative deal, selling the company for an unheard of $5.7 billion. Cuban has now reached his dream. He is in the Billionaire Boys Club. Ironically, however, Broadcast.com's popularity plummets after the share.
Why did Yahoo buy it, and what did they do with it afterwards?
Right.
Now, did Yahoo screw it up? Hell yeah, they did, right? When the stock bubble burst, and their board said, we just got to cut everything. So they cut everything they had, except for the basics, and screwed it up bad.
It is the end of an era. Now, an even bigger challenge awaits Mark Cuban. Having dominated in the business world, Mark seeks a new arena to compete in, or more accurately, a new court. Cuban now turns his attention to the only thing he loves more than business: ice bathing with Kevin Hart. No, not really, it's basketball. In 2000, he acquires a majority stake in his favorite team, the Dallas Mavericks. At this point in time, they are the worst team in the entire NBA, maybe even the WNBA. But Cuban is ready to push his new team to real wins.
You've got to start giving these guys who have been in damaged programs, let's call them, the thought process that they can win, that they are expected to win.
New owner, new changes. Cuban quickly tears up everything to make the necessary changes to win. Cuban owns this team, and he wants to show it. Most team owners sit in the fancy private seating to watch the games, but Mark Cuban is there, courtside, every single match. And he does not mince words.
No! FBI control at the timeout! FBI control at the timeout!
My job is to stand up for my guys, and if I think something's wrong, I'm going to do something about it.
He's even fined $500,000 because of his angry comments.
Your trash talking was so good you actually dropped an F-bomb before the game here when I interviewed you, and so I've just been informed that you've actually been fined $15,000. And it's okay though, because it's going to a good cause. It's going to Cyber Smile. Do you take back the F-bomb, or you're standing by it?
So if I say it again, I have to pay another $15K?
Hey, you want to up it to 30,000?
Funk it.
But this hands-on approach pays off. In 2001, for the first time in over 10 years, the Dallas Mavericks make it to the playoffs. Not to mention, with a world-famous billionaire like Cuban attending the games, the Mavericks become a sensation. The team's value jumps by over $50 million, and match attendance goes up 35%. But they haven't quite won yet. 2006, while momentum is on their side, the Mavericks push with a 2-game lead against the Miami Heat. But in the last moment, they choke and let the Heats get ahead. The Shark is not having it.
When he was pissed, he may as well have been Satan. The players literally ran the other way in the locker room.
Recognizing the need for a change in strategy, just 4 years later, Cuban reshuffles the deck. He hires a new coach, drafts star players, and makes the players train harder. All this while Cuban is undergoing a legal case by the US government on allegations of insider trading. Finally, after making it to the finals in the 2011 season, the Dallas Mavericks seize victory against the Miami Heat, becoming the champions Mark Cuban always dreamed of.
And all of a sudden this chant broke out, "Thank you, Mark. Thank you, Mark. Thank you, Mark." How many times have you heard of a building chanting, "Thank you" to the owner? That's pretty unique.
Cuban has disrupted industries no one else can, like buying a failing basketball team and transforming it into one of the best in the NBA, making $211 million a year just from owning the Dallas Mavericks. For Cuban, it's all about speed and effectiveness. He dresses casually and speaks his mind, not something expected from the typical billionaire.
You just have to go out there and do the work. And if people do the work, maybe they're rough around the edges, you can work on that side a lot easier than you can work on people who just aren't motivated to do the work.
Cuban is a shark for a reason, because he's driven, alert, and ready to seize an opportunity when it comes. But Cuban is also careful in evaluating how good opportunities actually are. And what better example of this than Shark Tank? It's the show where aspiring entrepreneurs get to pitch their ideas and compete for funding from a panel of wealthy business sharks. Cuban has never been shy to express his opinions on what he thinks of a pitch.
You're investing in
high fiber.
It's nonsense, Robert. It's all nonsense across the board. You're such a con artist. How can you guys be so gullible?
The show is a genius bid to direct more attention to Cuban and the other sharks, all while acquiring more talent through TV drama. Cuban Cuban even debuts in Sharknado 3 as the American president. Not to mention, Cuban even temporarily allowed fans to use Dogecoin to buy official Dallas Mavericks merchandise. Oh, and he also owns a 77-acre town of Mustang in Texas, because a buddy needed to sell it. But these are a sideshow compared to Shark Tank. Even with his reputation for not watching his language, Cuban puts his money where his mouth is and always lives up to his word, even though he's not without controversy.
Mark Cuban, not the smartest guy, in my opinion. Just like one of these intense dudes that's not that smart. Really intense.
Busted moves on Dancing with the Stars. But now, Cuban is walking into a different court in Texas as he faces federal insider trading charges.
Nevertheless, Cuban shines with an incredible work ethic, an incredible basketball comeback story, and interesting side ventures like his cost-plus drugs.
We literally can change the game for medications, and that's what we did with costplusdrugs.com.
Love him or hate him, Mark goes against the grain. He doesn't look like your typical billionaire. He doesn't speak like one, and he doesn't act like one either, because none of that matters in the pursuit of riches. So what does?
So it's understanding what your skill set is, finding the right place to use those skills, and then going for it.
In 2023, Elon Musk, the richest man in the world, was dethroned, and in his place, a mystery man took the crown. Louis Vuitton, Christian Dior, Gucci, brands that everybody knows and admires. Whether on Instagram, the world's biggest runways, or the most powerful presidents, their products are everywhere. And they all have one thing in common. They are all owned by one man, Bernard Arnault. The richest man in the world, who single-handedly built the biggest luxury conglomerate in the world, LVMH. His merciless business tactics earned him the nickname Wolf in Kashmir, a cold-hearted killer that betrayed friends and exploited partners only to accomplish his ultimate goal, amassing more wealth than anybody else. Unlike his billionaire peers, he lives a secretive and secluded life. Living like a Bond villain, Arnault has achieved it all. This is the story of the richest man in the world. In life, two things are inevitable: death and taxes. Until now, successful entrepreneurs like Bernard do everything possible to avoid tax, like creating offshore companies, trusts, and bank accounts. But you don't have to be a billionaire to beat your tax bill. Enter Nomad Capitalist, who literally wrote the book on how to reduce personal and corporate tax exposure through offshore strategies and more. Through completely legal, transparent, and ethical ways, Nomad Capitalist assists clients with finding simple solutions for their taxes. Whether you're a startup or a multinational organization, or maybe you're a successful investor wondering, like many, about moving to tax-friendly havens, Dubai, London, Singapore, where you could be paying as little as single-digit tax rates. Nomad Capitalist encourages people and businesses to move where they're treated best, and they accompany you through each and every step. While tax advisors are renowned for charging a lot and delivering little, Nomad Capitalist truly takes the time to get to know their clients, understand their unique circumstances, and offer a tailored solution. Whether it be establishing a foreign bank account, moving legally or physically abroad, getting dual citizenship. Some think they only have to move abroad, but the answer isn't just moving, but being strategic to maximize the benefit from moving. If you want to use the same strategies that big companies like LVMH use to avoid tax, Nomad Capitalist offers a premium service to assist with the complexity of moving abroad and reducing your tax. Open up a whole new world of opportunities today and click the link in the description. On March 5th, 1949, Bernard is born in Roubaix, France. Bernard never has to worry about anything. While some pick apart the rubble in post-war France, he learns piano and plays tennis, the typical rich kid lifestyle. His father studied engineering at one of the country's best universities and took over his father-in-law's civil engineering company, Ferré-Savinel. For his son, he has similar plans in mind. From early on, Bernard learns about business and entrepreneurship, the importance of taking risks, and being ambitious. Hence, it comes as no surprise that he wants to study here. Only a select group are eligible to study at École Polytechnique, and he's one of them. Equipped with his diploma in engineering, he begins working for his father's company. With his excellent business acumen and, frankly, a bit of nepotism, he climbs the ranks. Despite early success, Bernard doesn't feel happy about what he has achieved so far. His entire life, he has been praised for the fortune his father had built. Bernard has had enough. He wants to step out of his father's shadow to build an even greater legacy. Since his childhood, Bernard has been fascinated by luxurious products. Chanel, Cartier, Hermès, the list of popular luxury brands goes on and on. Unlike others, he isn't deceived by class and elegance, but recognizes their insane pricing power and profit margins. Without a doubt, luxury products are the perfect bricks to build an empire. Bernard can already envision his legacy, being the king of luxury. No, king of the world. How do you build a luxury empire? There are two different ways. You could start your own business, dominate the market, and grow exponentially. A long and tedious process as you fend off competition and develop your brand. Or you could just buy all the competition. For years, Arnaud has had his eye on the luxury goods manufacturer Christian Dior.
I was looking at several ideas and I hit Christian Dior, and immediately I thought this brand has a lot of potential.
He sees the opportunity to revitalize the fashion house with the right management to transform Dior into a global luxury brand. Despite all his efforts, its owners don't sell it to him. But to every good businessman, problems are just hidden opportunities. The year is 1984. When the rest of the world enjoys Ghostbusters, Europe's entire textile industry is facing major economic difficulties. While some girls try to snag a discount on a Louis Vuitton bag, Bernard Arnault sees a much bigger opportunity. Amid the textile industry crisis, he's not just shopping for luxury goods, but entire companies. Through a friend of his, Arnaud learns about the bankrupt textile company Boussac Saint-Frère. Its assets include the department store Le Bon Marché and the retail shop Conforama. But most importantly, Christian Dior. This perfect occasion to leverage his business knowledge and get one step closer to achieving his grand vision, ruling the world of luxury. But first, he has to win a bidding process with the French government. After long negotiations and making use of his connections to local politicians and influential entrepreneurs, Arnaud convinces the council. All he has to pay is a symbolic 1 franc, with the commitment of retaining at least 12,250 of the 16,000 jobs, a promise Bernard has no intention of keeping. Boussac has many problems: sky-high debt, declining profitability, and general management issues. Without cash, the company is doomed to fail in its current state, and so Bernard Arnault gets to work. He streamlines operations and cuts costs. The sale of most divisions generates $500 million, enough money to refocus the company. But it comes at a cost. 9,000 people get laid off as branches are sold to foreign investors. In the end, Arnault strips Boussac to its core, only keeping the department store Le Bon Marché and its initial target, Christian Dior. With enough cash in his hand, he is ready to start expanding. In no time, the company generates more than $2 billion in revenue. Owning multiple fashion brands and equipped with enough money, Arnault now has some serious skin in the game. But for him, participating is not enough. He wants to win. By any standard, Bernard Arnault can be considered successful. He's increased his net worth many times over and built a powerful company. But Bernard is not easily satisfied. He wants to have it all. He wants to be the emperor of luxury. And if he has to use some frowned upon methods to get there, so be it. Stock markets in the 1980s are ruled by a special type of investors. People that are driven by greed and only care about making money. No deal is too ruthless. Nobody stands a chance against them. It's the time of corporate raiders like Carl Icahn. He is known for his insatiable bloodlust and reckless tactics.
Icahn is the man who's been changing the face of American business with his threatened or actual takeovers of dozens of companies.
Growing up in a poor neighborhood in Queens, he rises to the top and builds an empire worth billions. Make sure to check out our biography about him. A corporate raider is an investor who buys large stakes in a company with the intention of gaining significant control over it. They might take over a company and push for changes to increase profitability, or try to break up a company into smaller parts to sell them for a profit. While corporate raids seem great to greedy Wall Street bankers, they are a nightmare for entrepreneurs who fear seeing their life's work sold. But how do you protect yourself against a hostile raider? Well, Arnault comes up with an idea to help the primarily family-managed luxury brands protect their heritages. Instead of fighting raiders alone, how about joining forces to become an unassailable fortress? Arnault presents his strategy to two rivaling luxury magnates, Alain Chevalier, CEO of Moet Hennessy, and Henri Racamier, president of Louis Vuitton. Both of them worry about losing everything they've worked for to hostile raiders. After countless hours of negotiations and persuasion, groundbreaking news is announced. Louis Vuitton and Moet Hennessy will merge, creating the world's largest luxury conglomerate to date, LVMH. Most luxury brands like Louis Vuitton, Dior, or Moet are relatively small and can be valued cheaply, especially since the European textile industry is heavily pressured by changing consumer preferences and globalization. Hostile raiders love this. Whenever a company is struggling, it can be acquired dirt cheap and drained for every last penny. But when combining multiple businesses and putting them under a shared holding company, they simply become too expensive for hostile takeovers, despite all their struggles. The merger, however, doesn't spell the end to Louis Vuitton's and Moet Hennessy's strategic worries. By combining forces, they may have taken care of outside threats, but what about internal conflicts? After all, they're still rivals. The two co-chairmen, Henri Racamier and Alain Chevalier, diverge heavily on strategic choices, essentially paralyzing the conglomerate. But as they say, when two quarrel, the third rejoices, and Bernard Arnault certainly rejoices. Shortly after LVMH is formed, one of the most shattering stock market crashes occurs, Black Monday of 1987.
The law of gravity hit Wall Street today, and financial markets around the world for that matter, as stock prices plunged even more than they did on Black Tuesday of 1929.
They're calling it the Monday Massacre, the worst drop in Wall Street history.
Within a single day, stock markets all around the world lose up to 46% of their value. Total losses are estimated at more than $1.7 trillion. But Bernard has an advantage over many others, a seemingly endless supply of money.
And as the saying goes, the time to buy is when there's blood in the streets, right?
He buys into LVMH at a bargain, secretly establishing a stake in the company. And it gets even better. Henri Racamier, the old CEO of Louis Vuitton, asks Arnault to acquire shares and mediate between the two rivaling chairmen. Bernard Arnault, the White Knight in Cashmere, should help return the company to a single direction. Asserting himself as the pivotal shareholder for a bright future, he gets into alliances with both parties. Time passes with no improvement in sight. Rumors start spreading behind closed doors. The public is uncertain until Bernard Arnault reveals his real intention in July 1988. The goal he had chased since the beginning. He begins purchasing stocks of LVMH whenever never possible. The following months, Arnault spends billions in a tough battle for control to eventually gain 43.5% of LVMH's shares and 35% of its voting rights, becoming the company's largest shareholder. Tall walls can stop raiders outside the castle, but no wall in the world can stop a Trojan horse. In January, he is elected chairman of the executive board and kicks out the old management. The company is now confronted with a dire future. Bernard Arnault has turned companies around before, but will his massive bet work out this time? LVMH's current state is far from perfect. Arnault faces a daunting challenge: how to turn around a struggling company. The luxury industry is highly competitive, and the company's brands struggle to define themselves. After identifying all issues within LVMH, he starts selling unprofitable divisions. The company has to be lean and efficient. He eliminates layers of unnecessary management, streamlines operations, and cuts costs, restructuring the company drastically. To make LVMH globally recognized, it needs to expand beyond France. Arnault begins opening stores in every major city. Knowing about the role of marketing, he invests heavily to increase visibility and desirability among all brands in the company's portfolio. Fashion magazines, billboards on Fifth Avenue, and tennis tournaments. LVMH advertisements and promotions are everywhere. People all around the globe should know about the company's glamorous products. However, Arnault doesn't neglect the most valuable asset: quality. All products hearing the LVMH name are of the highest grade possible.
To build a large business with our partners with one criteria: the best quality and the most elitist product in every line that we are selling throughout the world.
Within years, annual sales and profit are 5x'd. The share price of LVMH increases by 15x, boosting Bernard Arnault's net worth to new highs. It follows an unprecedented shopping frenzy, only beaten by trust fund girls looking to get their next Birkin bag. The wolf in cashmere seems unstoppable, a force of nature. He quietly consumes the biggest names in fashion, but one brand won't succumb so easy: Gucci. The renowned Italian leather goods manufacturer Gucci is making waves with its innovative designs and leadership. It's no wonder this arouses Arnault's interest. Following the ruthless principles he utilized for his LVMH takeover, he secretly begins buying up shares, slowly crawling up to them like a hunter on the prowl. But the ambush fails. Domenico De Sole, CEO of Gucci, is fiercely protective of the company's independence. Unlike many competitors, he does not give in and openly accuses Arnault of this creeping takeover. Arnault is not deterred easily and ups his stake from an initial 5% to more than 34%, all while insisting to be a supportive and unassertive stakeholder. Would you trust him? De Sole doesn't and proposes a deal. In exchange for board representation, Arnault would agree to stop increasing his stake any further. The French mogul refuses instantly. De Sole thinks to himself, if Arnault wants a fight, he can get one. He vigorously seeks a solution and soon discovers the answer. A loophole allows him to issue new shares only with the board's approval, cutting out shareholders like Bernard. Every time LVMH buys more shares, Gucci creates new ones to dilute his stake. The fight drags on for years, but ultimately a settlement is reached in September 2001. LVMH agrees to sell all its shares in Gucci, still walking away with a nice $700 million in profit. Despite this minor setback, LVMH rises to new highs, towering over its competitors. What happens when you reach the pinnacle of success? For Bernard Arnault, it's simple. Indulge in excess and extravagance. The rise of his luxury empire made him exorbitantly rich. Money has become an abundant treasure. Nothing is too expensive. Unlike wannabe riches showing off their prosperity, Bernard enjoys his wealth in private. His collection of high-end cars includes some of the rarest ever made by Ferrari, Bugatti, Koenigsegg and others, each worth millions. He pays millions for extravagant yachts, private islands, real estate all over the world, huge art collections, vineyards and raw wines. He sold all his private jets after the Elon Musk flight tracker debacle and only charters external aircraft, all to stay hidden from the public. Money not only buys things, but also creates unforgettable experiences, whether it's playing tennis with his favorite star, Roger Federer, or organizing lavish parties and events with Michelin chefs, famous musicians, or former presidents. Whenever an important family event arises, Arnault spares no effort and spends millions on a single evening. Despite his love for extravagant possessions, he doesn't forget about giving back to society. He donates hundreds of millions of euros to support innovative medical research, help disadvantaged families and children, and contribute to the rebuilding of the iconic Notre Dame Cathedral. Speaking of which, even at the highest echelons of wealth, competition between rival billionaires remains a game of one-upmanship, with each trying to outdo the other. After François Pinault, owner of the famous auction house Christie's, proposed to donate 100 million euros, Bernard had to assert his dominance and donate double the amount. A true silverback move. As impressive as his philanthropic efforts have been, his legacy extends far beyond charitable giving. His incredible success in the business world is undeniable, having transformed LVMH into the global luxury empire worth 460 billion it is today. With seemingly no end in sight, only one question remains. Will any company ever be able to rival the colossal monster Bernard has created? Larry Fink is easily the most controversial man in finance. It seems like the wider world is beginning to wake up to Larry Fink and his claim to infamy. BlackRock. A gargantuan company, mind-bogglingly big. In 2021, it was reported that BlackRock managed $10 trillion for clients. To put that into comparison, the third largest economy in the world, Japan, is only worth 5. A company the size of a nation, yet accountable to none. Larry enjoys a position of enormous power. One his critics say he abuses to no end, so long as it boosts profits. In recent years, however, Larry Fink has been increasingly vocal in changing things for the better. He champions a greener, more sustainable future and is personally leading the charge. Has Larry turned a new leaf and become a powerful force for good? Or is all this a publicity stunt? A poor cover-up for a man used to dealing in the dark, now dragged kicking and screaming into the light? While some ponder the duality of man or the meaning of life, Larry Fink doesn't concern himself with such trivial matters. Larry wrangles with a far more important question. How can he become one of the most powerful men in the world? How can he, the lowly son of a shoemaker, be spoken of in the same breath as presidents and world leaders? The obvious route is, of course, politics. Naturally, Larry enrolls in UCLA to study a BA in political theory. Then, in one of those funny moments, something seemingly insignificant changes everything. In his final year, Larry takes some extra classes in real estate, and he loves it. Larry no longer wants to be president, but a real estate tycoon. Then, after receiving his MBA in 1976, he isn't entirely sure what he wants to do, but his goal still remains the same: greatness. So like most insatiable finance graduates, he heads to the place where legends are born, Wall Street. The thing is, Larry doesn't know why legends come from Wall Street, nor the gauntlet waiting for him when he gets there. If you are already on Wall Street, an ambitious chimp looking to make it big in the finance world, or you are a silverback Chad pursuing your studies and pursuing your megalomaniac business plans, you might be familiar with these situations. Your daily schedule is packed with micro tasks, and your to-do list is full of stuff you would love to outsource. You would need an ambitious and intelligent junior chimp to help you with daily operations of running your life, so that you can conquer new net worth levels. Luckily, you can hire someone like that. It's not called a chimp, but it's a virtual assistant at Wing. Assistants provide personalized assistance to busy individuals and entrepreneurs. Their team is dedicated to helping you streamline your workload and optimize your productivity, from scheduling appointments and managing emails to conducting research and organizing your to-do list. Wing's virtual assistants can tackle any task with ease. Plus, with their flexible plans and affordable pricing, they can tailor assistance to fit your budget, even if you're a brokey. Whenever I had a question, customer support was able to help within minutes. Needless to say, I always felt valued as a customer, as a true GigaChat should. Don't let a busy schedule hold you back. Click the link in the description to learn more about Wing's virtual assistant services and how they can help you take your net worth to the next level. Now, 34 years old, Larry is at a crossroads. He spent his entire career, almost a decade, working for First Boston, an investment bank in New York. But he's just made a critical mistake, one that'll do more than just crease his tidy plans for world domination. Let's rewind, shall we? He started working in 1976 at First Boston's bond trading department. Although as a Jew, he faces the xenophobia of the era. Wall Street is blind to creed and color. It's purely moneytocratic. If you can make money, that's all that matters. It's a little bit like Giga University. And oh boy, did Larry find his calling. He printed money by the millions. How? 3 words: mortgage-backed securities. Words that send shivers down the back of Wall Street today, but in the 1980s, they are all the rage. Larry helped create this instrument, popularize it, and of course, profit immensely off of it. He had towering success at First Boston. Within 2 years, he was anointed managing director, the youngest ever in the firm's history. Furthermore, he had caught the attention of his higher-ups. Larry heard through the grapevine that he was even being considered for CEO. Of course, with such sudden success, Larry's ego ballooned. He started to rub people the wrong way, and in his own words, quote, "I was a jerk." Like King Midas, everything he touched turned gold. Wall Street puts men on pedestals, but it tears them down just as quickly. One misstep is all it takes. Larry, in an effort to secure the gilded crown of CEO, makes a huge gamble. Confident that interest rates are going to rise, he positions the firm to profit accordingly. He made sure the firm was insured in case he ended up being wrong. So, when Larry's great gamble goes wrong and interest rates plunged, Larry merely shrugs. He had anticipated this possibility and prepared for it, or at least he thought he had. Now imagine the horror when his colleagues tell him he'd made a mistake. He'd hatched his trade on incorrect numbers. A simple mistake, but a costly one. $100 million gone. Despite bringing in at least $1 billion to the firm throughout his career, First Boston's princeling becomes an outcast within the firm, and not long after, he's jobless. Larry had always gotten ahead by taking more risk than others, and ultimately failed for the same reason. For the first time, Larry carefully considered risk, weighed it in the palm of his hand. A potent drug, as intoxicating as it is dangerous. Larry had learned an excruciatingly painful lesson, but he intended to use it to his advantage. He would become a professional in managing risk. With newfound determination, Larry builds the A-team of traders. Not easy to do, mind you, when you're the leper of Wall Street. but he manages to build his team nonetheless. 8 all-stars in total. Now all he needs is financial backing. Also surprisingly hard to do after having just lost $100 million. That's when Larry comes into the orbit of legendary financier and co-founder of Blackstone, Stephen Schwarzman. If you wanted to learn more about him, I may have made a video on him. For a 50% stake in the business, Schwarzman bankrolls $5 million to the fledgling business named BlackRock. Wait a minute, Blackstone and BlackRock? Yes, I know, not the most creative bunch. Still, Fink's idea of building a business to manage risk pays off, despite clearly being a stressful job. Larry and Stephen's risk and asset management firm starts making money within months, and in a year they are already managing billions of dollars. However, it isn't long before the pair butt heads. Larry wants to draw talent, the best of the best, to BlackRock, and he decides to offer up ownership of the company as a lure. But he wants it to come entirely out of Stephen's part. Larry insists that he and his team do all the work. It's only fair that Stephen cough up some ownership. But in an act Stephen later describes as a heroic mistake, Stephen stands his ground. In his own words, "I believed that once you signed something, you stuck to it." Even though by 1994 BlackRock managed more than $50 billion, the two parties won't budge, neither back down, and so the two finance magnates split. Stephen focuses on building Blackstone, and Larry BlackRock. Today, the two sibling companies are both expansive empires, and both men billionaires. After BlackRock goes public in 1999, it enters an era of rapid growth and expansion. To realize his grand vision of BlackRock becoming a sprawling empire, Larry goes on a shopping spree in the early 2000s. With each company they absorb, BlackRock grows tremendously, with their assets under management rising dramatically each passing year. Still, it's in 2009 where Larry will acquire the thing that will make BlackRock a world power: mortgage-backed securities. Remember those? Larry, the kingpin of these kinds of securities in the 80s, had since learned his lesson. For the last 20 years, he'd been busy nurturing his risk management empire, extending its reach, bolstering its influence. But MBSs hadn't conveniently disappeared. In fact, they'd cast a spell over American finance and promptly corrupted it. If you want to learn more about MBSs, there are great detailed videos, just like this one. Larry, familiar with the sting of MBSs, had limited BlackRock's exposure to these volatile securities. Wall Street, on the other hand, had gorged themselves on these mortgage-backed securities without really understanding how rotten they were. Huge financial giants woke up to the realization that the billions they had invested in these assets were evaporating before their eyes. As they watched Bear Stearns lose 90% of its value and the Titan Lehman Brothers become the Titanic, everyone began to panic. This spelled disaster to many, but opportunity to a few. Companies run conservatively, like JP Morgan, managed to scoop up sickly competitors at a bargain, as you can learn in our Jamie Dimon biography. Larry didn't intend to miss the party. Barclays Bank bought part of the collapsed Lehman, thinking they were getting a steal, until they ran the numbers and figured out that they'd bought the financial equivalent of nuclear waste. The situation rapidly deteriorated, and Barclays needed to raise some serious cash fast, so they brought out the crown jewel, BGI, or Barclays Global Investors. Within BGI was the iShares ETF, the largest issuer of ETFs worldwide at the time. Larry refused to let the opportunity pass. One of the few cash flush companies left, BlackRock bought BGI out for $13.5 billion. Although rarely spoken of, it's the deal that cemented BlackRock as the world's biggest asset manager. As if that wasn't enough, passive ETFs like iShares would grow phenomenally popular over the following years. Actively managed ETFs struggled and continue to struggle to match the returns of low-cost passive ETFs. With a stranglehold over passive ETFs right before their boom as an investing vehicle, Larry Fink must have been feeling pretty pleased with himself. On top of well-timed and even better priced acquisitions, BlackRock stands out from its competitors. Investors, now rabid to find a safe harbor for their cash, crowd the relatively unscathed BlackRock and beg them to take their money. If all that isn't enough, these investment tools like mortgage-backed securities, the ones wreaking havoc on firms across the world, well, they're so darn complicated. Companies stuck with these investments struggle to make sense of them. Only a select few truly understand them, and Larry Fink suddenly becomes a very popular man. Everyone wants Larry to take a look at their investment portfolios and lend his wisdom, for a price of course. Even the Fed, trying to patch the pieces of a crumbling economy and stop the bleeding, have Larry on speed dial and call him in to consult on the restructuring and buyouts of collapsing banks. While American finance takes years to rebound, Larry has managed to capitalize on the crisis. He emerges with friends in high places, more money than ever, and what he's always wanted, the influence of a president, a company like a world power, without a single campaign nor a single vote. True power. Larry has always wanted to be important, and now that he's more important than he ever dreamed of, he's loving it. BlackRock and its handler Larry Fink have undeniable power and sway over institutions and nations. Consequently, they've recently been thrust into the eye of the public and by and large condemned. But is it deserved? The largest criticism is simply BlackRock's sheer size, $10 trillion under management.
With active pieces, it is an automation tool much like Zapier, Make, Pabbly, etc. And this allows able to beginners to completely new to the play. I'm not gonna waste your time on boring document crash course, cloud concept, flows. I'll be going over the core its interface. I'll be covering what people has this video simple software simplified tech. Make sure to subscribe to this channel and click to. Let's briefly talk about the website to give you different options. The cloud edition. So I'm going over that. So if you go with the but it comes with a station and everything is always gonna be updated and responsive out of the box pending, so that it pins to transfer $1 per stuff. By default, it's 1,000 monthly tasks, and it's gonna be $35 per user. It's gonna be priced $1 per extra 1,000 tasks. So that's gonna be if you're running it on the active pieces cloud, which is the main option that most people are familiar with. Everything's gonna be ran by the active pieces team. So if you're running it on a self-hosted, by default, for one project, one user, in a pro version, it's gonna be free with unlimited tasks. You have more control over your environment.
drive connection. And now I have to use the file ID. And this is where I use the new 5.
The man accused of single-handedly triggering a massive 2010 stock plunge is appearing in a London courtroom this morning. The Dow Jones Industrial Average dropped 600 points in 5 minutes in what was called a flash crash. The United States is seeking his extradition.
I think it's ridiculous to say that this guy in this house in the suburbs in England
took down the market?
It's ridiculous.
Sheryl Sandberg, the legendary COO in charge of Meta, Satya Nadella, CEO of Microsoft, Mitt Romney, US presidential candidate, and John Legend, the Grammy Award-winning musician. They all have one particular thing in common that they share with other extremely successful people. They all work for one of these 3 consulting firms, the MBB. Traditionally, being part of the MBB meant being part of an elite group of a little bit like surgeons or lawyers. So for years, they have been the feeding pipeline for ambitious people looking to make millions. The perfect first job that symbolizes prestige, status, and success. But through a lot of scandals in recent years, their reputation has taken a major hit.
More than 130 people in the U.S. die each day after overdosing on opioids.
Opioid.
The opioid crisis.
Behind the glittery facade of MBB, there is a darker side. Scandal after scandal has defined the industry in these past years. But how exactly does their business model work? Are the MBB responsible for the US brain drain, recruiting the world's brightest minds to work on pointless PowerPoint presentations instead of actual innovations for society? Could it be that the renowned MBB, famous for assisting the moon landing and consulting UNICEF, are actually creating more damage than value in the world? Before we dive into today's video, now I'm blessed with my hair genetics, but I also wanted to stay that way. At the same time, I wanted a solution that's convenient and effective because I need to travel a lot for my business. That's when I discovered Keeps. Their treatments are not only affordable, but also 90% effective according to clinical studies. Keeps is an online subscription service that brings clinically proven treatments for hair loss right to your doorstep. They provide personalized treatment plans tailored to your unique needs, all recommended by licensed medical providers. Plus, the flexibility of choosing delivery options means you're in control of your hair care journey. Keeps offers both FDA-approved hair loss treatment options as well as a 2-in-1 gel for that extra boost. From hair thickening shampoo to conditioner and styling pomade, they got you covered. They have helped nearly 1 million men keep their hair with over 4,500 5-star reviews. Treatments are delivered discreetly to your door. Now, if you're ready to take the next step in your hair care journey, hair loss stops with Keeps, and I've got a special offer for you. Head to keeps.com/megalomedia or click the link in the description to get started. Remember, Keeps is not just about hair, it's about confidence. Click the link in the description and get started. Today, McKinsey, BCG, and Bain collectively employ more than 80,000 people in more than 250 offices across the globe, achieving tens of billions in revenue and making their owners millions in profit every single day. Thousands of supposedly ambitious young grads prefer to work for a company that someone else started instead of building their own legacy. But this phenomenon, this industry, it all started with one person. So how do you invent a $900 billion industry from scratch? Enter Arthur D. Little. Initially a man of science and innovation, he lays the foundation for an industry that will reshape global business strategies and even political decision-making. Arthur Dehon Little is not just any chemist. He is a visionary who sees the enormous potential of applying scientific principles to solve the most complex business problems. After graduating from MIT, Little co-founds his soon-to-be large consulting company. Guys, who wrote this script? Give this man a raise. Anyways, he co-founds his soon-to-be large consulting company, Arthur D. Little Inc. in 1886. The city of the founding? Boston, his hometown and the scientific capital of the United States. Then already one of the biggest cities in America, Boston would continue to be crucial for the development of the consulting industry. Even to this day, the city's brightest minds don't go into research or build innovative companies. They join one of the infamous consulting firms after graduating with honors MIT or Harvard. And that's a massive problem for society, as we will find out. In its first years, Little's company isn't a management consulting firm, but focuses on technical and laboratory services. However, Little's approach is different. Through his quickly growing industry knowledge, he's able to see unique opportunities that his clients missed. He is able to predict market trends and technological advancements ahead of time and knows more about the market his customers operate in than themselves. And if you also want to know more about business and finance than any of your normie peers, you should subscribe and leave some comments. How about this smooth segue? A belief that shapes the way ADL runs their consulting practice to this day. Other people's troubles are our business. A philosophy that in 1907 will become the first guiding slogan of what will later be an entire industry. But how does a company that initially focuses on providing technical and laboratory services evolve into a management consulting giant that will jumpstart one of the most influential industries today? It all starts with one specific contract. In 1911, Arthur D. Little Inc. organizes the creation of the first R&D lab for the industrial giant General Motors. With this project, Little basically invents contracted professional services. This is a turning point for ADL, as it marks the birth of a whole new business model. It is pioneering the way his firm makes money. Essentially, this is the birth hour of management consulting. By 1935, when Little passes away, he has not only founded the largest unendowed commercial industrial research laboratory in the US, he has also planted the seeds for what will become a global consulting powerhouse. His legacy is a new breed of consulting, one that combines scientific analysis with business acumen, reshaping how organizations tackle their most complex problems. There is one little known thing that the most successful entrepreneurs and megalomaniacs share. They aren't the first to offer a product or service. They are the first to do it well. One consultancy follows this credo and, after only a few years, dominates an entire industry.
Usually when you hear the McKinsey consultants are coming to see you, it sends a shudder through most organizations.
Influencing global economies, space programs, the occasional drug epidemic, international politics, and even wars between nations. But how does this come to be? It all starts with the teacher, James Oscar McKinsey. A University of Chicago professor creates the firm that revolutionizes management consulting. His company will shape world-leading organizations and create questionable value for decades to come. McKinsey's vision is simple yet profound, using technical accounting principles as a tool for management. This innovative approach lays the foundation for McKinsey & Company in Chicago, initially an accounting and management firm. James' unique perspective on business efficiency comes from his wealth of experience with military suppliers. During his tenure at the United States Army Ordnance Department, he witnesses horrendous inefficiencies on a daily basis. Since the military is financed by taxpayers' money, McKinsey gets to work and starts to optimize. His ethos and practices are further defined by Marvin Boer, who joins the firm early on. To this day, he is regarded as one of the most influential people in the history of consulting, next to Kevin John. Bauer, a Harvard-educated lawyer with a strong economics background, introduces principles and values that form the bedrock of McKinsey's famous company culture. For example, the up or out policy. Thanks to Bauer's efforts to increase efficiency, every year the 15% of consultants who perform the lowest are asked to leave the company. This practice takes place even today, and it remains the main source for insane pressure and long working hours of strategy consultants worldwide. When I used to work in consulting, we often started work at the client side at 9 a.m. and then we worked until 11 p.m. or midnight. That was normal. The less pleasant projects were when we regularly finished around 2 or 3 a.m. and then you need to get back to the hotel. Due to a powerful shared vision, the 1940s and 1950s mark an era of expansion for McKinsey. This is especially true for Europe. The firm and its client base grow rapidly. Young and mildly naive consultants are suddenly everywhere, advising CEOs across the globe. By now, the project range expands among governments, defense contractors, and blue-chip companies. By 1966, McKinsey establishes its presence in key global cities, including London, Paris, and Amsterdam. This period also sees the firm shift from being an accounting-focused entity to the category-defining management consulting juggernaut. But the road to dominance does not come without challenges. The entry of competitors like the Boston Consulting Group, as well as Bain & Company in the late 1960s and early 1970s, intensifies the competition. These new rivals introduce branded products and specialized niche industry expertise. They are posing a significant threat to McKinsey's generalist stance. If they want to stay on top, McKinsey needs to innovate. Responding to the competitive pressure, McKinsey, under the leadership of Ron Daniel, begins to shift its strategy. The firm develops specialized working groups and focuses on building expertise in strategy, operations, and organization. This period also marks the beginning of McKinsey's efforts in knowledge management, a pivotal move that would cement McKinsey's supremacy. This goes back to the central dilemma. As a consultant, how do you consult a client that has been in the industry for decades? The only way this is possible is by specializing. For example, I did a lot of projects in the CGR, so consumer goods and retail, and the M&A space. And it allowed me to share my experiences from one project with a client on the second project after that. Entering the 1990s, McKinsey finds itself at the heart of the digital revolution. The firm sets up accelerators to support internet startups, reflecting a strategic shift towards technology and e-commerce. Despite the dot-com bubble and the subsequent economic downturn, McKinsey's agility and strategic foresight allow it to keep growing, and they grow immensely. The turn of the millennium sees McKinsey expand its focus on the public and social sectors. They take on numerous pro bono clients and invest significantly in knowledge management. Pro bono publico is a Latin phrase that means for the common good of the public. And pro bono consulting is helping individuals or mostly organizations for free or nearly free. Why? Could be intrinsic motivation, could be virtue signaling. This period also demonstrates the firm's increased emphasis on understanding specific markets more profoundly, which leads to the founding of McKinsey's industry groups, specialized units within the firm that are focusing on consulting specific industries. Now, this structure is considered a blueprint for most consultancies worldwide. Today, McKinsey stands as the global leader in consulting.
It's one of the largest and most influential consulting firms in the world.
The firm boasts over 30,000 employees across 130 cities and generates tens of billions in revenue. Its reach into areas like digital transformation and sustainability tries to convey a forward-looking ethos. Recent initiatives in carbon dioxide removal and green tech acquisitions make McKinsey seem like the good guys in this story. Yet, McKinsey's path has been dotted with controversies. Scandals involving insider trading, fraud, and bribery have taken their toll on McKinsey's reputation. And McKinsey isn't the only one. They are just the biggest of dozens of firms that influence the decisions of world leaders. Oliver Wyman, Monitor Deloitte, Roland Berger, A.T. Kearney. As we look at McKinsey's two biggest rivals, Boston Consulting Group and Bain & Company, let's examine the true nature of these firms. And we'll start with a friendly little tournament that turns into a betrayal and subsequently leads to one of the biggest feuds in the history of business. McKinsey and BCG are battling it out, dividing the market between them. But soon there's going to be a third party emerging from the shadows. In the 1970s, the consulting world is split between two behemoths, McKinsey and BCG. But in the shadow of the giants, a fierce competitor silently prepares. The former CEO of YouTube, the former CEO of Dell, and Senator Mitt Romney all worked for them. Bain & Company. The story of Bain & Company begins with a bold move, and it starts from within the ranks of BCG. In the 1970s, BCG under Bruce Henderson's leadership is pioneering new business strategies. Within its walls, two teams, the red and blue faction, compete fiercely against each other, pushing the bounds of innovation. Bill Bain, leader of the blue team, is a standout with his distinctive approach to excellent client management. In a move that will reshape the consulting landscape, Bain and his blue team make a big decision. They suddenly leave BCG to establish a new competitor, Bain & Company. Their philosophy? Closer, more exclusive client relationships. This is in strong contrast to McKinsey's and BCG's more analytical.
Fuck the Vaseline, baby. The light, I'm giving it to life. I'm gonna make a sweet love to life. Right now it is 9:11 in the morning. We're getting fired up here. BDH. I got the mind-blowing. I waited like 8 weeks for these fucking wheels. And the wheels come in and there was a chip. There was a little tiny chip in the paint on one of the wheels. And I was like, are you kidding me? Are you like $25,000 for wheels? And they got a chip in the paint? So I had to warranty the fucking paint on the wheels. So they're sending the wheels. Oh, it's a fucking nightmare, man. Nightmare. It's a nightmare. Absolute nightmare. What does a BDH stand for? Big Dick House. I don't know why that's even like people don't know that. Who's the best trader that you've had on the BDH? Who's the best trader? Nutty Bar. Nutty Bar for sure. Ike. Yeah, there it is. Forex Ike. He knows. Look at him. He's in the chat. Actually, Landon. Landon might be the best trader ever to come to the BDH. That kid's on fire. He's going to be here next Friday. He's skipping school next Friday, coming to the BDH. He said he missed you guys. He missed you guys. What's Victoria's car? She drives a Macan Porsche Macan. Is it a Macan or Macon? A Macon. Pat, did Rips will go to BDH? Pat, did Rips will go to, I don't know. Rips keeps saying that he doesn't have a passport or something. I don't fucking know. I've invited him like multiple times and I'm not gonna keep begging him. I'm not gonna keep begging for him to come. That sounded weird to say it like that, but yeah, I'm not gonna keep begging him to come. All right, stop making me say weird shit. Oh man. If there was one YouTube live streamer, trader, or whatever you call them, that you guys would like to see at the BDH, who would it be? Who would you guys like to see at the BDH? Other than ICT, obviously. You know, other than ICT. Everybody, I know. Yes, I know y'all want to see ICT. I know, okay? I know. Y'all want to see him, but he ain't gonna come because he's living in his fucking mom's basement right now. Tim Sykes. Oh man, Tory Trades. I gotta get Tory Trades up in here. $1 million trade-off. Me versus Tory Trades. It might take a month to do the tournament, but it'll be fun either way. We're gonna Tory Trades come to the BDH. You think she thinks about me at night, late at night, when she's laying there in bed, looking at Instagram, thinking about, damn, I wish I was friends with the BDH. I wish Patrick would let me go to the BDH. I think she does. Dead Ma. Yes, that's the song right now. Do I think about Tori at night? I think about Victoria. You know what I mean? You know, big old titties in my face. All right. Looking here at the Nasdaq, the ES, we kind of have a double top here on the ES 6,470 level. Is this like a big old bear flag here on the hourly chart? We got 9:45 numbers. We got 10 o'clock numbers here today, chat. We got 9:45. We got 10 o'clock numbers. Be prepared for anything, right? Patience, 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 patience. I'm surprised nobody said fucking Tanya. Tanya's really fallen off. Tanya Trades. No one talks about her anymore. What happened to that girl? She was friends with the BDH, And then she chose to be a retard and be friends with ICT. And well, go retard, go broke. You know, that's what they say. That's the settings. Go ICT, go broke. Somebody said we're bearish until we can get above 485. So wait a second. Wait a second. So what you're saying is we're bearish until we get above this level. That's all it is, right? That's all it is. Okay. Makes sense. Makes sense. How about Kellyanne? Oh God. I don't think Kellyanne's ready for the BDH. She's a little older, you know. She might be going through menopause or something. She's not ready for that BDH life. You gotta be a certain type of person, you know. BDH ain't for everybody. You gotta be somebody. And don't freak out, Kellyanne. I'm just joking. Don't write on Twitter about how I'm an asshole and I said that you're on menopause. It's a joke. I'm not serious. God, don't get everything all upset now. I'll give you a whole fucking Twitter post about how I called her old. Oh, well, yes, I know. Make a video on YouTube about how I'm an asshole because I said you got menopause. I don't know how that shit works. How does that shit work? I'm not a woman. I don't know I don't even know what menopause is. Oh, I saw that Humble Trader made a video. What was her video about? It was a video of her crying. What's her video? I gotta watch this for a second. I gotta watch this for a second here. Hey guys and girls.
Hi guys and girls. Email or Instagram and just in the comment section asking how I am and where I've been, etc. Since I haven't been posting a lot on this channel this year, as you can clearly see. It's been a year since I really sat down and really updated you on what's happening with my trading, this YouTube channel, stock scanner, my life, and everything. I'm sure if you've been following me for a while, you know I don't like to overshare. To me, Humble Trader is a channel and a brand about trading. So I want to keep things very professional but fun, of course. But I've never felt the need to share more aspects of my life outside of those containers that we talked. That have got here without your support, and people try to stir up drama with unsubstantiated
Yeah, hell
to
yeah.
provide some real context and facts about stocks, I co-founded this company in 2024. I was not an affiliate getting paid with referral fees. I was a co-founder. That means I wasn't the only person building the product.
Yeah, no shit. No shit. No shit. No shit. No shit. You're telling me that some little Asian girl on YouTube wasn't the only person behind her fucking $1 million business of selling courses? No shit. No fucking shit. Is anybody fucking surprised? Now we're gonna hear her whole life story about how trading is hard and she's sorry that she's made all her millions of dollars with her community of fucking retards. Yeah, no. No, 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 no. No, no, no. No, 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 no. I love when people like point out the obvious. Like, guys, I just wanted to make this video to let everybody know that obviously it wasn't just me who came up with the idea to sell, you know, a $3,000 mentorship and market it to fucking retards on the internet, man. You know? God, Victoria just said the Filipino needs to get fired. Damn, that's fucked up. Victoria said, I don't like the graphics. They look worse than the other ones. Wow, awkward. Filipino gonna lose his job today. He's gonna lose his job today. Oh no, not poor little Filipino. Fuck. Oh man. Sorry, somebody said they got 3 meetings today. Sorry about that. Let's get into it. Let's focus. All right, we got plenty of time here until market opens. Right now, the Nasdaq pulling back here. I mean, the bigger picture is kind of like head and shoulders, inverted head and shoulders here. So, I mean, pretty much, I think if we get above, you know, if we get above this area here, above that 550 area, well then, pretty easy, maybe like up into here next. So, what's up with these women crying on YouTube? Because y'all are fucking, you know what it is? You know why they do it, right? Because their simps fucking love it. Their simps are like, they're like, I'm gonna comment and I'm gonna tell Tori Trades that everything's gonna be okay. Tori, don't worry, honey, you're beautiful. Just because you had to go to 3 meetings doesn't mean it's okay, Tori. It's okay. Everybody go comment on Tori Trades' new video and go, it's okay, honey. It's okay, baby girl. That's all I'm gonna comment. I'm gonna make a video later talking about the problem in this world right now with these women. We got all these women out here try to fucking manipulate men. That's all it is, let's be honest. They know what they're doing. They put a little sad video up about how lonely they are, how their life's so hard because they had 2 meetings. And then all the simps, you know, all the simps are like, no, Tori, you're beautiful. You're such a beautiful person. People on the internet call me fat, ugly, retarded, a gambler, ugly, fat, everything. Nobody ever like consoles me. No one's ever like, Patrick, don't worry. Just because your head's really big doesn't mean that you have Down syndrome. I'm like, well, maybe I do. Maybe I do. Menopause equal no more men. Oh, man. And they'll call me gay. That's fucked up, man. That's fucked up, man. See, no one's ever leaving nice comments about how I'm nice. We got a microphone? All right, I think what would be really kind of maybe the play here is we swipe the London low and then we push back up. What do y'all think? What do y'all think? Oh, I gotta fix the Streamlabs. Streamlabs be lying right now. There's no 90% off sale at Apex. I gotta change that. It's bogus, Pat. You're not fat. No, I'm fat. I'm too fat to fit into little Japanese racing chairs. I gotta get new seats for the Porsches because they got little Filipino, they got little Japanese people seats. My big ass, I got a big old booty. Can't fit in them. Can't fit in them. So I think, yeah, let's look for like a swipe of the lows at open, and then maybe we get that little pushback up, try to take out these highs up here. We got a lot of resistance up here, 550, 530 area, pivot point there, 545 on the hourly chart. I like it. We got numbers today, 9:45 and 10 o'clock. If you guys have not already hit that like button, subscribe button, you know what to do. Let's blow it up, baby. All I ask from you is 1 like per day. 1 like per day is gonna help me become a billionaire, all right? Why would you not want me to be a billionaire? Think about that. Like, imagine if you could have, you could say to people like, yeah, that guy Patrick Whelan, the reason that he's a billionaire is because I watched his live stream. I used his code. I hit the like button. You know, like those are just like little things that you can do to help me get richer. Are we gonna go short or are we gonna go long? I mean, I'm looking for a long here at open, to be honest. We'll see. But I want to see that fake out. I want to get down there, touch that dotted line, right? Touch that dotted line there, and then we're targeting these highs. It's kind of like my theory about it. Damn, Frank Angelo. I click it twice for you every day. Wait. If you click the like button twice, that means that you take away the like. Don't click it twice. Pat, please stop DVR to help. What the fuck is DVR, bro? Refresh your stream. There's no lag. We're live. We got 3 minutes to market open. 2 likes don't make a like. Digital video recording. I'm not recording. What are you talking about? Whenever I think about like some guy who's complaining about the lag on the stream, this is what I imagine, right? Like I imagine this, that person, they're literally like living in this little box somewhere. And they're like, Patrick, this is the guy in the chat who says the stream is lagging. This is where I imagine he lives at. He's like, Patrick, the stream is lagging, Patrick. What? I don't understand. What is the issue here? Patrick, there's an issue here, man. Sorry. I didn't mean to talk about your mud hut. Got a mud hut? I got a mud hut. You want to play with my mud hut? That sounds like sexual when you think about it, like mud hut. That could be like some freaky position. Take some girl back from the bar late at night, and she gets home and she says, "Hey, do you want to play with my mud hut?" Ew, no, I do not. No, thank you. All right, we're back up here towards the VWAP now. Let's see what happens. You get stuck at the VWAP there. First 5 minutes, party, drink Bacardi. Do I have back pain from fucking carrying all this weight, all this money? Speaking of back pain, I'm gonna get a massage today. I'm gonna go message my massage lady. All right, here we go. Push up there to the VWAP for now. We got the 9:45 news, 10 o'clock news here today. This thing should kind of swipe these lows here, right? There we go. Swiping the lows. Let's get down there, touch that 450 area. Maybe looking for a long down there. Is your massage lady? No, that's messed up. Don't say that. Come on, chat. Gotta be respectful. Humble Trader is not my massage lady, okay? I'm drawing the line right there between being disrespectful and respectful, okay? Humble Trader used to be my biggest fan on YouTube. I swear to God. Nobody believes me, but I swear to God she was. All right, we swiped those like lows down there. But I think we can maybe go a little lower. That 450 area would be great, but it's kind of being annoying now. Just watching these candles here. I might look for a long now. Now that we swipe those lows, I'm gonna try the long there and try to go right up there to the 91s. Quick 10 points here. Just this opening range kind of play. Don't want to get too greedy here. Come on. Let me move this up now a little bit. All right. There we go. I like that. That was good. That was easy. I like that. That was easy. Don't get any easier than that. Don't get no easier than that, chat. The reason I like that for a long is the fact that we already swiped that 460 area and we got right back up there above the EMAs pretty quickly. So was thinking that we would at least kind of take out these wicks of these candles, kind of swipe some of that, maybe this 490 area, just a quick little 10 points. So we're still holding up. This could go a little higher. If you're still long from the 73s, move the stop to the 88s, the low of these candles now. That way you guarantee at least 15 points. All right? Nothing wrong with taking profit. I'm an idiot. Don't follow me. Just because I'm not taking profit doesn't mean that you should not take profit. Take profit. If you're up $1,000, $100, whatever it is, take profit. There's nothing wrong with that. Making it very simple for everybody in the chat now. And just to show you, I'm gonna take a little bit of profit right there. Look at that. I took a little bit of profit just to show you that it's okay to take a little bit of profit. I still got my stops there at the 89s. I'll look for the ride. And like I said, I think the opening range high just makes sense. Maybe even more. Start to trend here. No one ever went broke taking profit. I agree. Little Tomato said, all the oscillators are red. We're going down. Okay. Sounds like a good sound. Hey, if all of your oscillators are red, get short then. Don't type about it. Don't talk about it. Be about it. You know what I mean? If everything's telling you to get short, then you should probably get short. If I was you, I would definitely get short here. If your oscillator says that it's a good time to get short, I would definitely get short there. Fuck! I sold all 4. I was gonna sell one more there at 520. Whatever. That's silly. That's silly. Whoopsies. But yeah, I mean, the people that are like, but Patrick, my indicator said that it's a short. Okay. Then fucking get short and shut the fuck up about it. God. I mean, think about it like this, guys. If you're like, get rid of the bullshit fucking... Where the fuck is that music at? All right, look. Think about it like this, right? What does the market do? The market it makes different, like a leg. Let's think about it like a leg, right? The market's gonna make a leg here. So it's like if the market's moving up, what makes the most sense? It's like, okay, we push up here, then we maybe pull back, push back up, like that. It goes like that, right? So if you're long from the bottom down here, why get out here? Why would you get out right at 520? Why 520 there? Why not look for this high? There's no reason to get out until we hit some major resistance. Look at the 15-minute chart. Same thing on the 15-minute chart. Everybody talking about, oh, it's a short. Get out now, Patrick, get out. Why? Why? You know what I mean? Why? Why would you? That makes no sense to me. That's why I was totally fine holding that long. So, I mean, look at the ES here as well. The ES is leading right now. ES broke out of the opening range high. Like, this shit it ain't rocket science, man. It really ain't. It ain't rocket science. But I just love the people in the chat who are gonna sit here and be like, "Well, Patrick, my oscillator said the market's gonna dump." I'm like, hey, well, how about this? You go fuck your oscillator, and I'll just keep on making money. How about that? Max made 50 points. Congratulations to Max in the chat, making 50 points there. So, make money, make money, make money! Make money, make money, make money! Money! Who made money today on that trade? Anybody trade that? Anybody? Look at that. It's amazing. It's amazing that people make money here somehow. I don't know. You would think that for all the people people that talk shit in the chat and all the haters, you know, for you would think that all the haters that, you know, like, wow, you would think that nobody makes money here. That's what you would think, right? Like, that's what you would think. You know, like if you were thinking, you'd be like, well, I mean, there's so many haters there. Patrick, there must be no money being made. That's what you would think. But looks like the proof is in the pudding. Looks like the proof is in the pudding. And the best part, guys, the best part of this whole thing is what? What's the best part? What is the best part? You wanna know what the best part is? Not only did I let you know about this trade long before it even happened, when we were down at these lows, what did I say? I'm like, hey, all I wanna see happen is if we get back up here above the VWAP, then I'm looking for a long, right? And what happened? What happened? Did it work? You know, as this is pushing back up, let's just focus on this. You really want to, I want you guys to really understand why I thought that was a good long. Look at that 5-minute chart. The fact that we had a bear flag, right? We had that bear flag there. We broke the downside and then we get right back up it, The rack, you know, that's a, what is that? That's a failed breakdown. What does a failed breakdown tell me? If there's a failed breakdown, well, looks like there might be a really good chance that we push back up. And look at that. All for free. I did this all for free today, by the way. And look what happens as the market's pushing back up here. So my whole idea was let's wait to get back above the VWAP, look for a pullback, and then we're trying to push up there towards the 500s. I talked about this whole entire trade before it even happened. So you can hate me, you can love me, but you can't say that I didn't tell you so. So there it is. I don't know what else to say. It's just frustrating that it's like every day I gotta continuously listen to the fucking morons. The moron. Time for a beer, boys. Time for a beer. Cheers. Oh, nothing like a good beer in the morning. You know what I mean? Nice little pullback here. See, the great thing right now is just, again, being patient, waiting for that pullback here, look for something good to happen. And then, let's see, we pulled right. See, I hate, on the 1-minute chart, when we break right through that 21 EMA, that's never like a good thing. So this could maybe go a little deeper. Because if you look at like 5-minute chart, guess what? That's the thing that I'm looking at too. I'm like, okay, you know, the 1-minute chart, we went right through that EMA. We got the 21 EMA there. We got the VWAP down here. So if I'm looking at the 5-minute chart, we're like, maybe there's a little bit more pullback, you know, for another long opportunity. What's next? Look for the next setup, really. Let this 5-minute chart play out. I think probably after 11 o'clock, 10:50 to 11 o'clock time, we get a better move here. Just being patient. Patience, 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 patience. By the way, I started a new day trade, not a new channel, a new car show. This is my new, I started a new car YouTube channel. The guy, the GM was like, what are you doing? This guy was trading. How funny is this? The guy, the car dealer, he was trading. I swear to God, I walked up and I saw this guy with trading on his desk, and I'm dying. I'm like, are you kidding me? He was trading Apex accounts. There's not much deal to make. It's basically just gonna buy it and then get out of here. It is now 2:09. We got here at about 1:50. It's been about 20 minutes. We've already signed all the paperwork, so that's 20 minutes so far. We even had to fight the GM to get into the place. I bet he's gonna act a little differently now when we leave. How much I bet. I bet he won't be so mean. He'll be a little nicer. No, thank you, sir. Thank you, sir, for spending your money here. Fastest sale in history.
And this is your coverages. These are your deductible.
Just got back over here. Look at him. He was loading up on Apex accounts. Car salesman loading up on the. He loading up on the Apex. He got the Apex accounts, the car salesman. He got the Apex accounts, man. But yeah, I want to try to start putting out videos pretty regularly, like maybe 2 or 3 a week of kind of what I'm doing with the cars and what I'm buying, how I'm you know, what I'm doing and all that fun stuff. So if you guys are interested, hit that like button, subscribe button, and look at that new channel. I would love to get 1,000 subscribers on there really quickly. That'd be really nice. It'd be a nice present for everybody watching. We got 4,000 people watching right now, so we literally could get 1,000 subscribers like in the next 5 minutes if you all just like, you know, helped me help you kind of thing. You know, help me kind of help you. Do I think it's a good time to get long? Honestly, not a bad idea. We pulled back here. Let's see. Should we go for a little longy dongy? Little longy dongy? I think if we can get back up here above this EMA, there might be the longy dongy. Longy dongy dongy diggy. Longy doogie diggy doogie doogie. Longy dongy. Let's try it. Longy dongy. Stop at the lows there on that little candle. Oh God, right when I get long. Full reversal. Full reversal. Classic. Just classic. Classic. Oh, lordy, lordy, lordy. Full reversal. Market's going down. Down. Guys, don't worry about the trade. Just look at the screen. You're all gonna be mesmerized. Use the code PW. Use the code PW. Sign up now. Sign up now. PW. Woo! 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 Just kidding. Don't sign up. Don't use the code PW. I'm just kidding. Come on, Nasdaq. Why is Nasdaq always got to be so mean to me? You ever feel like the Nasdaq? It's like I'm like targeted sometimes. I swear. I swear. This market, the Nasdaq just be like, it just trying to fuck with me. You know, it's like it loves to fuck with me. Y'all ever feel like that? I feel like targeted sometimes. I swear. I get targeted, man. Absolutely targeted. Link to the car YouTube. What the fuck? There's a link in the chat. Hit the subscribe button on my new car channel. First 1,000 subscribers, maybe I'll do something special. Something special. All right, Nasdaq, we're either gonna go or not. I'm gonna move this stop. I'm only gonna risk 5 points here, right? If we can't go, we can't go. We'll risk 5 points. No reason to let it come all the way down here and take 10 points. Might as well just let it be 5 points. The Nasdaq's like an old girlfriend, I swear. She's mad. She's mad. The Nasdaq is pissed off. She's pissed off that me and Victoria are in love and I no longer love the Nasdaq. I swear to God. It's a real story. I swear, Nasdaq, don't worry, baby girl. I spend at least 3 hours a day with you. You know, like these girls, man, they be so demanding. These women, they be so fucking demanding, man. They're never happy no matter what you do. You know, you work hard, you make money, and then they still complain. Like, well, yeah, you never have time to spend with me. All you think about is work, Patrick. You're never in the moment. Patrick, whenever we're together, you're not thinking about me. I'm like, why do I need to think about you when we're together? You know, that's the way I look at it. I'm like, well, what's the point? What do I need to think about? We're here we're here. I'm with you, you know, like, I'm literally with you. Why do I need to think about you? You would be like, if I was a girl, I'd be like, well, you know, Patrick, whenever you're not with me, you better think about me. And, you know, that's the way I look at it. But no, women are be like, yeah, but whenever we're together, you're not thinking about me. You're thinking about some car, you're thinking about some money, some trade, some business. I'm like, what? All right, we are up there to the 520s now. Nice little long there. Anybody get that 15 points? I've had some, like, I'm not gonna lie, I've had some good 15-point trades today. Every single loser that I had today, it gave at least 10 points, 15 points. Clicking Clever said, I'm a woman, it's so true. Well, I mean, why would I lie? Hey, if anybody knows what it's like to be a woman, I know. All right, I know what it's like to be a woman. You know? I know, like, ain't nobody know more about women than me. Trust me. Trust me, when it comes to women, I got a PhD in women. I've been looking at women since I was a young boy, looking at the women like, damn. I might have an addiction to women. All right, I'm gonna move my stop here to just like right above break even. I was looking to see if we can't get up there to make a new high. If we don't make a new high, it's all good. Like I said, nothing wrong with taking 20 points, 15 points. Take profit, people, take profit. Oh, fucking A. So, whatever. Stopped out for break even. What a stupid trade. Fucking, look, I mean, just so stupid. Why? Like, why? What a joke. Why? Like, it came, the Nasdaq literally did that on purpose. Looks like American Eagle sales are up after the Sydney Sweeney ad. What can we say? Sex sells, boys, sex sells. London closed. We got the 10:50 to 11 o'clock. What a fucking retard. What? Why? Like, why? Why? You know,
Lo que voy a
why?
mostrarte en este vídeo puede que me
What a
crea a mí
stupid,
mismo
like, what
mucha,
a stupid
mucha
thing.
competencia, porque esto que ves en pantalla,
Stupid.
expectativas. Por ejemplo, en este
Because
canal,
that's literally stupid.
clic, en este caso 630. No voy a enrollarme mucho en esto porque crear una
Just don't even make
inteligencia
sense.
artificial
Like,
es
why?
superfácil.
Why?
Vale, para usarla, aquí le damos a la tecla.
It's not liquidity, Jose. What the fuck are people talking about liquidity? Everybody's trading prop firms. Shut up.
Métodos para crear
There's no liquidity in the market no more. Everyone's trading prop firms now.
So that's going to be if you're running
Bro,
it
can
on
you
the
copy
active
trade
pieces,
multiple live
the
accounts?
active pieces team. When
What
you
does that
bar
mean?
control data hat, where you have an ad.
Why would you want to do that?
The recommended approach is either the Docker, which is the fast. Docker Compose is the better option or the best option. Obviously, they have AWS and
I still think the best
Google
comment
Cloud
that
VM as well.
I've ever seen, the
as
best comment
alternative,
in the
Docker
entire
Compose, you can
world,
run it.
and I've
So
seen
if
a
you
lot of good
care
comments, but the
hosting
best comment ever
so you
was
just
the
go
fact
with
that
CPUs
some guy
and
commented, he's like,
the
so if I buy a $50,000 account for $100, why can I not just take all the money out of the account? That's literally like, that was a real question. He's like, why can't I just, you know, if I buy a 50K account, why not just ask for to withdraw all the money?
Limit you have versus how much
You know why?
tasks you already
You don't even
used
need
so
to
far.
trade.
You have access to the admin console, which goes back to the
You know what I mean?
icon
Like, you
on
don't-
the top
you don't-
right.
you don't
see
need
that
to
you can see
trade
the
because
projects.
you can just-
If you have multiple projects, you can change your language,
Why
pieces,
not
and
just take the money out?
Going to the community and logging out. All right, so that's gonna be the name.
Patrick, I don't understand, man.
You get
Why even trade when you can get $50,000 for only $100?
Or if you just wanna turn it off, I think that's solely. I wanna get a notification of all the fields that I have manually, or you can go to a flow. You can add it there
Nasdaq.
as well.
I mean, I think she wants to go higher, boys. I really do. I'm gonna take another long here.
So all the
Fucking
different
A.
pieces you can add per
I don't
account.
know. It might be a terrible
Multiple
idea, but
and
let's see. Let's
so
just let it
configured.
ride.
Currently, it's not
I'm in one of
available
those
for me. I
moods.
think it's based on a
I'm
type
in
of
one of
account
those
you have.
moods.
I believe the enterprise
One of those
has this
moods.
option. So if you need to
I'm
back
okay
up
with
your
it. If we get stopped out,
environment
whatever.
and move it to a different one, you're gonna have to upgrade. All right, so let's
It's like
go
it's
take
either
a
gonna
look
fucking
at
just
the
start
flow. Let's
ramping
go
up
add
there to
a
the
new flow
550s
and
or
just kinda
it's
explain the
not. You
concept
know,
of
honestly.
a trigger and what it is. So a trigger
that's
is
kinda-
an event
that's where it
in
is,
which
to be
it starts
honest.
a workflow. It's a condition that
You
when
know?
it's met, it
Did you guys not
initiates
know
the
that you
automation
literally all you need
process.
to do
For
to become a
example, if
millionaire
you
is to go
receive
to
a new email
apex.com.
in Gmail
You buy
or a
20
new row being added
300K
in a table or
accounts.
Google Sheet,
You
that
then
could serve
request
as a
a
trigger, and
payout
then
for
the next step would be the action, right?
$100,000
So
from each account.
the action is the
Day
event that's
one.
automatically performed by
$1,000,000.
active pieces after the trigger has occurred. The action is what active pieces responds to a trigger event. For example, when a new Google Sheet record or row has been created, the trigger would be a new
Nasdaq's
task
gonna chop
will be
here.
added
Stopped
to
out.
another task management
Whatever.
app, for instance, like Trello or something, or sending an email through a Gmail. That can be an action. So that's
Why
kind of
does-
the
dude,
main
why does this always
flow as
happen to
far
me?
as the trigger and what
Just to
constitutes
come back down there and hit
an
my stop
action
again.
in a flow. When you first create a
Yeah, I
new flow,
literally
you can either
top-ticked
start
that
from
perfectly.
scratch
Or
or from a
beautiful.
template. So let's explore using template real quick. You can browse the different
Bro
templates
can't
that they
trade.
have.
You're
For
right.
instance, you can
I can't
filter
trade.
based on analysis,
Terrible trader
ChatGPT.
here, everybody.
So
Don't
you have
watch.
different types of
Tune
category.
away.
The more
Tune
checkboxes, the
away.
more specific your filter is going to be. So if, for instance, if you want a template that belongs to analysis and ChatGPT,
Well, good
you
thing we
can
got
have to
stopped out
toggle
where we
these
did.
two. Obviously, if you left out ChatGPT, it's going to have more of that specific ones.
How many accounts
So
blown
if you
today?
want a social media one specific to
only
marketing
35.
automation, you're going to have to
35
toggle
accounts
those
blown
ones
so far.
as well.
Not bad.
So
Normally
right
my
off the bat,
average
you're
is
going to be
100
able to
a day.
see
So this is a pretty good
the
day,
different
actually.
pieces that's associated
Pretty
with
good
that
day,
template.
actually,
So you
boys.
see the Google Sheets, a code loop, and you can use that template, and you can learn more about that, and you can see a little bit of explanation of what this
How much am I up
provides
today?
for
I
you.
don't make
It's
money
very
trading.
simple. So you
I
have
never-
the Google
I never
Sheet,
have,
kicks
never
off
will.
and triggers the whole flow. It goes through and go to OpenAI, makes a call here.
Got
and
a
then
big
it
buyer
does
at the
some other stuff as
508s.
well. So you can read more about it and use a template. So you can do that as well, or you can do a search. You can do a search based on, let's say, actually you can do a search on ChatGPT, and as you can see, all the different ones that has the option of having a ChatGPT as part of that.
I mean, I really don't
that
give a fuck.
template flow. You
If
can
people on the
explore
internet
as
don't think I
well
make
if you
money,
want
that's
a-
fine with
a
me.
specific
I
app
don't,
that
you
you're
know what I
using.
mean? Like,
For
whatever.
instance, like if I'm using
What am I gonna do?
MailChimp,
There's like,
for instance,
what could I possibly
let's
do to
search.
prove
I'm
that I
gonna
make
go
money?
find all
You
the
know, I don't know.
different templates that
Live,
includes
day
MailChimp.
trading live
These-
on
that's how
YouTube.
you
What could
use
I
a template.
possibly do?
The activities team's always adding
You know, the
new
same
templates,
person
so
that's
you're gonna
commenting
have to
about
just
me
watch
not
out
making money
for any
is
new
the same
templates that
person
gets
that
added,
believes
so
that
you're
ICT
just gonna
wrote
have
the
to
fucking
wait till
the algorithm that
more
moves the
templates get
market.
added.
You know what I
personally
mean?
don't
So
use
like,
templates.
you know, what
only
am I?
go
What
if
could I
wanna
possibly
explore
say?
and just
What could I
for
possibly
curiosity
do to make
what the
someone who
template is
believes
doing,
that
and if I wanna learn
ICT
about that
created the
template,
market
I
algorithm?
can just go
You know,
and
like
take a
what?
look at
There's
the
not
different
much I can
prompts that
do.
they're using.
Really, you know.
I can examine
I
the
can't
type
do
of
much.
code
You
that
know,
they're
I
using,
can't do much.
and just to kind of
Can't do
examine
much
the flow,
with,
so
you
just
know
kind
what I
of
mean?
learn
I
from
can't.
it.
Not
So
much
that's
I can do.
essentially that's how we use a
Like,
template.
what
And if
am I
I want
gonna do?
something quick and there's a predefined
What am I gonna do,
flow or
man?
steps.
There's not much
that's
I can really
already
do,
been
you know
pre-made.
what I mean?
Obviously, you probably want to tweak this and move or change things around. It's just there to expedite and get you close to where you want to be. Another way of creating your flow is obviously from scratch. So you can just create from scratch. As I've previously mentioned, you have a trigger to initiate and kick off this automation flow. You can select the trigger that's available. You can select from a predefined list. So if it's not listed, that means that application doesn't have a trigger for it yet. So you're kind of bound based on the list of options that you see for now. You can pick between all the different pieces, or just a core piece
I
where you
definitely
can
had a
see
few
schedule.
trades I got
And
stopped
there's
out
also
on,
some
but
events as well.
almost every
which
single
is
trade
pretty
that I
much
took
is
was
included
in the
all
green at
the
some
triggers.
point.
All right, so let's go ahead and take a
I
look
don't
at the
know.
different triggers that you can use. If you go
That's
and
trading,
click
man. I mean,
on
it's
the
just- it
select
is what
trigger,
it
you can
is.
either switch and change trigger.
Not really
So
much
this
else I can
includes
say about it.
everything, including the core.
Sometimes you win,
include
sometimes
the
you
different
lose.
application that you're using.
That's all it is.
also includes
It's like that. It's just every day like
the
that.
core
You know, like
pieces. You can also use the
you either
forms.
make money or
you
you
can
don't
use
make
the
money.
webhook.
It's just the same
You
shit
can
every
do
day.
a schedule based where everything runs based on whatever set of time that you want. So for every X minutes or every hour, every day,
That's all it is.
every week, or you can do it
You
in
know?
chronic expression. It's kind of cool as well. So if you just want to build your own, if it's a schedule that's not listed on this list, then you can go ahead and do a chronic expression. Let's say you have a weird schedule where you're only doing it on a specific day of the week,
All there is.
or you only want to do it from Monday to Friday, and you're
I
doing
mean,
the weekend, you can do a chronic expression.
you
So
would
there's a
think
lot of
that, like,
flexibility as
I
what
don't know,
type of expression you can
being the
define
number
a
one
certain
trader
time zone
at
if you
Tradeify,
want. So in terms of application,
you know,
you
you
can
would
use
think that
something
would
like
mean
RSS.
something.
So when
You would think
an
that,
RSS
you know,
feed
being
is updated,
in the
that's
top
what
20
you want to
at
trigger
Top
this
Step
workflow. That's fine as well.
would mean
So
something.
you're creating an article.
You know, you would think
that
that
RSS
getting a
feed as a basis,
$355,000
you want to
payout
create
would mean
a
something.
social media post for that
You would
blog. blog,
think, you know,
for instance, if that's your blog.
you would think that. You know, you would think being on top of the Funding Ticks leaderboard would mean something, but I don't know. It don't mean nothing. Honestly, it's all fugazi. You know, it's not even, nothing's real here. You know, I don't make no money. I'm clearly an idiot. I don't know what I'm doing here. Sometimes I make money, sometimes I don't, you know. There's 11 o'clock now. The market's gonna push up here now. See if we can go to the 550s. It's also funny how quickly, people forget. You know, people, like, we literally just had like a 60-point trade that I called out, but they forget about that real quickly. You know, everybody they're forgetting about the big trades for some reason. Yeah, the market makers are watching me. That's why I lost. Everybody knows that. Duh. I mean, if anything, I think we were just a little early on the long. If we would have waited till 11 o'clock, that's all it was. Honestly, think about it. So 10:50, 11 o'clock, that was when we basically just chopped around there. What do? We still went higher. So. I don't think we were wrong with our long idea. 5-minute chart broke out. You know? Patrick, you're the biggest and the largest inspiration in the day trading space. Oh man. I hope not. I hope I'm not the largest and the biggest inspiration. I hope not. I hope not. Well, like I said, after 11 o'clock, the market starting to push up here. Patrick, you are not making money for people who never made money, but you are making money for us people who got money out of the market. I don't know what the fuck that means, but I agree. I have no idea what you're talking about, but I agree with you. You know, like, I think you're right about it. You're right. You're right. I don't know what that means, but I do agree with you. Let's just look at my car. There it is. Y'all want to see the? I can show you the engine. I don't know if I can though, really. Nasdaq still push it up here. We got some big buyers flashing at this 30 level. Some sellers, some buyers flashing there at the 30s. Oh, fucking. If I put my stop at there, I'm gonna get stopped out. And then the market's gonna go up anyway, so fuck it. Story of my life. Banana, banana, FIFA banana. Everybody likes bananas for me and you. Bananas are good, we like to party. Drink banana for me and you. Optimus and Iron Beam, are they partners? Optimus Futures is an IB, so they're a introductory broker. So they go to the bigger firms like Iron Beam and other fucking clearing firms and bring them customers. Bro, I'd like to see you on Words with Riz. Fuck that. I ain't getting nowhere near that Pakistani fuck. I don't even know if he's from Pakistan, honestly. I think he is from Pakistan, somebody told me. Yeah, no, I'm gonna pass on that. I'm gonna pass. There's just something about Pakistani fucking YouTuber gurus that I can't get past it. I can't get past it. Yes, Iron Beam is a FCM. I just said it's a clearing firm. I mean, what are they gonna do? What are they gonna cancel me because I said I don't like some fucking Pakistani fuck? Come on, I mean, good thing I live in America. You know what I mean? I live in America. You think, what are they gonna do? What are they gonna do? Come arrest me? Come. Oh, hey, we heard you talking about Pakistan on YouTube. Yeah, well, go suck my big old red, white, and blue dick. All right? Exactly. Exactly. All right, let's get this fucking push, boys. Yeah, exactly. Fuck the UK. I'll go to UK and tell them, fuck the Pakistani fucking scammers. You know? Oh my God, Nasdaq. Why can't you ever just go? Yeah, fuck the Hogwarts. Fuck Hogwarts as well. Especially the Hufflepuffs. Them Hufflepuff bitches. The Hufflepuffers. Bunch of Hufflepuff fuckers. Alright, I'm moving this stop right there to the 25. I'm probably gonna get stopped out. Just to lock in 10 points. What a stupid fucking day here. I'm over it. I'm over this shit. Here comes the racist. That's not racist. Like I said, I don't care what anybody says, right? It don't matter what fucking, what color you are. At the end of the day, you know, you're gonna look at someone else no matter what color they are, and you're gonna be like, hey, that person looks a little different than me. You know, like it's just natural human fucking DNA. I don't even, it's in our blood. I don't know, man. There've been shit been going on since the dawn of time. You know? You can sit here all day long and cry about racism, or you can just say, fuck it. You know, hey, some fucking cracker on the internet, he fucking talks a bunch of shit about some colored people. All right, well, fuck him. You know, like, don't give him power. All the people sitting around talking about racism, like, all right, well, go fuck it. You don't like it, then just, like, who fucking cares? You know, like, who fucking cares? You know, I don't sit around crying about how I can't fucking jump. You know, I look at the NBA and be like, damn. You know, not a lot of white guys playing the NBA no more. But like, it don't upset me because I'm like, you know, I'm not very athletic. I'm white. I can't jump. I'm not good at it. You know? White people, we're good at golf and stupid fucking sports. Black people be good at fucking basketball and fucking football and all the other shit. You know, I'm not good at it. I'm just in it, you know? Are you kidding me right now? This fucking, I swear to God, this market right now. Why? It's such a joke, man. Like, why? It's probably gonna go. But at what expense, you know? At what expense? Bubba Wallace single-handedly making NASCAR unwatchable. Yeah, I don't know, man. I'm not gonna get all deep into the race talk right now. BLM tried to, I almost got, well, I didn't almost, but BLM tried to cancel me at one point. Literally Sean King, I swear to God, there's an email, fucking Sean, you don't know who Sean King is? Anybody know who Sean King is? This motherfucker. I swear to God, this guy's fucking white, by the way, he's not even fucking black. Look at, you tell me that guy's black? He ain't black, he white. This motherfucker white. Trying to come at me for fucking not posting a black square on Instagram. I swear to God. He's fucking white, bro. Either way, it's just like, what a joke. What a joke. He emailed, Sean King emailed a company that I worked with back at the time and told them that I was racist because I didn't post a black square on fucking Instagram to support the BLM movement. Fucking crazy, man. It's like this kind of shit. Like, this guy's, you know, out here getting donations, right? He's getting donations for his movement, and it's just like everyone's like, wait, what? You know? Like, huh? King asked for donations online so he could climb the 7 summits, but abandoned the effort only a few days after training. In 2010, he founded ahomeinhaiti.org. He used eBay and Twitter to raise $1.5 million to send tents to Haiti. Says that he was going to build an orphanage in Haiti. You know, it's like, y'all be like, you're trying to cancel me? You know, you're trying to cancel me? All right, Nasdaq right back down there to the 23,500. Who's tweeting? Who's tweeting? Who's tweeting? I should go to Haiti. Fuck going to Haiti. Are you crazy? I got about 1 million other places that I'd like to go to other than fucking Haiti. You know what I mean? Nothing against Haiti. I live in Florida, you know. We got enough people from Haiti driving Ubers. Almost trying to kill me. I'm driving home from the airport the other day, fucking this guy is driving us home, gets lost on 95, extra 15 minutes. extra 15-minute drive. Isaiah wants to move to Jupiter, Florida. Don't do it, bro. Yeah, look at that. Marcelo said that his neighbors are Haitian. They don't even want to go to Haiti. See? Look at that. See? Nothing. I mean, it's just facts. You know, like nothing. It's not like we're not hating. This is just, I mean, people don't want to go to Haiti. Go to little Haiti in Miami. There you go. Well, it looks like we're just going to be banging against that resistance there that we've had. Yesterday, resistance there at the 520 area. We had some resistance back there for Friday. Monday, had some resistance there. I think there's kind of like a big inverse head and shoulders here on the hourly chart. So, hating on Haiti. Yeah, cancel me for hating on Haiti. Hey, let's go to Haiti and offer people in Haiti a free trip to America, and then we'll see how many people want to live in Haiti still. You know what I mean? Let's do that. Let's try that one out. You know what I mean? Let's go to Haiti and be like, hello, sir. Would you like to move to America for free? Or would you like to stay in Haiti and see what they like, see what they choose? See what they choose. Patrick, you're welcome in the Dominican Republic. Woo! I don't know, I might get murdered in Dominican Republic. I've heard some sketchy stories. Probably from sketchy people, though. Right next to Haiti. What in the fuck, Nasdaq? What is happening right now? How? Why? Why? What is going on here? Ugh, man, this is crazy. What do you think the over-under is? What are the chances that I went to Haiti and I got robbed for my watch? What would you say? What would you say? What's the over-under? You should have bought a gold watch. Bro, I'm a ginger. Gold don't look good on gingers. Come to Syria. I thought about maybe going to Afghanistan, you know? I think I could really make some moves in Afghanistan. I could be a tribal leader. Patrick Whelan, tribal leader, live from Afghanistan. Go to Yemen and wear a fucking... Look at this shit. Are you kidding me right now, Nasdaq? Are you kidding me? What is happening? How is it just... Why? What? Like, how do you even trade this right now? What are you gonna even do? What in the fuck, man? It's such a joke. It's such a joke at this point. Hey Patrick, how much are you up on the day? I'm not up at all. I didn't make any money today. Don't watch me, because I don't make no money. All right, let's try a long right here, just for shits and giggles. Just gonna go long, just let it ride. Either make it or break it, baby. Make it or break it, don't follow me. This is just a full, just for fun. Just for fun, people, this is a fun trade. Don't do it. Fun trade. I just want to blow up my account or make some money here. I don't even care anymore. I'm at that point. Yeah, I'm self-destructive. I'm being self-destructive. Self-destruction. Being self-destruct. Put Victoria in a burqa. Burqa, burqa, burqa. Burqa, burqa. Burqa, burqa. Burqa, burqa. Somebody in the chat said go short. Hey George, I'm gonna pass on that. I'm gonna pass on that. Hey George, I'm gonna pass on that. Thank you though. I'm gonna pass. I'm gonna pass on that one, George. I'm gonna highly pass on that. Banana. ever just like put on a trade and then just fall asleep? I do that sometimes. You ever do that? Anybody else ever do that? You put on a trade and you just fall asleep. You just like, just fall asleep. 400 sellers at 48. Get out of here. 400? That's a lot. Banana. We got a pivot point up there at the 49s. We have not broken out of the opening range to the upside now. The ES is above the opening range. So that's why I'm thinking the Nasdaq maybe at some point will break the opening range to the fucking highs and then we can make some money. So that's what I'm looking at. Okay. Hey. Raphael in Australia. Top of the night to you. Good day, mate. Hey, G-Day, mate. Are you a sick cunt? Raphael, are you a sick cunt? Yeah, you are. You a mad cunt. That's just what the Australians say. You know, it's a cool thing to say when you're Australian. That's what all the cool Australian kids are saying, you know. Hello from Sinaloa. Fucking hey, what are you in the cartel, bro? We got the cartel watching. Better be careful. Oh, George, what happened? You told me to get short, George. George boy. Hey, Georgie boy, what happened? Georgie boy told me to get short there. Good thing I don't listen to fucking George. Fucking George. I don't even understand. Is there anybody who actually like watches the live stream and who like comments and thinks that I'm going to like listen to some random person named George in the chat and be like, you know what I mean? Like, do they think it's like I'm actually going to? Fuck. Oh God. Oh God. I ain't listening to you, George. No fucking way. All right, my stop's at break even. If I get stopped out here, I'm fucking done. I'm walking away. I'm over it. Fuck this market. And as soon as I leave, the market's gonna go to the fucking moon. Watch. Oh my God. Not another one. This is painful. What a painful fucking day, dude. Crazy. Are you kidding me right now? I don't even know, bro. I don't even know. I literally don't even know. You know. Bro. Oh my Lord. Oh, it's funny. Even my percentage of win rate today is 40% because all the fucking just bullshit. But this is the focus, right? Focus on this. What's my largest losing trade? $245. What's my largest winning trade? $1,400. That's per contract, by the way. So, whatever. Should have made a lot more money, that's for sure. Are you kidding? If this thing makes a new high right now, I fucking swear to God. I swear to God. I swear to God. Dude. We got non-farm payroll tomorrow morning, 8:30 a.m. Get fired up for that, boys. Hey. Let's go. Let's go, Billy boy. Are you kidding me? What a joke. So frustrating. So frustrating right now. All right, Nasdaq made a new high. Nasdaq made a new high. Yay, yay, yay. So stupid, honestly. Don't even make sense. It don't even make sense. All right, Nasdaq making new highs. Looks like the longs are getting paid. I mean, the moral of the story, I mean, literally the moral of the story here is just don't ever put a stop loss and you'll be fine. If I would have just stayed long and never put a stop loss and just said, fuck it, I'm looking for an opening range breakout, I would have got it. I could have gotten short with George, that's for sure. What happened to George? George! George, are you okay? George, let us know if you're okay. Type in the chat. George. What happened, George? Where'd you go? Where'd you go, George? Where'd you go, George? George. George. George, come back. Why do people that come into the chat and call out a trade and then they just like disappear after? It always happens. There's always that guy who's like, yeah, Patrick, it's a short, get ready for the shorts. And I'm like, okay. And then he's like, 5 minutes later, disappeared, gone. What happened? Where'd he go? But guess what? You know what's funny? If George was right, if he was right, guess where he would be right now? You know what he'd be doing right now? You know what George would be doing? He'd be sitting there in the chat saying, told you so. I told you so, Patrick. Patrick, I told you to get short. That he would be literally telling everybody in the chat, I told you so. I told you so. Patrick, I told you so. Yeah. Yeah. All right, guys, we got 400 subscribers on the new car YouTube channel. Help me out, hit the subscribe button. If you're still watching right now, it's free to subscribe. You'll be a part of the first 1,000 subscribers. Come on. Link in the chat. Come on, people, let's do it. Let's hit 1,000 subscribers live on YouTube right now. Come on. I haven't even subscribed to my own channel. Subscribe. I'm getting there. We're good. We gotta hit it. Let's do it. Come on. We gotta get more subscribers than Nutty Bar has. Goodbye. Look at the video. It's a funny video, guys. I show my cars. I'm like a comedian. You know, look at me driving a Ferrari. I drive a Ferrari. I drive a Ferrari. The downpipes, the bigger turbos. It should be about an 800 horsepower car when it's all. And it's funny because. All right, so we just got here to Excel Auto, and it's funny because there's a Liberty Rock Aventador here. These guys are making so much fucking money off of me. They got a new office now. What I want to know is why do you guys have another Liberty Walk here?
He varies like every shop I go to. Patrick's always there. He's always there getting like 2 or 3 cars built. I'm trying to find a shop that he's not at.
Look at my belly poking out. Oh my god, I gotta go on a diet.
Why would you pay $50,000 to put a window scoop on your car? And I said, because that was the only option.
Inside.
Crazy. I mean, dude, I haven't seen this car in so long, I feel like.
So all it does is cool the top of the intake.
Yeah.
It actually feed air.
Yeah.
Just cools the intake.
That's what's funny about it. We did stage 2 on this, right?
I paid $50,000 for that.
To put a window scoop on your.
For the window scoop. Literally, it was $50,000, no lie. Like, for a window scoop. But it's McLaren. It's MSO. It's real deal from McLaren. So,
That's right.
it looks sick as fuck. $50,000 window scoop, baby. That's how rich I am. People be worried about me fucking, you know, losing $1,000 live on YouTube, and I'd be like, bro, I just spent $50,000 on a window scoop. Okay, sit down, boy.
What do you guys quote?
Sit down, boy. Gamer's Paradise. Did you buy that with trading money? No, I bought it from your mom.
We were talking about on the way here.
Your mom, she's been sending me money every night.
I think it's just because this car is built to be.
You know, she been every night she sends me a couple $1 million.
Yeah.
This is my blown up. I have a blown up Aventador motor. If anyone wants to buy it, I'll sell it to you for a good deal. $30,000. You can buy my blown up Aventador motor. Okay.
I'll sell it to you.
Good deal. Good deal.
That's kind of loud. What'd you say? First time driving the McLaren in a while.
Oh, it's the most fun car you can drive. It's insane. Like this whole time, right here, I'm flooring it, and it is literally just, it's spinning. It's all-wheel drive, by the way. All 4 tires are spinning. I was going 50 miles an hour, by the way. I would never go over the speed limit. Look at that thing. Oh my God. If your doors don't go up, are you even rich? You know, that's what I always had to ask people. You know, I always have to ask people that. I'm like, hey, all right, if do your doors go up?
Buying cars, moving cars, selling cars.
Do your doors go up? Do your doors go up? The new Corvette is still gonna beat it. Hey, Christian, you know what? You know what's funny, Christian? Ain't nobody give a fuck about a Corvette, bro. Ain't, you know what I mean? Ain't nobody give a fuck about your stupid Corvette.
Videos and cars.
Yeah, my Corvette's gonna beat your McLaren. Yeah, well, you know what? Ain't nobody give a fuck about no Corvette. Nobody. Corvette's a poor person car. That's what ICT trades. ICT trades in his Corvette, okay? Exactly. ICT is trading in the Corvette. Got the Corvette. So yes, come on, let's hit it. Did we get it yet? 1,000 subscribers? Come on. Come on, chat. We're so close. We got 3,000 people watching right now. How have we not gone up quicker? We got 589. We went up 100 so far. Hey, there's nothing wrong with the Corvette, you know, but let's not compare Corvettes and McLaren 765s. You know what I mean? Let's not compare the two, because they're not even close to the same fucking animal. Not even, you know, like it ain't even close. All right, what we at now? We're at 600. We're going up slowly but surely. There's 3,000 people watching right now. The fuck y'all doing? The fuck are you all doing? The fuck are you all doing? All right, Nasdaq pulling back here. We pushed up there to the pivot points, pulling back now. Pivot point to pivot point today. At the open, we pushed up to the pivot point. We pulled back to the pivot point. We pushed back to the pivot point. We're above the VWAP. Things are happening, but damn, we ain't going nowhere. Tomorrow's NFP, non-farm payroll tomorrow, boys. Might be a good time to YOLO some Apex evals. You know what I mean? Maybe I'll come YOLO some should I come YOLO some Apex evals tomorrow? I might. Say, if you tell me not to and I won't. Tell me not to and I will. Give out a free eval account. Fuck you, dude. Ain't nothing free in life. You gotta pay for it. Use that code PW. Imagine being like a first-time viewer of this channel. People are probably so confused. They're like, what is going on here? This guy is so rude to his... I saw some guy on Twitter, he posted talking about how Patrick Whelan is so rude to his followers. They're like, all he does is just sit on YouTube yelling about dicks and balls and just, he's always pissed off and mad at his YouTube followers. It's hilarious. I think it's funny, to be honest. And I think most of my followers also think it's funny. Like, I don't know. I think you guys, you get the humor, right? Like, I'm not serious, you know? When I'm talking about my dick being 20 inches, obviously it's not 20 inches, okay? It's like, that's not realistic, you know? Let's be honest, you know? I think, you know, there's a little bit of, you know, sarcasm here, people, you know? A little bit of sarcasm. And we know when I say, hey, George, you know, what the fuck, George? You know, I'm not actually mad at George, you know? I'm just, like, kind of playing around, you know? I think people don't get the joke, you know? You know, yeah, well, obviously my dick's 21 inches. You know, I don't want to say it. I don't want to tell everybody. I don't want people feeling inferior, but it is the truth. Announce that you won't show your trades unless you get 1,000 subs on the new channel. Okay, deal. I won't show my trades unless we get 1,000 subs. Oh, I got to get more subscribers than Nutty Bar. How many subscribers does Nutty Bar have right now? Nutty Bar Trading has 17,000. Damn. How did he get so many? I gotta get 17,000 on the car channel now. That's gonna be tough. I could do it though. I could do it. Who knows? Maybe in a year from now I'll be bigger in the car world than I am in the trading world. You know, that's kind of like, I'm thinking I'm gonna start my own race team. You know what I think I might do though, honestly, what would be sick, I'm actually looking for right now, I want to buy a big piece of property. I want to buy like 100 acres. Like 100 acres of land, put a house on it, and then build like just an insane fucking fun factory of fuckery, you know? Not with that slow thing. Christian, will you shut the fuck up? You brokey? Nobody gives a fuck about how fast my car is, dumbass. God. Perfect way to go broke. What do you mean? Buying a fucking piece of property? Why would I go broke buying a piece of property? Are you retarded? People are retarded. Patrick, you're gonna go broke buying 100 acres. What are you talking about? Taxes? What do you mean taxes? I'm gonna put cows on it, bro. It's an agriculture farm that I drive my trophy truck on, okay? Relax. Yeah, I'm gonna put fucking, I'm gonna get some, you know, well, I'm gonna get some Wagyu beef. I'm gonna get me some Wagyu beef. And I'm gonna put them on the property. I'm gonna get a couple goats, you know, get a couple goats would be cool. Maybe like, definitely not a horse. Don't get a fucking, horses are just way too much work. But get a couple, maybe get a mule. Maybe some donkeys. You're gonna report me for having a farm? Why? People are retarded in the chat. Hey, I paid $1.6 million in taxes, okay? I've done my part. I've done my fucking part, okay? Let me live my life now, okay, you brokies? Report me to the IRS. Tell them. Be like, hey, I want to report Patrick Whelan because he paid 1.6 million. That's not fair. He should pay more. He should pay more in taxes. It's not fair. Have you owned or built an R35? No. I got a R34, R33. Are you mad that ICT is coming? Where's he coming at? I don't want to see that, you freak. Keep your little sexual, keep your sexual, fantasies about ICT to yourself because I don't want to hear about them. I'm not, why would I be mad that ICT is coming? Whatever you're into, bro. I'm not into that shit. Okay? I ain't into it. So don't even try. Don't try to convince me that I want to see ICT coming. Just because you're gay and you like to see weird shit, it's not what I'm into. Okay? You just stick to you just be gay for ICT over there. We got no time for that. Ain't nobody in the chat want to do no gay shit with ICT. Ain't nobody in the chat trying to do nothing with that, okay? All right, well, the Nasdaq's going absolutely nowhere right now, my friends. Absolutely nowhere. So, yeah. About that. What to do? Adam said he got scammed by funding ticks. How did you get scammed? Let me guess. You woke up one morning and your cat walked across your keyboard and it went long and you don't know what happened and you're very upset and it's just, what do you tell me your story. Let me hear it. Let me hear your story. Patrick, I got scammed by funding ticks. I woke up and somebody traded my account while I was sleeping. Somebody broke into my house while I was sleeping, and they said, and they traded my account and blew up all my accounts. They send you an email that my IP crossed multiple regions. Well, I mean, does it? Does your IP? Did your IP cross multiple regions? Hey, I don't know, man. I don't know. I don't think they're scamming you. Are you using a VPN? What are you doing? Like, what's weird about your IP address? I don't know anything about VPNs. Damn Fawad, send an email to info@onlyprofirms.com and I'll look into it, all right? No promises, but like I said, if you are not lying, then I'll look into it. But if you're lying, then, well, not much I can do. Not showing my trades until I get 1,000 subscribers on my car channel, okay? We got 643. There are literally 3,000 people watching right now. There are 3,000 people watching. 3,000. Link in the the chat. Do you guys not see the link in the chat? Come on. More people watching. How much do you earn from YouTube? Yeah, I use so much money. I make so much money from YouTube. Frozen North Trader also got scammed by funding ticks. Says that he got paid $4,000, 3 hours to process. Bro, we need to look into that. We got to look into that. We definitely, hey, send me an email with the proof so that way we can investigate what's going on. You know, I can't believe you got paid $4,000 in 3 hours. Okay. Oh, I'm not gonna let this happen. I will not stand by and let you get scammed anymore, okay? I am not gonna let this happen, people. Y'all are, I am here for you. I will not let my subscribers get scammed. Prop firm for keeps got paid $4,100. Well, you definitely got scammed. You definitely got scammed. JC said it. I swear, everyone, I get funded. The next 3 days are always choppy. Bro, trust me, that ain't just you. The market knows. I swear to God, the market be like, okay, JC, he got funded. Now it's time to fuck him up. It's a true story. I swear to God. It really is a true story. Every time you get funded, every time it happens like that. Well, because you know what it is? Well, you probably got funded like on a good trending day, right? The market, you made money on a good day. And then what happens? Majority of the time, the market sucks. Majority of the time, the market's chopping. You know, that's majority of the time. So, that's what they do. How do you talk for 3 hours straight? Bro, when you're making millions of dollars, you'll do a lot of things, you know? People be like, Patrick, what would you do for $1 million? I'd be like, I do a lot of things for $1 million. Sitting on YouTube talking for 3 hours, I do that. You know, it ain't easy, but I'll do it. For $1 million, I'll do it. All right, for $1 million a day, for $1 million a month, I'm gonna do that. You can see how much money I've made on YouTube since I started my YouTube channel back in 2017. Look at that. I haven't even made $500,000. No! I don't even monetize my live streams, by the way. I don't even monetize them. How much you make in August? I think August was pretty good because my birthday. Yeah, like this is literally how much money I make per month from YouTube. It's shit. It's dog shit. It always kind of like peaks into like February, March. Yeah, so August I made $6,900. Rich. That ain't shit. I know, bro. I know. I know it ain't shit. Trust me. I know. I ain't, you know, hey, I know. But I also don't have any I don't have any ads on the live streams. I don't monetize the live streams. You're a scammer. See, like, why am I a scammer? What, you know what I mean? Like, why am I a scammer? You know what I mean? Like, why am I a scammer? Because I tell everybody that I make $1 million a month as an affiliate? Because I do a job? You know what I mean? Like, I offer a free live stream and people use my code to buy an eval? I mean, who am I scamming? You're making your subscribers pay for a Discord. I don't have a Discord. I literally don't have a Discord. So how am I scamming anybody? Like, what? I mean, I'm not even a hustler. I literally just day trade live on YouTube and people choose to watch. I do not have a Discord. I do not sell Telegram alerts. I have nothing. I'm just trying to figure out who am I scamming? Who's getting scammed here? You know, that's what I'm trying to figure out. And guys, I have no Discord. Do not pay for a Discord. How did you support yourself when you started YouTubing? I was a professional filmer and editor. TPT has a $130 activation fee. No, they don't. Again, people are retarded and they don't know how shit works. I don't know, man. People be like, you a scam? I'm like, okay. What's the scam? I don't sell a Discord. I have a $199 course that is literally like, I don't even promote it. By the way, like, I mean, when's the last time I promoted my course? When I sold it for 88% off for 20 bucks? I mean, it's a video library. And the funny part, like I've said a million times, I've never denied that I make $1 million a month as an affiliate. That's the best part. Like, I've never denied that. You know what? I've literally never denied that. So that's why it's like funny, because I've never denied that. So, you know, I never denied it. I don't know what to tell you. I don't deny it. I mean, you can literally see here, this is how much money I make from Apex every month. Go ahead and screenshot that, put that on Twitter for everybody out there. That's last month I made $313,000 as an Apex affiliate. So, I don't know. So, yeah. I mean, it's just the truth. I've never denied that I make money. I'm the biggest Apex affiliate. What can I say? What's the figure in the middle? That would be the amount of accounts sold per day. So on my birthday, we sold 7,600 accounts. What a time to be alive. But again, like, it wasn't always like that. You know what I mean? It wasn't. At one point, I wasn't making any money. LA Confidential said, you're clearly talented, but if you're really as wealthy as you say, wouldn't it speak louder to carry yourself with quiet class instead of constantly proving it? I mean, it's YouTube, bro. You know, like, it's YouTube. You know what I mean? Like, it's YouTube. You know, like, it's called YouTube. Like, what else am I gonna do? I'll be quiet on YouTube, you know? Hey everybody, my name's Patrick. I'm not a millionaire, I'm quiet. I don't want anybody to know about my wealth. I don't want anyone to know about me. I don't want anyone to talk about me. I'm just gonna be humble and quiet. Hello everybody. Today, welcome to the BDH. The BDH is not actually the Big Dick House, because my dick isn't really that big. But I just want to be humble and I want to be honest. So yes, hello, welcome. Today, we're gonna talk about imbalances. Look at the imbalance. The imbalance. I wonder what your kids are gonna say when they see your channel. I mean, Landon's 13. He sees my channel. He comes to the BDH. You know what he sees? He sees me winning. And he wonders. You know what he wonders? He goes, Dad, why, Daddy, why do you get to travel the world and get to do whatever the fuck you want every day? And I say, well, Landon, the reason that I get to do that is because I've worked really hard and I built a business that allows me to do that. and I don't have to answer to anybody, and I can do whatever the fuck I want every day. That's the truth, you know. His mom and her boyfriend or whatever, they go to work. They work normal jobs, which is great. Nothing wrong with that. But he sees me and he's like, wow, my dad has a fucking McLaren. He's got a Lambo. He's got a Ferrari. He's got 2 boats. He gets to do whatever he wants every single day. Like, is that not motivation for my son? He doesn't have to be a YouTuber. He can start a business, do whatever he wants, work hard, make money. Welcome to the real world. So, can you tell us how much you're making trading per month, if you don't mind? I don't know. Not that much. 6 figures I get, not monthly, but I made $170,000 at the beginning of this year with Tradeify. I got a $355,000 payout. That's an actual payout. That is not affiliate commissions, as you can see. This is, if you think about it, like for people that are wondering if my payouts are affiliate commission, think about it like this. If you just saw that I made $300,000 in August and I requested a $355,000 payout from Apex, what would that, like what would that mean? It wouldn't really make sense, would it? So yeah, no, it don't work like that. So just putting that out, putting that out there. Just putting that out there, It don't really work like that. It don't really, it don't work like that. It's kind of, it don't really work like that. When you think about it, like it don't really work like that. All right, well, Nasdaq is going absolutely nowhere right now, so I guess that means I don't know what that means, to be honest. Just for everybody out there that's wondering, like, do I ever make any money? These are my payouts with Apex. So in 2025, we got a $350,000 payout there. You can see the amount requested. I've had 129 total payouts with Apex. So no Fugazi, no Fugazi. You can see 349,000 right there paid out. 48 trading days. Ding, 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 ding. Ding, 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 ding. These are all payouts. These are my big payouts when I got 54,000 times 11. Paid. So, yeah. Do you have an LLC S Corp? I have an S Corp, yes. Adam, I sent you the mails. I hear you. What do you want me to do about it right now? I'll look at it later. Shadow Life, first time here. Do you show active trades? No. I'm just here to show my payouts. If you're just now tuning in, it is 12 o'clock in the afternoon and the market's going absolutely nowhere. So, Apex doesn't pay out like that for non-influencers. Okay. Anybody in the chat ever got paid out from Apex? Anybody ever got paid out by Apex? Is it all, it's a scam, right? Apex is a scam, they never paid nobody, I get it. True, only influencers. Man, Apex only pays influencers. That's so crazy. Isn't it crazy to think about? Like, it's just crazy when you think about it. Like, Apex paid out $50 million in the last 90 days. Yeah, they must really be scamming everybody. Only the affiliates get paid out. Only the affiliates get paid. Only Apex affiliates get paid. So do you make as much trading as you do being an affiliate? No. I just showed over $1 million in payouts. I make $1 million a month. So I would say my trading profit for 2025, $1 million. My affiliate profit for 2025, 20 million. So Patrick, what's the difference between an LLC and an S corp? An LLC has nothing to do with the S corp. It's just kind of not how it goes. I'm not a tax financial person, by the way. So please don't. I have no idea what I'm talking about. It's like Jordan getting paid more by Nike than he ever did in the NBA. I mean, it's true. Is Michael Jordan a scam? Is Michael Jordan a scam because he gets paid billions of dollars by Nike? He made way more money selling shoes than he ever did fucking playing basketball. That's for sure. Yes, an S corp is a sole proprietor corporation. Then you have a C corp, which is a corporation, so you file differently. An LLC is a limited liability company. Just like different classifications. Am I Jewish? No. My last name's Wieland. AK said, I have to tell you, your honesty is very appreciative. It is true you are a bit crazy and unusual, but they're very honest, and that keeps me coming back. I mean, would people watch me live on YouTube if I wasn't, you know, fun? If I was boring and lame and not fun to watch, would anybody watch me? Probably not. So, gotta give the people what they want. Gotta give them something to talk about, you know? Gotta give people something to talk about every month. If they ain't talking about you, then you're dying. Look at Trades by Matt. Nothing personal, but look what, nobody talks about Trades by Matt anymore. What happened? What happened to Trades by Matt? Think about it. Like, literally, what happened to him? Just nobody talks about him. He literally gets like 500 viewers on his live streams. So. I still got 2,700 people watching right now, and I'm not even trading. That's the best part. I'm just sitting here looking at the charts, and I still got more viewers than most live streamers will have all day long. Like, my low numbers are still higher than most YouTubers. Think about that. And it's not because I'm the best trader on YouTube. It's not because I'm the best, you know, like, it's not because I'm the best trader. Trades by Matt live streamed earlier for an hour and a half. He got 2,000 views. You know? Poor guy got 2,000 views. I literally have 2,000 people watching me live right now. His total views for the day, 2,000. That ain't good, chat. That ain't good. We got a new office. Let's check it out.
What's up, everybody? I want to officially welcome you to the new
Well, I mean, cool. I mean, you know what he ain't got? You know what he ain't got? He ain't got no cars. He ain't got no cars. Banana, banana, FIFA, banana, la 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 la. PW, would you get TBM to go to the BDH? Yeah, we actually talked about it. He just had some babies, or his wife had a baby, or somebody had a baby. I don't know how it works, but he had a baby, so he's just been dealing with that, I guess. Brain fart said he got long at 550. No, you did not. You're just trolling me now. You did not get long at 550. Never gonna give you up. I need that song. Never gonna take you down. We're gonna hold a pound and desert you. This is my song for all the chat out there. This is my promise to you, chat. I'm never gonna give you up. Never gonna let you down. Dude, this guy. Kind of looks like me, actually. If I wasn't going bald, maybe I could have my hair like that. Dude, that guy's got a fucking head of hair. Holy shit. How do you make your hair look like that? Desert you. Hurt you. Will I do a hair transplant? Nah, I would go bald before I got a hair transplant. Goodbye. Hurt you. What shoes do I got? These are, what are they? On Cloud, the Federals, I think. They're really comfortable. Did I get 1,000 subscribers? I don't think so. I don't think so. We didn't get there, man. We got close, but not there. Did not get there. Oh, 732. Fuck, man. Literally 732. What the fuck? We're so close. So close. So close, man. La 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 la. I think I'm gonna walk away now. It's 12 o'clock. Market is, I mean, it's just kind of grinding higher, getting tighter and tighter. I would expect, I mean, I don't know. I mean, unless we just get stuck right here and we roll off, but there could be a nice little move up to the 600s coming up. So. Your setup is different from the setup on your birthday. Yeah, so I have different desk. This is like my main trading desk over here. But this is all gonna change this weekend, actually. I'm getting a car lift put in here, so I'm gonna be able to put two cars, because I need more car space. I got 15 cars right now. It's like fucking a full-time job trying to figure out where to park all these cars. I got too many fucking cars, man. Way too many cars. I think the, you know, moral of the story here, just to like recap kind of like what we were thinking this morning, right? We talked about this idea of kind of swiping these lows this morning, which we ended up all, you know, down there. We swiped basically all that overnight lows down there to the 400s and then came right back up, kind of following that overall like kind of trend there. So good little lesson of the day. It just takes patience sometimes. There was a lot of chop, but where'd the market go, right? The market went to pretty much where we thought it would go to kind of push up there to that 550 area, kind of swipe down there those lows. We held the 400s, ding, ding, ding. We got back above the VWAP there. That was my first kind of long entry back above the VWAP there. If you've been watching, we got long there earlier, and look at that little push. It kind of up there. So it just sucks because it's obviously like, you know, you get this, you get this, you get this, you get this, and then it's like back down, and then you get that push back up. So it's hard. It's hard to hold, you know, through a 40-point pullback. It just don't. It ain't clean, you know. The moral of the story is we got to where we thought we would go. It just was, the road was real bumpy on the way there. You know, I mean, that was kind of the issue. So Dan Marino, still here, bro. I never left. I think we had the right idea, just needed to fucking. I mean, I don't know. Market is just doing what it's gonna do, I guess. It's hard. It's hard to trade when the market's just not really fucking going anywhere. You get like a pop, the pullback, the pop, the pullback, the pop, the pullback. It's just like, you know, you end up getting stopped out, break even. You end up getting stopped out, trailing. You end up just getting stopped out for no fucking stupid, you know, no stupid reason. And I don't really like. I don't really have like a. I don't know what can you do. You know, like how do you go long? If you go long here, right? Let's say you're long there, 514s. It pushes there to the 540s, but you're targeting. Let's say you're targeting the opening range breakout. It's just like, how are you gonna survive this? You know, if you're long for the 514s, are you really gonna hold like there? You know, like I don't know, maybe, but I wouldn't. It's just hard to go from, you know, 513 being up 30 points. You're up 30 right here. And then you're like, okay, I'm gonna put my stop right there just in case, you know, like just in case. And then like, what are you gonna do? So, do I love the Miami Dolphins? I don't know about loving the Miami Dolphins. What is my rule for setting break even? I mean, normally if I'm up 20 points, I try to go break even, to be honest. Just that way, at least I'm not like gonna let a green trade turn red on me, which sometimes it plays against me because I get stopped out and then the market pushes anyway. I mean, on a day like today, yeah, you got to have a bigger stop. The trend was still your friend. It's just like these little fucking stupid drops, you know, like what are you going to do? Like, I just don't know what you're going to do there. Same thing like even here, you know, like let's say you got long for this breakout here, 530s. It pushes up 543 and it's like, okay, at this point you're like, fuck, am I going to like, I guess if your stop's down here, just hard. Just hard. But that's trading. A lot of days the market's gonna be like this. There's a lot of days where the market's not gonna be trending. It's not gonna be breaking out and just really beautiful. So I think tomorrow we should maybe get some better action. It's Friday, it's NFP. Got the non-farm payroll, so should be a little bit more eventful, hopefully. Pretty much the only thing I got. That's all I got to say. I wish I had more answers, but I don't. I mean, that's the truth. Too many traders will sit here and they'll try to fucking, you know, tell you, oh, I knew exactly why this would happen. They don't know shit. You know what I mean? Like, they don't. Like, anyone who tells you they knew exactly, oh, I knew this was gonna happen, you know, I knew it. Like, they don't know shit. Like, I think about it, like, they don't. You know, like, they don't know. They really don't, so. market's gonna do what the market's gonna do, if you know what I mean. Ooh. Looking at some property. I'm gonna try to buy some property. I wanna buy like, how much is this? 46 acres. Oh, why is it so far away? Look at this. This 46 acres right here. It's right along like a main drainage canal, which is nice. 490,000. Maybe I offer them 400,000 cash, ready to go. It's the middle of nowhere, that's for sure. But that's what I need. I need a spot in the middle of nowhere because you can't have race cars in a fucking neighborhood. You got a condo in Hallandale? Oh really? No, I'm good, bro. I'm good. Midland, Texas. That's kind of far, to be honest. I want something that I can drive here in Florida from my house to the property. I'm trying to figure out, like, is 50 acres, like, is that enough? You know, like, is that enough for me to, like, race around and stuff? No. How many acres do you think I need? I mean, it's gonna be like a dirt track. It'll be like rally car racing style, so it doesn't need to be massive. You think 100 acres at least? Fuck. Yeah, it's not gonna be paved car. It'll be like trophy trucks. I'm gonna buy like a little trophy truck and build like jumps and stuff. Wouldn't that be sick? That's what I think I'm gonna do. Looks like farmland. It is farmland, but I mean, I'm gonna keep it farmland, but is there a rule that you're not allowed to, uh-oh, I've been looking up J Dunn trades. Awesome. The TT, no! What's the little mini trucks? They're not trophy trucks, but you can't build on farmland? I'm not gonna build. Oh, this is what I want. I want these little things. These things are sick. Dude, that looks so fun.
See if there'll be any type of penalty there. I mean, that was kind of, you know, a give and take right there. They were helping each other cheat the system. So we'll see what happens. But like I was mentioning, Gordon very fast in qualifying. He might have what it takes to get up and run.
Oh! I'm gonna build a jump like that. We'll build a jump. I mean, I understand. Yeah, I'm obviously going to, you know, do all the legal stuff, but I don't see why you can't drive a fucking trophy truck around on your agriculture property. Is like what, you know what I mean? Like, you know, like if I'm driving my trophy truck around my acreage, like what are they gonna, you know what I mean? Like, oh my God, dude. These things look so fucking sick.
He will not lift off that jump. Oh, Gordon goes to the inside and Toby Price not making it happen. Gordon almost spins out. Is the dude able to capitalize as he is?
I mean, it's agriculture. agriculture land. It's zoned for agriculture, but I'm gonna have I'm gonna fucking, you know, like, I'm gonna there's gonna be cows and stuff. I don't understand why it would be illegal to like have cows and then drive a truck around. I mean, I'll obviously gonna do it all, but like, I'm gonna give you some cows. Look at that thing. Dude, these things look so sick. Hey, I'm telling you right now, what's today? Today is September 2025. In the next like 5 or 6 years, I'm gonna do this. Like literally, Patrick Whelan's. People are like, how the fuck did Patrick Whelan get into this? Wow. Yeah, I mean, I'm done trading for the day. Oh my, look at that thing.
Matty Brabs right there. That's a poster.
Dude.
I'm sending that home to the family. Welcome to the Gold Coast.
Oh, and see the chassis at the front as well.
Oh, and sparks are flying.
Well, the good thing is that property, there's no, I don't think there's a lot of cows. I think it's like all orange groves. I think it's all zoned for orange groves. So I don't think there's any cows. I don't see why I couldn't. I mean, I'm gonna obviously like hire somebody to like professionally, you know, guarantee that I'm allowed to drive a truck on my property, but like, I don't see why I wouldn't be able to, right? I mean, I'll talk to the EPA. I'll talk to the EPA. Raymond Estrada, I do this for a living. Hit me up. Hey, what do you do for a living? What? You do trophy trucks for a living? What do you do for a living? What do you do for a living? Patrick, I do this for a living. Hit me up. Patrick, oh, you sell land? Well, you hit me up. Send me an email, patrick@marketflowtrader.com. Brain fart, you're still long? Oh, man. I don't know, bro. Get with Cletus. Cletus is in Florida, right? It's just hard because you got to find the right property.
Hey guys, if you haven't heard, our company Kinetic has a new can on the market, and it's got. Oh man, I want that. Why do you? I mean, a little bit.
I don't want to have a property in Texas because like Texas just ain't what I need. It's too far. Like I don't have to like fly somewhere. The HRE, you're ready to start your cannabis business? I mean, I'm thinking once my idea, I don't know, y'all can like tell me if you think it, you know, like, you know, my idea is to turn the BDH, the office that I have now, turn that into a dispensary. Once marijuana is legal in Florida, I open up the BDH dispensary. You know, and it's not really like, I'm not trying to make $1 billion, but you know. I think it'd be a good idea. And that way, because I need a bigger warehouse. I really do. I need a bigger warehouse for all my toys. Big Delta house. Have it grow too. I've heard it's just really hard to grow. I've never grown marijuana, but I heard it ain't easy. Florida's really shitty for growing too. PW, have you ever thought about taking on private investors? I've had offers. I've had people that wanted to invest in my YouTube channel and all that, but I have so much money. I've got $1 million cash in the bank, so it's just like, I don't need capital. To be honest, Florida land is all swamp. I mean, swamp's fine. I can rally race in a swamp, bro. Rally racing in the swamp, no problem. Maybe at some point, I do think, you know, if I want to open more businesses, I got to figure out what the next business is, really. There was some big news today. I can't talk about it yet, but I saw some big news. Trying to get money from me. Girl, you have an LLC set up? Yes, I have an LLC, multiple LLCs. My new car business is a corporation. I have my personal S Corp, and then I have the BD Haas, which is a corporation. I just want to tell you that I love you. All right, Nasdaq just pulling back here. It's going nowhere. Probably just kind of drift.